that it's a messed up kid. Oh. Yo, guys, this is a live broadcast, by the way. So if you guys are watching, make sure you guys skip forward into the show. Beat that. Yeah, there we go. Did it. Think. Shank, I did it. Yo, what up, James? What's up, Shakur? What up, brothers? What's up, Zero? Hope you're doing good today. Hope you guys are doing swell. Yo, what's up, JB? What up, brother? Hope you're doing good, man. I had business stuff to do this morning, so took quite a while. Look, very excited here, ready to buy the dips, boys. Yeah, I'm wondering what they're gonna say, man. I don't know. I'm hoping they say good stuff. I hope they say good stuff, because if not, we're gonna see some pain, guys. So just be ready. Hopefully not. Hopefully they say good things and then everything goes really green. Still scared about it though. It's the reason why you see the market so icky yesterday and then today. His shirt is green. Yeah, dude. Fucking Cheech and Chong, brother. Cheech and Chong, man. Up in smoke, baby. Yeah, if the feds come out and don't say what the market wants them to say, yeah, definitely don't buy until the crash afterwards. That's the reason why I haven't been buying really the last couple of days. Just waiting for to see what the feds say first. I don't want to buy and then it's going to dip really big. If it dips, man, it can dip big if they don't say the right things anyway. And especially if these charts, like they have a chart. When the dot chart comes out, and it shows like estimates of when they think they should raise interest rates. If it says anything before 2024, market's going to go to the pooper, dude. Straight to the pooper. It's going to be, I'm talking about, it's going to be really red. Really, really red. If the GDPs are wrong, market's going to be really, really red. So, there's multiple things there, man, that can make the market go red. And I mean by red, I mean like super red. So hopefully, now they come out and say, hey, everything's going to be great. Paint a perfect picture. You know, they come out with a little brush. They brush the paint, man, and it's nice and good, dude. If not, yeah, I mean, pretty much, Mike, pretty much. Kind of want to buy Neo later. Yeah, Neo was a great buy earlier at 41 bucks, but again, you don't know if Neo's gonna dip again later. So I'm gonna play it cautious and just wait and see what the Fed says before I buy anything. I was very hesitant to buy Neo earlier, man. Like I was doing some business meetings soon. I'm over here like looking at my stuff, dude, trying to like oh, should I buy? I'm like, I probably shouldn't buy, man. But I wanted to buy. Wanted to buy. But also don't want to buy yet because I want to see what the Feds say. Because that could crash the whole market. Crash the whole market. I talked about it yesterday in my video. I don't know if you guys watched it, but that'll crash. That could crash everything. AMC, GME. It could hurt a lot of things. Affect lots of stuff. Eating on his channel, driving me nuts. Yeah, I don't eat on my channel. I ate yesterday, but I didn't eat on the channel. I ate out in the living room real quick. I can't stand it either, man. So don't worry. Unless it's like something like simple, you know what I mean, like a peppermint or something. Then I don't really care about that. But like food, like eating food, like crazy, no. Good. I'm good, man. I'm good. I had to watch Trey's trades, man. You got me amped up, and I YOLO'd AMC almost. Hey, dude. Hey, some people, man, will get you to YOLO everything, bro. And then you end up with nothing. Fed talks at 2:30 p.m. 2:30 p.m. Eastern Standard Time. So like, what is it? 11:30, 12:30. Yeah, like 3 hours from now. 3 hours from now. I wouldn't YOLO nothing, honestly, until the Feds talk. That's just me, though. Not saying there's not good buys right now in the market, because the market's already pulling back, waiting for the Feds. The reason why you're seeing all this red across the board, you know, right over here, it's just, this is all Feds right here. Since yesterday, when we had that pullback, that's pretty much all Fed. This is everybody waiting on the Feds to talk. Just already pulling some of their money out. Already pulling money out. So I wouldn't, unless you're buying like unless you're scalping maybe stocks right now. You could have done that earlier as well, right? You could have died the dip, and then you're going to see it up, and then, you know, you're going to see some uncertainty right now. So you're going to see some dips and some buys, right? Just make sure. Just make sure you're ready. Hopefully, if they say good things, man, everything's going to rip. If they say really good stuff, then every stock's going to rip. That'd be the best case scenario, is every stock rips when they say really nice stuff. That's what I'm hoping for. But I'm also, you know, optimistically waiting for some not so good news, and then the whole market just dumps. To, you know, probably, I mean, honestly, if they come out and if the GDP is not right, or if the plot line is not right, we might see the market flush to last week's lows. Honestly, we could see the market reflush back out and touch those lows again from last week. It's definitely possible for it to happen. Definitely possible, man, to touch lows last week. We'll see what happens, though. Like I said, it all depends on what the Feds say. All depends on what Feds say. AMC options at 40 and now 55K. People are crazy, dude. Hey, man. Some people, man, people nuts. Oh yeah, I seen pavement earlier. I seen it pulling back up. I don't think you can keep pavement down forever. It'll come back up eventually, right? They just got too much stuff going on as a company. But again, though, I don't know if I'd buy any right now. I think I would wait until after the Feds talk. That's just me, though. I mean, I'm very tempted to buy Neo, right? Like, I wanted to buy Neo earlier when it dropped to like 41 bucks, but I didn't buy it because I'm also knowing that if the Feds come out and say something right, we could see every stock. We can see Neo flush back down to 30, 35. You know, you could see, you know, Tesla touch back down to the 550, 600 area again. You can pretty much see every stock flush, just like last week. I'm optimistically waiting first. Or buying anything right now. Yeah, I would at that price, but I think you should be fine, Caleb, honestly. And if it does fall, you could always, you know, average back in lower a little bit. Yo, what's up, Richard? How you doing this morning, man? I mean, it's definitely could be good to buy more for sure, good old boys. Like again, you could take the risk buying now and then you know, shooting up later. I'm already heavily like, you know, I already got a lot of stocks. So for me, I don't want to buy right in this second. I'm just gonna wait. I'm gonna wait till after Feds talk and then see what they say. And if they say good things, then I'll buy, right? Because then the market's gonna you know, open up like a crazy, man. If good things are said. If it comes down, it's just like kind of flat. I would be okay with a flat, right? I don't want to see the big dip though. Honestly, I don't. I'd rather not see a big dip again. I'd rather them come out and like say some like all right things and the market's just flat, right? I'd rather see that than the big dip, honestly. As much as I like to buy dips, I feel like we've had so many dips. I'm just like, can we just not have another dip right now? Can we just have like a flat day? That'd be great. Flat day would be nice. Already dropped 600 on my stimmy. Why did I wait to go live? I told you I have business stuff to do. That's the problem. I mean, I wish I could do this, you know, I wish I could just do this like, you know, 24/7, obviously. But I'm at that business stuff too some days. Maybe one day, you know, the channel will get big enough I can just stream and do the YouTube full time only. That's the goal, right? That's my goal, man. That's the reason why I started YouTube, right? I want to help others and stuff, right? Like, that's my goal, man. That'd be awesome. And then do the other stuff on the side as like side stuff. That would be the overall goal, honestly. But I'm gonna have days, man, where I can't get on as soon as market goes live, right? I plan on tomorrow going live before market goes live, though, so that's good. Tomorrow and Friday are pretty open, so I should be able to get on, like, say, like, probably like, you know, 20 or 30 minutes before market goes live. So that's good, at least. That's good, man. I mean, I feel bad about it, right? Feel bad about it, like I do. Like I want to be like on here like before. I want to be on here before market goes live, like every day, man. But I also got business stuff I got to take care of. I'm also like working till like 1 o'clock, 2 o'clock at night. This morning I was up till 2 a.m. You know, working. So it's like, dude, believe me, man, I work a lot. So you know, I try my best, right? Like I literally get up, start working like 7:30, and I get done at like midnight to 2 o'clock in the morning. Pretty wild. Like obviously I take a break here and there, obviously to play with the kiddos and get kids baths and bathed in bed and teeth brushed and all that good stuff as well. But also, man, it's believe me, I already work a lot. So yo, do it, Ghost. Do it, nerd. If you guys haven't, make sure you guys hit the like button below, though. Make sure you guys hit the like button below. Yo, thanks, B-Hawk. Thanks, man. Thanks, Bach. I mean, maybe, dude, that's my goal, dude. That's my goal, honestly. Is to hopefully one day be able to, you know, do this more full-time, no matter what, right? And like, obviously, I've already been working this full-time, technically, a number of hours. I just also have other stuff I have in priorities as well. Be good to have those things not be priorities, right? Like super priorities, and just have those on the side as well. But when I have time to do them, but just not yet. Just not yet. Man, if you get 500 likes, I'll drop 500 AMC. Yo, if Rich says, man, if we get 500 likes, he's gonna put a 500 on the AMC, chat. What he says, man. I believe him too, honest. I believe Rich. I believe him, chat. So you know what that means, chat. Make sure you guys hit the like button. Where's my stimmy going, Clint? I don't know. Where do you want us to go, man? Honestly, dude, I'm going to play it safe, right? I'm going to wait until after Feds talk. Then then I'll discuss what I'll do. After Feds talk first. Like I said, I'm very tempted to buy more, like, you know, more of my conviction stocks, like Neo and Tesla and stuff. But I'm also scared that if I buy now, that... Say Tesla right now, that's 672. Man, if the Feds come out and the dot chart's not good, or if the GDP chart is not good, even if the unemployment numbers in 2022 are below 4%, or below 4%, we could see these stocks tumble, man. And I'm not talking about like a small tumble. I'm talking about Tesla maybe, you know, reaching 550 levels again. So I'm just gonna hold off a little bit and see what happens. I'm going to play it safe, right? That's the reason why I haven't bought any stocks in the last couple of days. I'm hoping they come out and just, you know, everything's like everything's great, right? I'm hoping the dot chart, it doesn't show like a lot of dots on like 2023. Hopefully a lot of the dots are on 2024 going forward. Fine with that. If it's 2024 forward with the dot charts, market should be okay. But then you got to look at the GDP. The GDPs are off going forward as well. If they think the GDP is going to be bigger, you know, over 5%, then yeah, that could scare big investors. So big investors are what move the market, right? Like us retail investors aren't going to move the market that much. We move it a little bit, man, but these retail investors and bigger investors, like they're the ones that move the markets. And if it spooks them, man, they're going to pull out, and that drops the market a lot. And that's, you know, that's when retail investors start pulling out. And then you see another 5% go off of that again from retail investors. So it can lead into like a big conundrum. Lead into a big conundrum, man. What time's Fed's talking? 2:30 p.m. We have today's the biggest talking day that I can think of in quite a while from the Fed. So Jerome Powell should be talking at 2:30. Like the last time Jerome Powell was speaking, that was even a big news, right? That was like small news, and it still moved the market a little bit, right? We had that like 3 or 4% flush, and he wasn't even talking about anything like in like direct specifics. I'm hoping this time, man, he's like, he knows that the market's kind of spooky. We won't see nothing crazy happen. Is there a video on your indicator setup? Is there? I don't have a video, but I can tell you what I have. I mean, you can pretty much copy it, right, if you want to. I have the EMA set to 200. I have MA set to 15. You can also do 20. I like 15 because it's a good in between 10 and 20. Some people use 20 though. I like using 15 just because it's a good in between. I got obviously the VWAP on 14, which is at 13.33. Right now at 13.32, whatever, somewhere in there. And then I got my RSI as well. Nothing too crazy. Some people also use MACD. This right here just gives you trends, right? You know, if you see a red coming up, you probably don't want to buy in because usually you'll see a hump like that go down, and that's when you see these humps. Usually when you see some green coming in, you get like 2 greens in a row. As long as they're going up, usually you probably buying in at a decent time, you'll see some ups. A lot of people use this as well. You can see here, you can see the ups and downs, ups and downs, ups and downs. Usually I like to, if I usually I don't use this as much in terms of like my scalp trades and stuff, but it's okay to be there, man. It's not gonna hurt you at all, man. It definitely can help out a little bit, give you some trend lines there. But usually I just use RSIs with those indicators. You can turn those on by going to edit indicators and turning on your EMAs right there. Now so you have your MAs and your view app. I don't have a set of video, but watching those are good, obviously. And anytime you get the trend lines going up over your MA15s and your EMAs, usually it's an uptrend area. And you also can tell that by the RSI right here hitting 62 plus. Anything over 50% is usually you're gonna have an uptrend going on. Anything over 70% usually have more of an incline than usual though. Yeah, and I seen that. I did see it. Is it? I don't know if today's like. It didn't look as interesting though in terms of that. It looks more like a. Just going over general stuff about it. Thoughts on life. Yesterday I had a run and I was wondering if that's as much as it will go. You're talking about a tire pharma. Well, the thing is, like a tire pharma, you're hitting that on like news stories, right? So you'd want to pick up a tire pharma like at a low point, as low as you can get at it, right? As low as you can get it to, at least. The reason why it had an uptrend yesterday is because it got a price target to $20 from the $15 from Roth Capital, and that kind of boosted it up yesterday. So it kind of got like a boost from yesterday. It'll fall back down probably again though. I don't know where to fall to, but I would say it'll probably fall back down to around like $5, somewhere around the $5 area again. If the Feds come out today, and honestly, I would wait to buy until the Feds talk, because the Feds again, if the Feds come out and don't say stuff good, it's not really good. I mean, you'll probably see a tire pharma drop back down to say $3 area again. $3.50, maybe $3.80. I don't know, somewhere in there, somewhere around the $3 area. You'll probably see it drop down. I personally would probably wait. I would hate for somebody to buy in, especially on a pharmaceutical company that's definitely would drop, drastically. Especially because they have no medicine right now, right? They don't have anything. It's in FDA. They don't have an FDA approval. So it would definitely get hit, Not saying that a tire pharma is not going to be a good company, because obviously they had the medicine for the pandemic, the C word that we do not speak of. But they had the pandemic, that medicine for that. So it's definitely probably do well as long as they pass everything, right? Their FDAs and stuff. So you'll probably make money on it, but I'd still hate for you to buy in right now and it dropped drastically as soon as the Feds talk. That's my only issue with that. Just remember with any of these healthcare companies, they go up on news, right? People buy the hype and then they sell the news. The reason why you've seen this kind of sell off a little bit from yesterday's highs It's got to like $6 and like what 45 cents or so. Now it's down to $5.64. That's just people selling now, right? They bought down low at say like $4.50 yesterday. Then they sold it like $6 plus, and some of them are still selling off, right? And they'll buy low again. That's just how these medical stocks work. People like to buy them low, and then they sell them on the uptrend again, and then they'll buy them again when it goes low again. I've done it plenty of times myself, so you can definitely make money off medical stocks doing that. Just make sure you're picking up some good companies that you actually think are going to do well. Because as long as they're doing well, man, you'll see the ups, and you can sell it at higher rates. Oh, you sold it? I thought you meant you're gonna buy it or not. Oh, you already sold. Got you. Got you. Gotcha. If you guys have it, make sure you guys hit the like button below. It definitely helps out. I'd appreciate it. So just asking your opinion. Could AMC drop to 5 if it's bad news? I don't think it's gonna drop to 5. No. I think there's a lot of hype around AMC. I don't think it's gonna drop that low. But, I mean, I wouldn't doubt it to see it, at least, like, lose, like, $1 or $2. You know what I mean? If the feds come out and say something bad. Because you got to remember, you have a lot of institutions that are in AMC, right? That's the ones that would move the market, right? Like, if the feds come out and say something bad, the institutions come out and they're like, well, AMC's already up, right? So we can sell that right now and make a profit. And that would drop, AMC, right? The same thing with GME as well. I don't think retail investors will be selling, right? But there is the big people will be selling, right? Like your hedge funds, your retail, your not retail investors, your like more commercialized investors, big investors would be the ones that would be selling the suits, right? They'd be selling, and that could definitely drop, AMC or GME, man, a little bit. It definitely could, believe me. It could definitely. I don't think it would affect AMC and GME as much because there's a lot of retail investors in it. And I don't think a lot of retail investors would be selling. But it could definitely drop it. You know what I mean? You could definitely see that like crazy drop like we seen last Wednesday. Where you lose like $2 in, a little matter of not long a period at all. It could definitely affect it. I'll put it that way. Not saying it's going to, but it could, right? Definitely could affect it. Hopefully not, though. Hopefully it's all good news, and we see, an up sport. Yeah, I don't see it dropping to $5 though. I could definitely see like a few dollars, right, drop, like we kind of seen last Wednesday. But I don't think it's going to go all the way down to there. But you could definitely see like 11.50, like the $12 area for sure if it gets up to like say 13.50 or so. But I'm hoping we just hear good news, or again we could hear just flat news, right, where it's just like not very positive news, but it's not bad news. So you're just like the market's kind of flat, and then you wouldn't see AMC or GME affected at all. Or we could hear some really good news, and you hear Jerome Powell like pick up the market, and then you can see GME and AMC take off like a rocket. That could definitely happen as well. There's three different things could happen. We could see a down pull in the market. If say the dot lines or the dot plots aren't right, you know what I mean? So if dot plots, if you see a lot of dots on the 2023 line or even say 2022 line, that would equal a down market, right? If the dot lines are up on 2024, that's fine. 2024 is fine. 2023 and 2022, not good. Not good. GDPs is over like 5%. So say if GDP's like 5.1 or something. Not good. Not good. We don't want to see that. That's going to equal a drop market. If we see like, we just see like some, you know what I mean? Like maybe a little dots here, maybe a couple dots there in like 2023, kind of like we saw last dot plot. Then you would kind of just see like a straight across market. Nobody's really going to care as much. I think the market's kind of already priced in, like a decent, like just like straight across news. The reason why I think you've seen a lot of these kind of drop down some today and yesterday as well. And some of them's kind of recovered just as tidge, right? Like you got some like up like less than like 1% pretty much. You got CrowdStrike is up like 0.9. You got FTLC up 0.25 or whatever. So you have these barely ups, right? But a lot of these stocks had a lot of downs yesterday. So already, right? You got CCIV right now pulled back down to $28. CCIV is already pricing in like the Jerome Powell, like not saying super great news, but not saying super bad news. Because I do feel like if they were pricing in super bad news, this stock would be like 23 or 24 bucks again. NEO would be like 35 to like maybe 38 to $35 area, and right now it's at like 42. So I think a lot of these stocks are already pricing in kind of like just like a lull from Jerome Powell. So hopefully that's all we get, right? I hope that's the most red we get. And I'm hoping he comes out and just says, hey, man, all kinds of good stuff. And the market just shoots up like a darn rocket. And we're all rejoicing. That's what I hope he does. I don't want to have a red market. We've had enough red markets. Still holding, viewing from work. Yo, what's up, Connie? Hope you're doing well today. Sorry if I haven't like answered a lot of questions in the chat. I'm just kind of go over the Fed stuff because I had a lot of questions on Fed stuff today, especially from last night's video. I just want people to be educated in how the Fed could move the market today. And I know a lot of people probably aren't talking about it, but I'm sure there, I'm sure some of the more, the more I guess bigger investors that invest a lot are probably talking about the Feds. Is it worth selling when the market has gone up? I mean, you could obviously, right? You could be hedging yourself against inflation numbers next month that are probably not going to be the best. Because obviously next month we're gonna have another. If we make it past this, right, the next thing that can make the market go down would be inflation numbers year over year are gonna look bad. Even though I don't think month over month it's gonna look bad, right? So year over year is gonna look bad because last April in March, because this March you get February's numbers, right? So April you get March's numbers. So like year over year, it's probably gonna look bad because we had the whole market shut down there in March, right? You had April, you had the market shut down in April as well, right? We didn't start kind of reopening stuff till like the end of May. So you almost had like March, April, and May where the whole darn thing was shut down. So year over year, you're going to have bad inflation numbers. And that right there could also pull the market down a little bit, even though we kind of all know that's not real true because it's, year over year, it's going to look bad no matter what. But it could still, these bigger investors, man, can move markets. That way they can get lower prices again. So it's liable to happen, man. But I mean, if you have a lot of margin, it probably wouldn't be a bad idea to free up you some cash for your margin, right? In case the market does go down. But nobody knows if that's going to go down or not, right? Like, hopefully most people are like, okay, this isn't that bad, and hopefully the month over month is not bad at all either, and that would kind of hedge against that year over year. That would kind of hedge over that year over year, outlook at least. Yo, what's up, Speedy? What's up, brother? Yo, what's up, Bob? Hope you're doing well today, man. I hope everybody's doing well today, by the way. I appreciate everybody being here, man. We're expecting this news, Steven, at 2:30 p.m. Jerome Powell is going to come out and have a speech. Today's pretty much the biggest day in the market that we've had in a while in terms of like news-wise, right? So, yeah, if you're new to the market and not, when Jerome Powell comes out and talks, that's the days you want to be paying attention. Because that's the days that moves markets the most, usually. Like, obviously, we've had these, terrible, 10-year treasury yields, which definitely hurts the market as well, right? Even though I don't think the 10-year treasury yields should be moving, like, hurt it that bad in terms of, like, just looking at it and, like, seeing, like, but 1.67 is a lot, right? Like, you know what I mean? Like, earlier we were up to, like, 1.68. Like, it's a lot, man. Like, when you're going back to, like, say, 0.8, right? You pretty much doubled pretty quickly from 0.8. But again, we go back to like 2018, those numbers were, say 3.2, 3.3 back in 2018. So honestly, if you go back and look, it's not that bad, but it still spooks markets because they think the Feds are going to raise interest rates. Yo, me and you both, Speed. That's what I was telling Nicole. Is like, I think I'm starting to get like sick to my stomach. Dude, it's like the most nervous days to me. I'm like, I'm prepared to buy the dip, right? But I also would rather just have a flat market or a up market because we just had so much down here lately that I'm just like, I'm done with the down. Even though we had a lot of up, over the last year, most of it was up, right? But I mean, this last month, we've had a lot of red too. I'm like, I'm just done with the red, man. Done with the red. I can pull up 2 more charts, yeah. If you guys have it, make sure you guys hit the like button. It definitely helps out. more than you think. Let's pull up. Where's CCIV right now? This is what I expect right now, right? Like you're having these people like sell off of especially of tech stocks and EV stocks right now. We had this, we had an uptrend at the start of the market, right? On NEO, we had like a downtrend at the start, but we had a lot of NEO had a lot of down day yesterday, like 2% or whatever it was. Still down 3.5% from yesterday. If you're having these markets, you can go the same thing every year, right? Like you're down 7% on CCIV. This is just the market getting ready for Jerome Powell. Now, if he comes out and says something good, you can see CCIV shoot back up to 33, 34 bucks again. You can see NEO shoot back over like 47, 48 again. If he doesn't say anything good, man, you could definitely lose a couple more bucks and another 5-10% in the price. Some of this is already stocked in. Like if you go to Tesla, some of this is already packed in, right? You got Tesla down to 668 right now as well. So this right here is just the market getting ready for Jerome Powell, pretty much. Like, what do we do, man? So a lot of people are obviously hedging against Jerome Powell saying bad things, so they're already selling off. And they'll buy back in if he says something good, But any market won't like what he says to say, man. It's not that. I just want you guys to be like, I just want you guys to be aware, man. And I know a lot of people probably that are streaming AMC stuff probably aren't talking about how the market could be today. But again, I'm an overall market guy too, right? So it would still affect AMC and GME 100%. It still affect them. Even though I get that they're hype stocks, there's still big investors in both of those stocks, and if they sell them, some of them, that could definitely move the market. Yo, thanks, Nice. I appreciate it, man. I appreciate it, brother. Yo, maybe, Junebug, maybe. It probably does matter, honestly. Feds have one tools that they want to use to fix the economy. And hopefully the Feds come out and say great things, right? Join, and we'll see just the update. That's what I hope we see, man. That's what I hope. But I also want everybody to be aware that just be cautious, right? There's a reason why I haven't bought any stocks the last couple of days, and the reason that is, for the most part, other than me buying a couple from selling that Kim Farm deal, when I sold Kim Farm rats, I turned that money and put it into some stocks. But other than that, I haven't bought any stocks myself, just because I'm waiting to see what Jerome Powell says first, because I don't want to buy now and it dips, a lot more, and I'd be like, Believe me, it's hard not to buy NEO at $42. Believe me. Yeah, I mean, it's like, oh, NEO at 42. It's it's hard not to buy like Tesla, man, at below $700, like 666 right now, right? It's hard not to buy some of these deals, man. There's some really good deals, right? Some really good deals, but it's also like I also kind of want to wait. Like you get FRX under like $11 right now. There's some really good deals out there. Still, but it's also I don't want to buy and then like it way dips way more than what it is right now. I'd rather just keep cash and then see what he says, and then if everything's good, then buy in, and I'm fine with buying in then. Because then the only next catalyst we have though is next month with the inflation numbers, right? And that right there can move it a little bit, but it might not move it as much because again, I do think that a lot of people hopefully know that those inflation numbers year over year are going to look bad anyway because the whole market was shut down. Oh, for sure, Richard. I wouldn't be scared of like, it not coming back, right? I'm just saying like if I'm not going to buy any new right now because I don't want to buy in now at a new stock, right? I don't want to open up a new position because there's like stocks I want to buy in right now that I don't even have positions in, but I'm also like kind of scared to buy in because if he doesn't say the right things, then those are going to bottom out more, and then like I bought in and then lost 15%. Be my luck, right? So I'm just gonna wait. There's definitely some good positions out there to get into, but I'm also just gonna wait. Also, just gonna wait right now. See what Fed say. You know, we got Fed talk in, what is it? 11. We got Fed talk in 3.5 hours, right? Or 11, 12. Wait a second. It's 12. It's almost 12. 12. 1, 2. So 2.5 hours. Yeah, 2.5 hours. We got Fed talk. Take a look at Plug. That's because Plug did not do their financials right, and the market hates when you don't do your financials right. And when that happens, you're gonna get sold off really quick. Plug's down for a reason. It could also drop more. Plug's down for a reason. Though Plug is at a good price point at 35 bucks, but it's also like you don't know. You also don't know what Plug's going to come out with their revised financials. Kind of. Woo. You know, they literally just got their buy rating cut in half. The buy rating literally got cut in half, by the way. By multiple sources, too. What happens when you tell a fib to the market? You kind of get sold off really big. So he came back from the hospital after jumping in front of a truck this morning. What the heck? What did you do, Nitro? What the heck, dude? That's the craziest thing ever. What's happening to the market? Right now, what's happening to the market is, but this is what happens, guys, when you lie. This is what happens to your stock, right there. People right now are selling off because they're getting ready for Jerome Powell to come out. The whole market, a lot of markets selling off. The only stocks you have right now that are honestly up are hype stocks and a couple stocks that are like you got FTOC 0.08, right? You got CrowdStrike up 0.43%, right? You have a couple stocks here and there, man, that are barely up under 1%, really, for the most part. A lot of stocks are down though. A lot of stocks are down. A lot of people are just getting ready for Jerome Powell. Getting ready for Jerome Powell, man. Come out and talk. Say what he's going to say. He needs to hurry up. That's all I know. I don't have time for this. No, we got a whole 2.5 hours before he comes out and talks, though. I have no time to wait. Darn it, Jerome. You're in my strike zone, man. When I see the price I like, I strike. Yo, DJ, it's good, man. It's good. Just be careful, though, DJ. I'm telling you, man, today. That strike might be negative 10% now, but if Jerome Powell comes out and doesn't say the right things, that strike zone's gonna be negative 30%. Just be, you know, carefully optimistic, at least. That's all I'm asking. Just be optimistic a little bit when it comes to some of the prices you're seeing. Because this right here is like, this is the market saying that Jerome Powell's going to come out and say, like, you know, kind of middle ground stuff, and the market's going to kind of be lulled out, really, a little bit. This isn't pricing in Jerome Powell coming out and saying they're going to, you know what I mean, in the dot plots and the GDPs being, you know, not like they want them to be, and then these stocks, you know, this CCIV saying negative 16, right? Or Plug saying negative 25, you know, %. Or Neo saying negative 10%. Like, it's not pricing that in yet. Just be optimistic a little bit. I'm not saying you can't buy, because, like, obviously there's some good buys right now, man. It's hard for me not to buy, so I don't blame you if you're buying. Don't blame you, man, you know. You got Li Auto again under 25%. I mean, under 25. You got XPeng under 35. You got CCIV at under 30, obviously at 28. You got Apple, you know, getting back down close to, you know, 120 area again. You got FRX, you know, under 11% again. I mean, under $11 again. I mean, there's a lot of good buys. You got Canoe almost touching under $15, which under $15 is a really good buy zone for Canoe. You have what, you know, Matterport. Where's Matterport at right now? GHVI. You got Matterport, you know, under 15, which is a really good buy. I think under 15 bucks, Matterport's a great buy. There's a lot of good buys, man, but it's also like you also want to kind of be a little wary. You got, what is this? You got like FRSX like at like $7, under $7 again. Yeah, right at $7 again. Really good buy. There's a lot of good buys, but just, you know, you got Palantir. Palantir's under $25 again. A lot of good buys. Like, really, man, it's hard for me not to buy it. But I also know that we could also go right back to those lows we were at, you know, last week on those big lows, if everything doesn't go right. Yo, if you guys haven't, make sure you guys smack the like button. It definitely helps out with the broadcast and letting more people see about the things. Yeah, let's hope not, Speedy. I'm hoping he doesn't. I'm hoping. Honestly, I just want to see dot plots. I want to see the GDPs. I want to see what they think the unemployment numbers are going to be next year. Because if unemployment numbers next year are under 4%, that right there could also move markets as well. There's a lot of things, man, we want to see. A lot of things I want to see, man. Lots of stuff I want to see and look at. Don't anyone to take a loss, but dude, yo, Jared, if Tesla goes to 550 again, man, I might have to, honestly, I might have to sell some stocks just to plug up that again. But I hope not. I hope not, man. Like, yeah, I'd rather just have a flat day. If they just come out and, you know, Tesla goes down to like say 650 and flattens out, you know, that I'll take that as a victory. Or if they say good things, man, Tesla shoots back over 700. It's even a better victory. I'd much rather them come out and say great things, though. But I'd rather flat stuff than a more down stupid period. Do you think unemployment will be under 4%? I don't know. Honestly, for 2022 outlook, I have no idea. I mean, obviously the market's growing faster than they expected it, right? Obviously, you know, it's obviously growing faster than they expected it to. That's the reason, like, you know, that's the reason why a lot of people are thinking, hey, they're going to raise rates, right? Because the market's doing better than they thought, right? Or they think. So a lot of the market is, you know, thinking they're going to raise rates, and that's one reason why you see, you know, the market kind of scared on these 10-year Treasury yield notes and things like that, right? One reason why you see a lot of hesitancy in the market because of that. So even though Jerome Powell comes out and says, hey, look, we're not going to raise rates, people are still like, well, we see this going up, so obviously you're probably going to raise rates. So that scares even more people. It just turns into like a no good bad day. And it's like, oh. So, I mean, I'm just hoping he comes out and says really good stuff. At the very least, we see like maybe a sideways movement than a down movement. We would see a down movement. Why would unemployment being a bad thing? Because people think that if unemployment is below a certain percentage point, the feds are going to raise rates. Feds raise rates, market goes down. It sounds weird, I know, man. I know it's weird. You would think the exact opposite, but the suits think differently, man. Suits think differently. So higher. I mean, under, you know, unemployment rate being down equals the suits thinking that that you know, the feds are going to raise rates sooner than 2024. That equals you know, them selling. That equals them selling. Why every other one is falling, prepping for the news. Well, again, you have hype in AMC and GME, right? That's the reason why I don't think these right here will be affected as much. But I wouldn't doubt it, man, to see, you know, I wouldn't doubt it if it has really bad news, if we've seen, because you do have commercial investors and suits in these deals, right? And they're the ones that can move the market. So I really wouldn't doubt if it comes out and says bad news, man, and you've seen like $1 or something drop, like kind of like Wednesday. Remember Wednesday where you've seen this like crazy drop? You know, that could definitely happen. That's definitely a scenario that could happen. obviously, I don't think you'd see retail investors selling, but again, you could have retail investors stop losses, you know, getting popped, and that also makes those guys sell out. But they'll eventually buy back in, and you'll see like a return, but it still hurts the overall goal we have right this second, right? On GME and AMC. Again, I'd rather see a flat market. A flat market, you know, we wouldn't see a lot of sell-offs at all on AMC, and then you wouldn't really notice a huge difference in AMC or GME. But you know, bad news would equal drops in both of those stocks right now a little bit. My point is high unemployment will be higher, right? If Feds increase interest rates while unemployment is higher, unemployment will be higher. I don't think it'd be higher in terms of that. It's just a lot of people are looking towards unemployment rates as well. They look at that, and they also look at the GDP, right? So if our GDP is higher, people are thinking that, you know, or the suits are thinking, hey, the Feds are going to raise rates sooner. So they start kind of pulling out. Now, this might just be temporary. Yes, I get it. Like the market's going to go back up, right? It's temporary. It's a temporary movement in a down position, but it's still not fun to have that happen, right? No matter what. I don't care, man. I don't care what you say. It's still not fun to have it happen. Like, yes, I'll buy the dip, right? But we've had so much lows here lately that I'm just like, I'm sick of lows, even though we had like a year of up. You know what I mean? But it's still not the best to have happen. I hope it does hit $15. Honestly, that's what my goal is. My goal, honestly, is to see Friday hit 20. But obviously, like if the Fed's kind of hampered a little bit, that could definitely be hampered. And I would probably move my suggestion back up to down to 15 for Friday. Yeah, he seems. Yeah, man. I'm not listening. Not listening to anybody like that. You're right. Stocks have been going down here overall. Oh yeah, for sure, DJ. People are waiting for what the hedges are going to do, right? The only reason why AMC and GMA haven't been affected, but they have been affected a little bit. They honestly have been affected a little bit, right? We've seen the pullback, you know, happen on AMC, back on wherever it was, back here, whatever. Yeah, right here, yesterday. You've seen the pullback yesterday. I think a little bit of this pullback from yesterday was obviously like it tried, like, you know, some of these people pulling out a little bit. Obviously today we've seen a little bit of recovery, you know, which is good. Right? But I do think yesterday we've seen a little bit of that downturn. Yesterday was some of those people kind of selling off and waiting for the stuff today. But I do think AMC and GME will be effective less than other stocks would be effective because there's so much hype around them. But it still doesn't take, you know, much for one of these bigger hedges or bigger funds, say like Vanguard or somebody, man, to sell out some of their stock to move the market down a little bit. That's the reason why I said I wouldn't doubt it if you've seen like what happened last Wednesday. If the Feds come out and say something that's not great, and you've seen kind of what happened last Wednesday, you see it's like gap. You know, you can see it gap down from say 1350 or 1340. You see it gap down to say 1240. You know what I mean? In a very short span. I don't think it'd be affected as much as some of these other ones, right? Like say like a Plug or a Neo or a Palantir. Like, there's no reason for Palantir to be under 25 other than people are selling off, waiting for Jerome Powell to talk, man. You know, it's pretty much the only reason why these stocks are selling off. People are waiting for Jerome Powell to come out and talk. Oh, yes. Yeah, Jay. Yeah, man. His speech would affect every sector, no matter what, man. It would affect everything, right? It would affect any sector you're in, man. It's the whole market as a whole. It would literally be like, okay, you remember last week when all stocks were falling? That's what would happen, right? Or, you know, what is it like? It was like 2 weeks ago now, right? Let's see, whatever week it was. Last Friday, yeah. So last Friday, the 8th or the 5th, 4th, the 3rd, and the 2nd, right? Pretty much what you would kind of see would be, I can pull it up over here on like Tesla, right? You see Tesla over here. Pull back Tesla to say, what's that? Pull back in a month. This right here is what you would probably see if he comes back out and says something bad. This right here. You would see, I don't know if it'll last as many days, right? But you could definitely, you know, see at least a day or two of just, you know, down market. It would bottom out and come back up, right? It would come back up. it would definitely come back up. So don't take me wrong in terms of me saying it's not going to come back up or something. I definitely think it would come back up. It's just, to have another down period would stink. I mean, you've already had just one, man. You're going to see these things tanking out. That's the reason why you see the market right now pulling out a little bit. You've seen CCIV yesterday, up really big. The reason why you're seeing CCIV down right now is because, Jerome Powell, right? People made a buck yesterday on CCIV, and then they kind of sold back out a little bit. It's the reason why you see the lows again, coming back down like 28 bucks. Now, again, I think the market's kind of already priced this in, right? So if he comes out and just says, something that's just like, mediocre, and like the GDPs are just mediocre, you know what I mean? And like the plot lines are just, kind of like what they were before. You have a couple dots at like, 0.5% interest rates on like 2023 and things like that. Then I think we'll see a flat market from there on out. I think the market already just kind of priced that in. Now, if he comes out and again, the plot lines and the GDPs and the unemployments are bad, or not, the unemployment actually wouldn't be bad. They would be good for next year. But, the suits would see that as a bad note in terms of like them raising interest rates sooner than 2024. Then you're going to see these, maybe double in their negatives for today. Maybe even more. Who knows? you never know, man. What are they saying this show? Yeah, you're good. You're good. What website is this? Which website, Thomas? What do you mean? You're talking about what it would be streamed on? I'll pull it up live on the stream when he starts talking. If you guys have it, make sure you guys hit the like button below, though. We are naive to taxes. Yeah, the suits in general are just scared that they're going to raise interest rates. Just scared they're going to raise interest rates, honestly. That's where a lot of this mungo jungle is coming from. That's the reason why you see like the 10-year treasury yields, move the market a little bit as well, because once you get those treasury yield rates going up and up and up and up and up, people think also then they're going to raise interest rates as well from the feds. I'm using Webull, by the way. I am using Webull. If you guys want to use Webull and get 2 free stocks, you can do so right here. Right here, man. Yeah, you're welcome. You're welcome. But again, hopefully we got good news. So I'm gonna think positive about it, right? Until I hear negative news. I'm just gonna play it. I'm gonna play it optimistic. I'm gonna think good vibes until he says something stupid. When he says something stupid, I'll sound the alarms. You're gonna hear like tornado sirens in the background. I'm more interested, not only what he says, but more interested in seeing the plot lines and GDPs and unemployment numbers. That's why I'm more interested in anything. Because visuals, and hearing stuff definitely moves markets, but visually seeing it can move it even more. Now, hopefully the market doesn't crash. Hopefully it doesn't crash. And right now it's not a crash. Right now, people are just, people are pricing in Jerome Powell coming out and saying, like a flat news, right? Like, just flat news. What we kind of just not bad news, but not good news, right? That's what people are pricing in right now. People are pricing in Jerome Powell coming out and just saying, man, we're not gonna raise interest rates, like, the same as last time, yada yada yada. So hopefully, at the end of the day, it's what the market's pricing in right now. If he comes out and says bad news though, and everything's bad, then this isn't even red, man. This is pretty much green right now, then. Yo, Ben, dude. Yeah, exactly, bro. I remember the sound of tornado sirens. We don't have to hear that here at the base at Pike Peaks. Yo, dude, you hear them here a lot, man. We actually got chances of tornadoes today here in Nashville. So we're supposed to have bad storms come through, starting before too long throughout the whole day. Well, simple. I just don't want to pay people, man. Like, dude, you got to pay them like a fee and all that stuff. I'd rather just open up an M1 Finance, man, and you know, have something, you know, not have to pay a fee. And just pick one of their plots and go with it. Obviously, if you have ETFs, you're going to pay like a certain percentage of ETFs, but I mean, usually ETFs usually pay for themselves a little bit in terms of like, you know, earning money every year. Yeah, Mika, yeah. The South today, man's got all kinds of bad weather today, dude. Yeah, Nashville's in the same predicament right now. I'm like, oh, so if I lose power today, chat, you know, it's not my fault. Literally just storms, man, storms. If you guys have it, make sure you guys smack the like button. Let's get to 100 likes, chat. Let's go. I appreciate everybody being here, by the way. What are your thoughts on TD? I don't mind TD Ameritrade. I like Webull more now than, honestly. I used to use TD Ameritrade. I don't mind TD Ameritrade at all, though. Do not mind it. I do like my, do have a TD Ameritrade account. I used to use it. So it's not like I don't like them. I just don't use them really anymore, for the most part. Most of the time, I just use my M1 Finance account in my Webull now, right? But I have it if I ever have to use it. So I have it there if I have to use it. I do have some stocks just setting in there. Do have my stocks setting in there. So I do have some stocks in my TD Ameritrade. I just really don't use it anymore. Kind of like I don't use Webull. I mean, kind of like I don't use Robinhood, but I do have a little bit of stocks just setting in my Robinhood account. I don't have any money in it, you know, but I do have some stocks in there I just don't want to sell. But don't want to pay a fine, or not a fine, but a higher tax rate on those stocks. I'm just going to let them sit there for a couple more months and then I'll sell them probably. Don't want to pay that higher tax rate on them, so I'm just going to let them set, man. I guess I could transfer them over, but I also don't want to get them tied up and transfer right now. So I've just been let them sit there for a bit. Try Cashapp. Yeah, Cashapp. I can't. Cashapp. Dude. Cashapp. You can't buy. Reason why I like Webull is I can buy, sell, and trade 4 hours before market, 4 hours after market. Cashapp, you can't do that, right? It's cool. I like how Cashapp's there, and it lets let people, you know, invest in the stocks, man, that normally probably wouldn't invest in the stocks. They really don't know, you know, what to use or how to use it. I do like Cashapp for that reason, though. I do think Cashapp is definitely for some people, but for somebody like me, man, some more serious trader and serious in stocks, I'd much rather have something like Webull where I can, you know, buy, sell, and trade 4 hours after market, 4 hours pre-market, right? Because what happens if I want to sell my stock, you know, at a high price in pre-market, and I can't do that on like Cashapp or Robinhood or something, right? But I can do that on my, you know, Webull account. Yo, public, yeah, 0. I do like how public you can actually like give people stocks though. I emailed Webull. They said they're looking into that feature. That'd be good, man. Do you like public for that reason though? I think every app should have that. You just give people some stocks you want to. Kind of like I want to do that with AMC, right? I have to do it through the public app though. Best part, Cash App, is you can buy $1 for less than 4. Yeah, I feel you. Fortunately, the less rich, yeah, H-Buck, yeah, I feel you there, man. Webull's doing that as well, though, soon. So Webull's going to be adding in fractional shares as well. But they give you instant access to trade like Robinhood. I don't know if you're first. I can't remember if your first time. I do now, though. If I transfer money, it's right there instantly, right? It's instant buying power. I can't remember if it's that way on your first transfer, though, or not. I do know they give you some of your money. I don't know if they give you all of it on your first transfer. It's kind of like a trusted thing, right? Right. The longer you're there, the more they trust you, and trust that your funds aren't just going to bounce. Because I'm sure they do get a lot of bounce funds from like new people. But I do know now that I transfer, it's just instant, right? As soon as I transfer, it's there, literally instantly. But I also have wire transfers as well. So why is NEO going down? It's called the federal, aka the feds. Oh, the feds, man. Everybody's getting ready for the feds to come out and say something bad. That's what's happening, man, in the market. So if you're wondering why the market's going down, chat, in some areas, because everybody's waiting for the Feds to come out and say something bad. No, nobody. The market wouldn't be going down if everybody was waiting for the Feds to say something good, right? People are the suits anyway. The big guys are getting ready for the Feds to say something bad, right? They're betting against the Feds right now, saying, "Hey, the Feds are going to come out and say the interest rates are going up way sooner than 2024." That's what's happening in the market. That's the reason why you see the market down. That is why, man. It's nothing that like Neo did, or nothing that cciv did, or nothing that Palantir did. It's not like these companies should be this low, right? It's hard for me not to buy Palantir under $25, right? It's a stupid buy. It's like you hit the buy button, right? At under $25 Palantir, buy. I want to smack the button so hard, but I'm just gonna wait. You see cciv under $30, buy, right? You see Neo under 45, you smack the button, right? Same thing with like let's see xpeng. Where's xpeng at? Right, I haven't looked at xpeng today. xpeng under $35, you smack that darn button. You know what I mean? It's hard for me, man. Like my impulse is just like buy. But I'm also just like, just wait, Jason, just wait. Wait, don't be stupid. Don't be stupid. I'm not gonna be stupid. I'm just gonna wait. I'm gonna wait it out, right? If I see like FRX, FRX on like at $11, buy. But I'm gonna wait. I'm gonna wait and see what happens, man. What the heck's this line right here? It's the weirdest line I've ever seen, man. I still feel like EXPI is undervalued right now, but definitely under $50. EXPI is definitely a buy. Redfin right now is sold off some as well. If Redfin drops under honestly, not a bad buy honestly right now. But if Redfin drops to say $65, it's a pretty good buy, honestly. So if that drops, pretty good, it's definitely a buy on Redfin as well. There's a lot of good buys, man. You know what I mean? So people right now are just saying, hey, look, the Feds are going to come out and say something bad. Pretty much what you see the market saying right now. They're already pricing it in. Not all the way in though, right? They're just pricing in Jerome Powell honestly come out and just saying, not something super bad, but nothing like really good either. And that's why you have Matterport under $15 is a really good buy as well. Definitely a buyer of Matterport right there in GHVI. Definitely some good buys, but I'm gonna wait and I'm gonna wait because those stocks could definitely tumble more. Well, Wealthsimple is a little different than I think isn't Wealthsimple kind of like a long-term kind of investment platform, kind of like M1 Finance. But M1 Finance, you don't have all those fees you have to pay like you have to do with Wealthsimple, correct? Is there like fees you have to pay with Wealthsimple to for them to invest your money or some weird stuff like that? I don't know. I don't know a lot about Wealthsimple. Yes, probably Abel. Probably again. But you could definitely see, Neo and other stocks drop a little bit today. If the Feds don't come out and say something really good, you could see Neo drop below 40 again. But they come out and say something really good, you're going to see Neo jump up to like 40, 47, 48 probably though. You'll see it go up really quick. You'll know, chat. You'll know, man. If the Feds say something great, all these right here are going to be super green. Every stock will be super green. Every stock will be super green. Until then, you're going to see a little ups and downs. Until the Feds come out and talk. You're going to see up and then down. And then up and then down. Right? Kind of like you do see right here like Neo. And then you've seen with like Tesla and others. You're going to see some ups and then some downs. And then some ups. Then probably some downs. And then probably ups. Until they come out and talk later. You're going to see a lot of swings in the market. 2:30 Eastern Standard Time, they're going to come out. Well, Fisker's in the same boat, man. You got to remember, Fisker and others are in the same boat. Right now, people are just pricing in that, they're trying to get sold, their stocks sold in, man, before Jerome Powell comes out and says something. If Jerome Powell comes out and says something great, they'll buy back in, right? They'll buy back in. But a lot of these bigger investors, man, are selling right now, getting ready for that to happen or not. That way they've kind of hedged against it, and they'll buy back in at the low spot. Whereas you have somebody like me, it's just like, I'm not going to sell because it's not worth my taxes. For them, it's worth their taxes, right? They have so much money, it doesn't matter. If I was going to wait, I'll buy in lower if it drops. I was buying lower, not worried about it. I'd ride the wave down, buy the dip. It's pretty much me, DJ. Pretty much me, man. I ride the wave down. I don't want to worry about selling my stocks. I don't want to worry about paying taxes on them. Me personally, unless I don't have a high conviction stock, and if I'm on margin, then I would sell, right? If I had margin, I'd be covering that margin. But you gotta remember, man, these big hedges and these big suits, they have a lot of margin too, right? So some of those guys, they sell because of margin. They don't want to go below a certain percent of margin because then they would get caught in that margin. Whereas somebody like me and you know, I don't do a lot of margin, right? So I would just rather, to me, I'd rather not pay those taxes, and I would rather just buy the dip. Just buy the dip, right? That's just me, man. It's my philosophy when it comes to stocks. Buy the dip. You know, if I see super red days, it's hard for me not to buy because I like buying the dip. I hope we don't go. I don't think we're gonna go bankrupt. Yeah, I don't think we're gonna bankrupt this, man. I don't think that's gonna happen. Don't get worried about something like that. You know, don't freak out. I'm just saying, be wary of the stocks today, right? We're all counting on Jerome Powell and the Feds, man. That's all I'm saying. I'm not trying to scare anybody. I'm just trying to say, just be cautiously about the market today. I also want you guys to know why the market's dropping, right? Like I want you guys to be knowledgeable, man, of the stocks and why things are happening in the market, why the stocks are moving today. I want you guys to know these things. I don't want you guys to not to know them. I don't want you guys to be stupid investors. You know what I mean? I don't want you guys to be stupid investors. Now I can be like a lot of other streamers, man, and just be like, guys, just buy right now, guys. Put all your money in right now. Come on. Let's go. Get AMC up above $30. Dude, I could be one of those streamers right now too, I guess. But I also want you guys to be educated, man. I want you guys to be educated investors, not, you know, no-brain investors. I want you guys to have some brains. That's all I'm saying. I like Cashapp because, I like Cashapp too, Troll. I literally just got Cashapp for people to be able to donate to the stream, right? Like, and honestly, man, I've liked it since I got it. I've never had Cashapp before, man. It's actually a pretty cool, seamless app, dude. Like, I love that it's, you know, it's there to let people, anything that lets people invest their money in some, man, in an easier way, I'm down with, right? A lot of investors aren't like me though, right? A lot of investors don't need to be up at, you know, 3 or 4 o'clock in the morning, man, to sell their stock, right? You know what I mean? A lot of people don't care about that. But if you're somebody like me, man, who cares, obviously something like Webull is really good because I can buy, sell, and trade, you know, at almost 7 o'clock my time at night, right? I can buy, sell, and trade at like, you know, like 4 a.m. my time, right? Like, it's different. Definitely different, man. Is it like, I think it's like 3:30. Or what is it? It's 4:30 my time. 4 o'clock my time, pretty much. I can buy, sell, and trade, right? It's like, it's different. But for most people, man, a lot of people don't really care about that, right? They don't need to care about it because they don't have to. But I love it, man. Like, again, I actually like the app a lot. I like Square Trade again. I do have Square Trade stock. You know what I mean? So I like the company. I never had Cashapp before, but I do like that it's, you know, it's there and it's easy to use for people. It's a pretty cool app, man. I'll admit, I never used it before until people kept telling me to get one. I was like, all right, I'll get one. Whatever. Never used those things, man. Vanguard just told me Etsy required 100% margin. I only have margin left in that account, but it let me buy it anyway. Oh man, it depends. Corey, is your margin over 50%? Never let your margin go over 50%. Honestly, I only use margin if I have to. Okay, if the market crashes, let's say the market goes back down to where it went back down to March, right? Let's just hypothetically say the market crashes. It drops to levels that it was at in March of last year. That's when I personally would use margin, right? Because I know the market only has one place to go, and that's up. The margin I wouldn't have to pay back because the margin is going to go up, right? I would bet against the market going down anymore because it's pretty much bottomed out. So then I would use margin. It's kind of like I use margin in, right? The highest I've ever been at margin was 28%. I won't go over 30% ever. I usually don't go over 5%, but I will use margin at certain points in the market. If the market crashes out, at that point, I'm like, F it, I'll take a loan on margin because the market's going to go up. The margin's going to go away anyway. It doesn't matter because as the market goes up, your margin goes away. So then I would be okay with margin. But I wouldn't use margin 99.9% of the time. The only time I ever use margin right now is if I'm waiting on, like, maybe if I'm waiting on something to clear, and maybe my margin is like maybe 3 to 5% max. And it's only there for like maybe a half a day or a day, and it's gone, right? I don't like using margin. Again, I would only use margin if the market crashed all the way out. And even then, I don't like going over 20%, but I did go to 28% in March, and that's the highest margin I've ever been at. And it went away pretty quickly, obviously, because markets went up. As the market goes up, your margin goes away. It just erases your margin. Dave Ramsey, disciple. I feel you, dude. I feel you, man. I feel you. I don't like debt either, honestly. The only kind of like credit stuff I use credit cards, and I pay them off the same month. That's because I'm a disciplined person. Not everybody can use a credit card, right? Like a lot of people have impulses, right? I don't have impulses. The only kind of money I usually give away is obviously to other people, charity stuff, man, things like that, right? I don't really like using money a lot unless it's charity, people I look up to, or people I'm helping out, obviously, things like that. I'll do money away for that, but usually I don't like that either. I bought, literally, dude, this tells you how much I don't like debt. I literally bought a 2014 Ford Flex. It's my car, right? And it was a wrecked car at that. You had to put a new hood on it, a new fender, a new bumper, a new whatever. A lot of new stuff in it, a new grill, everything on it. You know what I mean? It's a salvage title, right? It's a rebuilt title now, not a salvage title, but it's still a rebuilt title. I don't like buying like stuff like that because I know it loses value a lot. I do want to get an EV. My next car is definitely going to be an EV car, but I just haven't got one. And I'll wait until the Flex goes out or something. Till then, it does have like 114,000 miles on it. The Flex does now, but I mean it's still a good car. It's still got a while, dude. Yeah, I got my Up in Smoke shirt, dude. My Cheech and Chong today, chat. Cheech and Chong. Look at him, bros. Look at him. They're hanging out of the car. Have you guys ever seen Cheech and Chong? Just Up in Smoke. You guys ever seen that movie? Good movie, man. Flexers are really good cars for families, man, honestly. When his pal talk, he talks in literally, I think, what is it? 2 hours. 2 hours from now. 2 hours from now, man. Well, yeah, obviously, J-Flow, dude. I'm definitely a frugal person. Yes. Definitely a frugal person. Yeah, but I do. The only time I like giving money away is like charities, like people I'm looking up to, like things like that, man. Like that are kind of mentoring me. Like I do look up to other people as well, so I do like helping them out as well. I do love helping other people out, and doing things they love, right? Just kind of like you guys help me out here, man, doing stuff I love, right? Like it's the same way, same thing. Obviously, my kids, stuff like that. You know what I mean? Stuff like that, it's different, I feel like. Thanks for asking, man. Margin is very confusing, Corey. It really is, man. That's the reason why I honestly say I would stay away from margin. Unless it's like maybe the money's going to be in your account the next day, right? If you're waiting on like a deposit to happen, that money's going to be there, then margin's okay, but I would definitely keep it under 5% margin at all times, if you can. Don't like margin. A lot of people aren't disciplined. So a lot of people go to margin. You're seeing Ross give to charity. I have not, Charles. I'm not, man. Yo, thank you so much, Corey. Thank you so much for the $2, fam. Will the markets go up after 14:30? You're talking about 2 a.m.? Yeah, obviously. It could. Again, we don't know what Jerome Powell's going to say. It all depends on what Jerome Powell says. All depends on what Jerome Powell says. Honestly. Jerome Powell comes out and says good stuff, market goes up. Jerome Powell comes out and says bad stuff, market goes down. Jerome Powell comes out and says, you know, kind of just like middle of the road stuff. The market just stays where it's at, right? Then it'll go up gradually again. Again, I'm not saying be fearful of the market, right? Like right now, like, honestly, it's good buying prices. Good buying prices, man. If you want to bet against Jerome Powell saying, you know, if you want to bet and say Jerome Powell's going to say good stuff, you know, right now would probably be a good time to buy, right? The market's going to go up. Make some pretty good chains right there. People who spam. It's the way it is, man. People are definitely going to spam. Again, I'm not going to be able to see everybody's message. Yo, chat, we're 7 likes away from 100. Let's go. Make sure you guys are all hitting the like button. It definitely helps out. It helps, you know, maybe more people see this broadcast. Remember, if we get to 500 likes today, Rich is going to buy $500 at AMC, chat. So let's get to 500, man, for $500 worth of buy-ins. 500 likes. See, we can do it, honestly. I believe. If you guys are brand new, make sure you guys hit the sub button. That'd be heckin' nice as well, man. Get to 7,700 subs today. We're getting close to 8K. Getting close to 8K, chat. Yeah, a lot of these healthcare companies are going to pull back some right now. And Checkpoint, you know, it's not a healthcare. Obviously, it's charging systems, but the whole market right there is going to get pulled back. I mean, it's a tech stock pretty much, right? ChargePoint, you know, XL. Plug's getting pulled back for another reason, right? Plug kind of lied to their investors. So, you know, RIP Plug. When you lie to your investors like that, your investors are not going to be happy. So you've seen a lot of sell-offs, right? You're going to see a lot of sell-offs because of that. Sorry for my possible... No, you're good. You're good, Abel. You're good, man. You're good, brother. Don't worry about it. You didn't really spam that much. I think you only played it like twice, didn't you? I wouldn't really call that spam. 2 times is not bad. Now, if you came in like that one guy does, man, sometimes he spams like 7 messages at once. Good Lord, that's spam. 2 messages is not spam, though. I mean, I'd rather you, like, you know, obviously, like, spread those out a little bit. Like, maybe say it 1 minute, and if I don't say it, then say it again. That's fine. But, I mean, not a big deal. I'm not mad at you, brother. I don't get mad about it. Don't worry, I'm not one of those people. Deplug lie or miscalculate their earnings. They say, obviously, again, they say it was accounting error. They do say it was accounting error. But again, investors are gonna take that as a lie, no matter what. Doesn't matter if it's an accounting error, it wasn't their fault. Doesn't matter. Investors are gonna call that a lie, and there's nothing you can do about that, Melissa. That's the problem. Was it an accounting error? Maybe. Was it a lie? Maybe. I don't know. But investors are always gonna call that a lie. Big investors are always going to say that's a lie. Every time it's a lie. You know, it doesn't matter to them. They didn't get the truth, and they didn't get the whole answer. But to them, you've lied, and that's the reason why you've seen people pulling out a plug, right? And we can bring up plug real quick. This is reason why you've seen plug pull back so much. If you go back to say the 1 day right here, you go back to 5 day, honestly. The report started coming out obviously yesterday. Yesterday around here's when the report started coming out about it. You've seen a kind of a down period, and then aftermarket it got confirmed, and that's when you've seen the big drops, right? So it doesn't matter though to an investor if they don't get the right answers. It's a lie, and they're going to sell out every time. You're going to see those big drops. Do I think plug's going to come back up? I do think plug will come back up, but it definitely hurts it, right? It definitely hurts its reputation. Some people might not buy back into it because of it. So it definitely hurts its reputation, though. New ticker, unplug. I'm not saying plug's a bad company. I do think plug isn't a bad company. I just think people, took plug as as lying. At the end of the day, it's not good. FinTech ARC ARKF, in my opinion. I like ARKs in general, man. I like pretty much all the ARKs, but I like, obviously, fintech is going to be a, should be a grower in the going into the future anyway. It's definitely had some hits the last like day and a half because of everybody getting ready for Jerome Powell today. So you've seen fintech yesterday, you know, drop from, you know, what is it, like 56.50 all the way back down now to like $53.50. So you've seen like a $3 drop right there just in the past since yesterday. And a lot of that again is just like any of these other stocks right now, man. People are getting ready for Jerome Powell. I think that's one reason why you're seeing this like flattish kind of market today from even AMC. That's the reason why you're seeing this kind of like, you know, we did have a bigger drop for yesterday for GME. So them being up is going to be hopefully being up, man, because at 220 coming back down from like the 350 it was at, still lower. So them being up a little bit from yesterday is good, right? So you had a bigger down day yesterday for AMC as well. But both of them being up right now is not a bad thing. They're still kind of flat compared to what they could be. I feel like if the market wasn't weighing over them right now. I honestly think if the market wasn't weighing over AMC and GME, we'd be a lot higher on both of them. How you paper-handed your 2 GME shares. Well, I hope you at least made some money, at least. Hope you didn't sell in the red. Yo, thank you guys for all the likes, by the way, man. Remember, guys, at 500 likes, Rich is going to buy 500 more shares. He's going to post it in Discord as well. If you guys haven't joined our Discord channel, make sure you guys join Discord right here. Okay, you're up 95%, then that's, you know, I'm not gonna hate on you. You know what I mean? I can't hate on you, man. I would have dogged you a little bit if you would have sold in the red. With an extreme small amount of cash, GME or AMC, I only want meme. You only want the meme stocks? I mean, honestly, man, like I feel like either one you're gonna make money on. I feel like either one you could do money on. I'm trying to think, how much? What is a extremely small amount, right? Like obviously you can get more shares with AMC. I don't know what extremely low amount is that like. Is that like $20 or is that $100 or? I don't know what extremely low means. Money, gave 130 bucks. I mean, obviously you get more shares at AMC with that 130 bucks. I think with smaller amounts of cash, I honestly think AMC on that end. Again, this is not financial advice, by the way, chat. None of what I'm saying is financial advice. I'm just a nerd on the internet. I'm literally wearing a Cheech and Chong shirt, chat. Cheech and Chong, okay? They have weed smoke rolling out of the car. Came in, like, don't listen to me. I'm not a financial advisor. I'm only a physician. Oh, dude. Man, again, what I'm trying to say is make sure you guys are doing your own D&D. Make sure you guys are doing your own D&Ds. All I can do, man, is bring you guys Catalyst. I mean, do you want to listen to a guy who's wearing a Cheech and Chong shirt, who also wears like, you know, old school Nintendo shirts? I don't know. Yeah, I hope so. Going up in smoke. Oh God, Mike, don't say it, man. It's gonna go up. Yeah, dude, up. You're right, man. It's gonna go up with the smoke. It's gonna go above the flames. Above the flames, man. It's going above the flames today. I don't know what you mean. Yeah, my Cash App is JasonAllenMoney. Yes. What the heck is going on here? I'm trying to sign in, man, and the thing's like, no, can't sign in. Treasury rate yields are at 1.669, by the way. 1.669. Yo, Rich! Hey, Richard, thank you so much, man. Thank you so much for the $10 and PayPal. That also makes you the top dono of the day, man. That sir makes you have the biggest stonks in the chat. Yo, Richard, thank you, man, for the tip, though, brother. Seriously, it means a lot. It helps out tremendously. Every little bit helps out. I have my PayPal opened up now. For some reason, I get like the alerts on PayPal like freaking so late. I don't know why either. Should be like automatic. I need to go see like why. Did Pal grace us with his presence yet? Nah, Pal doesn't grace us with his presence for another like what, an hour or 2 hours pretty much. About an hour and like 45 minutes area. He should be coming out. Should be coming out, man. 2:30 p.m. Eastern Standard Time is when he goes live. So 2:30 p.m. Eastern Standard Time. Holy God, that was loud. Like I pulled up the broadcast thing for it. It's already like it already has some like broadcast stuff going. Oh my God, it scared the shit out of me, dude. I thought it was gonna be silent. All it showed was like the background of like of like the White House and stuff. It was so loud. Oh my God, it scared me, bro. Oh. I thought it was gonna be like just like a background, man. Oh my God. I put up the stream, like the stream for the Federal Reserve. And like, I guess it has like a pre-video playing. Oh my God, it scared me, bro. I'm not gonna lie, bro. I about jumped out of my chair, dude. Dude, you guys about saw me get up and... Oh my God, that was scary. And that was loud. Well, I won't do that again. I'm turning that... I'm muting that one. That's muted now, chat. That sharded, bro. Oh my God. I literally about got up and run, bro. Man. I see you pee. You literally about seen me pee myself, honestly. It looked like one of those, like, you know what I mean? Like those pre-shows where it just like shows like the White House, like a flag like flying in the background with no noise, nothing. It's just silent. Nah, bro. They had that thing cranked up full blast, like just like daunting music, dude. Oh, man. How's it seeing looking up close, dude? I don't know. Yo, what's up, though, Pony? Hope you're doing well today, man. Hope you're doing well, brother. Woo. That was scary, man. Honestly, heart pump. Heart was pumping, baby. Rick Scher didn't budge, dude. Nah, Rick Scher's never scared, dude. Rick Scher's always here. He's never scared. Thoughts on TradingView? You're talking about just like looking for charts on TradingView or like what? Are you talking about making your own charts for TradingView or? There's a lot of questions with TradingView. I mean, if you're looking to make your own, charts, you can do that with Webull, for God's sakes, right, man? Like, you don't have to pay some money to do that, but you can chart out on Webull as well. I used to use TradingView some. I used to look at TradingView, man. I just use I don't have TradingView anymore. I just use Webull now for pretty much everything. Right, I used to use TradingView, then I used some TD Ameritrade for a while for stuff. And then now I just use Webull for most of it. Ship? How's it doing today? Oh, Ship's up 2.5%? I figure Ship would be down today a little bit. They have good news or something? Man, they got 22 hours ago, they got added to top 5 penny stocks. So reopening from reopening for the reopening. Ship was in the top 5 penny stocks for a reopening play. So that's pretty good for Ship. They also got an outlook from analysts saying that their shares were undervalued. right now as well. So it's probably one reason why they're up right now. A little bit better than others, maybe. They're also going to be participating in the Invest in Maximum Group's inaugural Emerging Growth virtual conference. They probably got some good news off those things, man. Probably mine's bouncing. I figured they'd be down today with other stocks in its region, I guess, due to people waiting. Hey, man, good for shit, man. Good for shit. Good for shit, man. That's some good shit. I mean, I love me some shit. You know what? You know the funny thing is, like, I don't like it probably sounds like I'm saying a T word, because I don't like when I'm talking, like, and just like not really paying attention. Like, obviously when I say chat, I don't really pronunciate the T there. I just say chat, and you guys, it sounds like I'm saying Chad. But when I'm saying ship, if I don't put that at the end, it probably sound like I'm saying shit. It probably does, honestly. But when I'm talking, man, I'm like, who needs the pronunciations anyway, bro? We don't need pronunciations around here. Homie walked in and I was watching this. He said, "What are you watching?" I said, "The news." Hey, Benz. There you go, bro. There you go, dude. Hey, tell him you're watching the money market. Webull has denied me twice. It's been weeks. Wait a second. On what? Neon? On which one, Neon? I mean, if they denied you access, I would honestly email them, man, or even call them. They usually have pretty good customer service. For most people I know that's called in or like emailed them or whatever, man, they got their accounts like resolved really quick. Usually something really small and simple. Yeah, they have really good customer service, honestly, from what I've known anyway. Anytime I've reached out to them. Yo, I'm sorry. Yo, Fishing, I'm sorry, man. I feel bad for anybody that was like, had headphones on. I really didn't expect the federal stream to have anything in the background noise, though. They never have background noise, dude. It was just like, dun-dun-dun. I was like, oh my god, bro. What is going on here? It was kind of scary, dude. It scared me, honestly. Let's see. Fled's plot chart. Just plot. Blah, 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 blah. Alright, can I see the plots here, dude? Can I see some plots? 2019. What do I want to look at 2019 plots? County. Oh, here it is, right here. Here it is, man. I'm gonna pull this up, by the way. That way you guys know what I'm talking about here. Holy crap, man. That was crazy, though. Yeah, I pretty much did, Mike. It is bad. Yo, if you guys haven't, make sure you guys hit the like button below. Definitely helps out, man. Buying if good news is to come. I'll probably buy some more tech stocks at a low price they're at right now. Try to get some in before they go up dramatically. I think it's when we'll see the biggest rally. Like, obviously, some of these recovery plays, man, have been doing pretty well since, January. Recovery plays have been doing very well since January, really. I think they've outperformed a lot of areas in recovery. But I feel like I already have enough stocks in those. Starting to storm, chat. It's starting to storm. If I lose my power, chat, it's not my fault. It's not me fault. Alright, man. I want to pull this up real quick, though. You guys might be able to hear this on thunder. There's what I'm talking about by the plot chart, by the way, chat. So if you see this plot chart right here, these are economists, right? These are the guys that we want to listen to. This right here is what's going to move markets. So if this number, if you see these plots right here stay about the same down here, and a lot of people don't move up here, and say 2023, this is going to be good news, right? If you see these dots start disappearing down here, and you see a lot more in 2023, say it even at 0.25, right? Or even at somewhere around there, 0.3. If you see more dots up here, that's bad. That equals market going down. So that's bad. If you see more dots, on 2022, that's bad too. You want to see these dots stay right here, right? You want these dots to stay. These are economists that think that we should move the rates up for interest rates up in 2023. Now over here, obviously, most economists think we should be moving, interest rates back up to 2.5%, 3% area, 2024 or longer, right? 2023, 2024. This is fine, right? So 2024 and longer, 2024, 2025, 2026, that's fine. Dots over here don't matter. Dots over here matter. So if we see a lot more dots up in 2022 and 2023, we're gonna be spelling trouble, man. Spelling trouble. We're gonna be finding markets. Not gonna be funny. I'm gonna pull up chat over here on this screen. That way I can see chat. This right here is what I'm talking about when I'm talking about these charts. So this is a chart we're gonna be looking for. This chart right here, we'll be looking for this. Where's the other charts at in here? So like our GDP numbers, right? Our GDP numbers, inflation, unemployment, things like that. So if we see unemployment rates, say below 4%, that's also probably going to bring markets down some because lower unemployment equals the Fed. They think the Feds are going to raise rates, right? They think Feds are going to raise rates. Also, inflation numbers, we look for the inflation PCE inflation numbers as well. GDPs. If GDPs are higher than expected. So say this number, say 2021, 2022 is like, say 2022 is 4%. Say 2021's GDP is over 5%. That's bad. You would think it'd be good, but it's going to be bad because the people are going to be thinking, these people I'm talking about, honestly, the people I'm talking about are the big guys, right? The commercial investors like hedge funds, the suits. Might as well just call them the suits. They're all the suits, right? They're the ones that are thinking, interest rates going up. They're pulling out. That's what moves the markets, right there. So, not so good, man. But these charts right here, what we're going to be looking for in terms of projections. And again, mostly what I'm honestly looking at for me is the plot lines. This chart right here, plot lines. If we see a lot more plots up here, anywhere up, doesn't matter if it's the 0.25% or whatever, 0.3%, whatever that is, it's not good, right? If we see a lot more economists thinking we should move up in 2022, not good. But that chart right there, these right here is fine, right? Like these longer runs, 2024 longer, it's fine. This GDPs and unemployment rates and the inflation numbers, that's another chart I'm gonna be looking for as well to see that right there would move markets, right? That would make markets crash out. Would not be fun for those to be different. So those are the charts I'm talking about when I'm saying charts, what I'm looking at. Do you have insights on the short interest on AMC? I don't have like any insights in terms of like I don't have any new numbers. I do know AMC has a high short flow rate, yes. And as we've went up, people have been shorting the stock even more again. So you're getting to an area where people are double downing on some of their shorts. That's making the short rate go up a bit more on AMC and GME. Being such gentlemen and just stay in, LOL. Sorry, man, dude. That's what I'm trying to say, though. It's like us retail investors, we don't move markets like they do. You know what I mean? We might move markets, say, 3 or 4%, but they move the market like 10, 15, 20%, right? Because they're pulling out like massive amounts of money in shares at once. And then it also triggers people's, retail investors. It also triggers a lot of their stop losses, a lot of their trailing stop losses. It triggers those. But then you have another pullback on top of that. Just it adds up, man. IHOR. Which one's that one? Maybe I didn't find it. Is it LHR? I don't know which one that is. But again, hopefully we have some great news. We don't have to even worry about a down market. That's the best case scenario. That's what I'm hoping for. That to be what I'm hoping for. But if you guys are wondering why the market's down today overall, that's the reason why. Dogecoin to the moon. Yeah, let's go, baby. Oh, okay. I got you. I thought you meant like something else. Yeah, I posted about it yesterday in my video as well. That way people can see, man. And, you know, because I knew a lot of people probably weren't talking about the feds, honestly. Are we ticker puking again? Yeah, Mike. No. Hey. I'm telling you, we're going to have a lot of ups and then downs. Ups and then downs. Until JPAL comes. You're going to have people up and downing it. You know, you have a lot of sways in the market. It's the reason why I said, it's the reason why I made my title stock market swings today. Anytime, man, we have a lot of like a big announcement from like a Fed coming out, like JPAL coming out to talk, dude, it's always so swingy. The market's just so much swings that day. Every time, man. Doesn't matter. Every time it's a swing. No matter what. Yeah, Sundial again, man. Sundial is a stock that you can buy low and then sell a little bit higher. If you get Sundial around like $1.30, usually you can swing it back up to say like $1.60, $1.70, and then sell it again. If you buy enough shares, you can make some pretty decent little profits there. I don't think you'll see Sundial like way above like $2 or anything anytime soon, though. But I think you can definitely make some money there, dude. Be a hero or the villain, Ron? Dude, I know, bro. It's like, oh, I'm waiting. I'm like, oh, please, JPAL, please talk to us, baby. Like, say something good, you nerd.
Now comping all the way back to August of 2019, and you're right, January of 20 for tens, the yield curve tends to twos, 5.5-year wide. And if you consider right now that the Fed is trying to, in essence, not take away some of the requirements for capital that were designed to prevent some of the negatives for COVID when we were going through that period, the SLR, that's called, capital requirements, that's supposed to expire at the end of the month. And that's going to throw a lot of additional treasuries on the market for sale off of balance sheets. And guess what? That's probably been part of what has been pushing interest rates higher.
Rick, what if we get this?
Yeah.
I don't think we will, by the way, but you never know, right? I mean, these are human beings and they're prone to change their mind like everybody else. What if we get some sudden hawkish turn? I mean, not super hawkish, right? Go from a dove to a pigeon or something. What would the bond market and the equity markets likely do then?
Oh, I think...
Release the pigeons.
I won't even answer it, Brian, because you know what? There is just no way that's going to happen. That is not going to be a combination of possibilities today. Janet Yellen, ex-Fed chairperson, is now head of the Treasury. Her replacement is now obviously chairman of the Federal Reserve. And the two of them are not going to give up the dovish camp at this point in time and see everything that they have worked for, everything they have pulled forward, everything they have almost insisted be done with regard to fiscal stimulus. They're just not going to clear the zone now. The real question is, what's going to happen if we get closer to 2% and we see a real negative feedback loop in the equities and other investments?
Let's don't go to 2%.
Corporate securities.
No.
Are they going to ramp up the purchases? This is a game of chicken between investors and QE.
He's not wrong.
Yeah, and a $1 trillion game of chicken. By the way, a lot of birds mentioned there. Doves, pigeons, chickens. We'll see what happens. Hopefully the markets...
Yeah. All this foul language, Brian, we're getting in trouble. Yeah.
Foul language. Oh, you know, Rick, that was good. Appreciate it, buddy. I got nothing for him rest of the show. I quit. All right, so what about other parts of the markets and your money? Why don't we dive right in? Joining us now are Stephen Whiting, Global Chief Investment Strategist at Citi Private Bank, Subhadra Rajappa, Head of U.S. Rate Strategy at Societe Generale, and Julia Coronado,
good news, man.
Macro Policy Perspective.
Yeah, I don't blame you there,
so
Kirkpatrick. You can definitely do some good money on
Rick
it,
said,
swinging it.
Approximately a zero. No chance at all of any hawkish turn by the Fed today.
I agree with everything that Rick said. I think it's going to be very, very tricky at this meeting what the Fed says. In some respects, they have to sound optimistic, but at the same time, they have to be very careful in not sounding very hawkish. And that, I think, is going to be very, very difficult because, you know, since the last time they upgraded the...
We're just talking about the Fed's coming out soon, obviously.
Close to $3 trillion in fiscal stimulus, which means they're going
just
to...
figure out, tune in for a minute, man.
Forecast. They're going to probably reduce the unemployment rate forecast. But what do they do with inflation? So the bond market's very, very concerned about the what ifs, because what if they did believe and show in their economic projections that inflation is going to go higher?
Yuck.
Then they're going to have to adjust the 2022 and 2023 dots, you know, to sort of counteract that rise in inflation. Those what ifs are what the bond market's really concerned about.
Yeah, well, right
Ain't
now,
that the
Stephen,
truth?
if you look at those, and I hate talking about dot plots, but I guess they matter. There's one dot above. It's a flat line for this year, pretty much a flat line for next year with one dot up, I think, 25 base. I mean, it's ridiculous and everything like it. But should they just put out the same statement they did at the last meeting? Because if they change the language, even by a word here or a word there, the market's going to read into it.
Yep.
You have to really ask, is it the bond market or the economy that needs the rescue, right? We have a richly valued bond market. It's more rich around the world. I know that we've had a 40-year bull market in bonds where yields always came down and rarely stayed up for very long. But we've had yield curve steepening in every economic recovery, even prior to that secular bull market. And if the Federal Reserve wants to somehow stomp down on the long end of the bond market, somehow target long-term rates, it's going to take a lot of firepower, a lot of easing in the face of this. And as you just heard, we've just now had an additional $2.7 trillion in stimulus this year while we're coming out of COVID. GDP growth could be close to 6% this year. Inflation for the rest of the year.
Oh, man, I hope it's not like 6%.
You can see this already in pricing.
The GDP's 6%, Chad.
When you
Not
have
good.
these sorts of
Not good.
stimulus efforts, as we saw in Japan, there are going to be many times it's not going to be a permanent new rate of growth, but they're going to have to again articulate that we can suffer through this as a bond investor for a while, and in the long run they will do the right thing and normalize policy, but that's still way out there.
You know, Julia, I don't know if you ever saw the documentary Man on Wire about Philippe Petit walking between the World Trade Centers as well. I kind of feel like Jay Powell is that person on wire right now, along with the rest of the Fed. And, you know, an error here, an error there, given the trillions on the balance sheet. I mean, let's not forget, the Fed's balance sheet is basically double the annual budget of the entire United States of America. 6 or 7 unelected officials are running a balance sheet twice as big as 535 members of Congress. Do you think Jay Powell has what it takes to get from one to the other without falling?
You know, Brian, I think in some senses what Jay Powell has is an embarrassment of riches. For years,
you better, darn it.
Even the Fed has been hoping for
we're doing good today,
more
Lily.
effective fiscal support for the recovery, never got it, had to repeatedly do QE. Now, for the first
I'll be right
time,
back, chat. I'm going to grab a peppermint real quick.
That is going to
Fill my water
more
up.
effectively
You're back.
channel resources into the economy. And all it has to do is say it's going to be patient. And the Fed has what Powell has been reiterating lately, which is a little bit different from the market narrative. They have a very disciplined approach to parsing out transitory versus trend movements in inflation. I think it's not that hard to walk that line because they can say, look, we know, he's already been saying, we know there could be some pops in prices here and there, but we're focused on the trend, and the trend has been low for decades. They're definitely going to be more optimistic on the economy, more optimistic on employment, but the feed through into inflation over the next few years, over the longer term, and therefore policy is going to be considerably more muted. So I don't think it's that hard to square this circle. He can sound more optimistic and also say, but remember, these trends have been very low, and we're going to wait till we see it, and then we'll react appropriately.
I just wonder, Stephen, we're trying a monetary response to a global health pandemic and epidemic. I don't know if low rates are going to are going to put people back at work if their kids aren't in school. I mean, how do you increase the jobless rate or the working rate by lowering rates when a parent says, well, I can't go to school? Anyway, that's a different argument. Your clients want to know how to profit off all this, protect their wealth, preserve their wealth, grow their wealth. How are you advising them to do that?
Well, lots of moving parts, but for one, we are seeing mean reversion in the economy, in markets. So COVID is not unstoppable. We'll get past this. So some of the things that responded already, like small cap stocks in the United States, rallied 90% from April lows. But there are good parts of the world and other parts of markets that have further to go. U.S. real estate, Latin America stocks, United Kingdom stocks, and 14 times earnings, horribly held back by both domestic political issues, which are unwinding, 4% yields, and an industry that's been highly exposed and battered by COVID. So it's mean reversion in those things. Then you have to consider that as rates are adjusting upward, we're seeing some of the valuation excesses in tech roll off. But there'll be growth at the end of the day for those companies too.
One final quick one to Subhadra. Where do you see the 10-year yield in 6 months, Subhadra?
So our forecast for 10-year yields for the end of the year is 2%. We're already at our forecast for mid-year in both 10s and 30s. So I wouldn't be surprised if we actually continue to see rising yields over the next 6 months.
Stephen, Subhadra, Julia, thank you very much. We'll let you guys go and get ready because the main event's coming in about, 50 minutes or so. Thank you for your insight.
All right, Chad, I'm back.
Appreciate it. Take care.
50 minutes.
All right, we have so much still to do here on the exchange on deck. When you think of a, quote, value stock, do you think of Amazon? Probably not, but you should.
I mean, I think everybody knows that Amazon's a value stock right now. I mean, obviously it is. I mean, it's trading under, it's like where's Amazon at today? But it's actually, Amazon's been trading sideways for a minute now. Sorry guys, I was getting some stuff, man. Hey, NBC, what's up, Chad? Yo, what up, man? What's up, Brandon? How you doing today, man? Sorry guys, I wanted to listen to them talk about the Fed stuff real quick. So I figured I broadcast it up, man. I hope rebroadcast this while away from his chair is considered fair use. It kind of is. Kind of is. Because I didn't have it have the whole screen. I didn't have it have the whole screen, so I don't think I'll get in trouble for it. Now I could have, honestly, if it had the whole screen was filled with it, but I did have my market stuff in the background, so I think I'm fine. I'm not worried about it. I'd not be worried. Hope everyone's having a great day today, though. If you guys haven't, make sure you guys smack the like button below. Let's get to 500 likes today, chat. Remember, we get 500. Rich said he's going to buy $500 worth of stocks. Of the stocks, man. Of the stonks. Reminds me of playing Russian roulette as a teen. And I have a cookie, man. Also, I think we broke Scott. I say we broke Scott? What happened to Scott? I'm confused. What happened anyway? What happened to Scott? I'm confused. I was be confused. Is it? Oh, it's because of you saying you're going to sacrifice him yesterday? Yeah, maybe. I doubt Scott's actually mad about that. I mean, that'd be kind of. Here's how many monitors do you have? You're always looking around. Oh, 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. Yeah, I just have 3. Just one here, one here, one there. 1, 2, 3. I would like to have another monitor up here. That way I can have like CNBC or stuff like that in the background. That way I can flip through, be able to see really good. But for now, it's fine. I would like to. That's what That's what my hopes are, though, man. To get like at least in one more, maybe above, maybe at 4. Why'd you let me do that? What do you mean? You didn't even do it. I wouldn't say that was bad though, Brandon. It was just a funny thing. I doubt he's actually mad about that. I would really doubt it. I don't think Scott's mad about that. We don't have stocks in Valhalla. I doubt Scott's mad about something like that. Yeah, I thought you said you were the next to be sacrificed. No, I literally, guys, I would not be nervous about the feds. Don't be nervous about it. I'm just like, I'm just like, I'm thinking the best, but I'm also preparing. Here's what I like to do, man. When the Fed talks, I think of the best, but I also prepare for the worst. That's the way I play it, man. I don't want to be like downer about it, but I also want you guys to be like educated. Days when Fed talks are the days you listen. If you're in the market, at least. Those are the days you want to listen. But don't just because I'm like watching it. Stuff. More for me, it's about bringing you guys the news on it, right? Dude, and also I like to look into it a lot, honestly. Stuff that fascinates me, man. Okay, you guys might not get fascinated by plot lines and GDPs and unemployment growth and all that stuff, projections, but I get fascinated, man. Dude, this is the reason why, like, when people ask me, like, to deep dive a company or look into a company, I'm like, you guys realize, man, like, a deep dive into a company takes me hours to deep dive a company, like literally hours, man. I can't just look at a company and say, hey, look, this is a great company. I can look at the outside real quick and give you like a presumption, but I also don't know everything about it. What it's doing, how it's going to do. I don't get to break down the company and look into it numbers wise. Also don't get to break them down against other companies that are in their same era or area. See where they're at as well. So when I xpev supposed to actually sell a car buy? What do you mean? What do you mean, Amanda? You mean xpeng? Xpeng's already selling cars. Or are you talking about cciv, Lucid? Lucid's going to start selling cars at the end of July. Xpeng and Neo are already selling cars. LOL, I'm nervous, dude. I'm a little nervous too. Like these days when they talk, man, I definitely gets my attention. But I also don't like worry about it either, though. What do you mean, the 1 week? They didn't sell for 1 week, but they're already selling again, Amanda. Xpeng's been selling cars for a little bit now. They already have cars out there driving around, just like Neo does. Xpeng actually already kind of sells cars in Europe, some as well, already. Well, obviously, Darth. I think it's more the anticipation. I don't think it's nervousness. I think it's more the anticipation, right? It's like you're a kid, man, and like you're waiting for like your mom and dad, your grandfather, or whoever, man. You get the fireworks out at night, man. The big fireworks. You're like, come on, man, come on, nighttime. Let's go, baby. That's me when it comes to the feds. I'm like, come on, baby. Show me those numbers. That's me. Literally me. Yeah, Xpeng's already a company that's been selling cars. So they've been breaking their records every month. The only car coming right now that isn't selling cars right now that I'm invested in is cciv. Right? They don't start selling their cars until July, into July area. It'd probably be out throughout their talk, Mina. We could see a sell-off right before he comes out. J Powell comes out and starts talking. We could see a small sell-off in the market. People kind of anticipating bad news. Could also see a little bit of buy-up as well instead of a sell-off. And then if obviously if he's the plot charts and stuff like that are not what people want to see. The market's really going to start analyzing every little thing that it can analyze from him speaking, and that could cause a little bit of ruckus in the market. Yo, what's up, Average? What's up, brother? Hope you doing well today, man. Hope you're doing well today, though, Corey. When does he speak? Why did this pause for? Oh, wow. He speaks at 2:30 p.m., by the way. 2:30 p.m. Eastern Standard Time. 2:30 p.m. Eastern Standard is when he starts to do his thing. His thing. Pentagram for Tesla. Is Tesla having a sell-off again or no? Or is it going back up some right now? That's good, at least. Seeing some good buys in right here is good. I hope he comes out and says some good stuff when we get Tesla back above 700. You'll get NIO back above like $46, $47. We see all tech sector go back up. That's what I'm hoping for. Yeah, you seen a sell off a little bit earlier off that big rise. You know, pre-market we had a bigger sell off. People anticipating, you know, bigger sell off then in pre-markets. Then you had the uprise, and then you had the downturn, and then now it looks like it's going back up a little bit, maybe. I could bring NIO up. NIO's probably doing the same thing as Tesla's doing right now. Yeah, see, had that rebounds off that bottom earlier at $41, which is crazy buy though, right? At $41 bucks. NIO at $41 is really, really good buy. I mean, NIO right now is still a good buy, right, at $43. But I'm gonna refrain from buying right now until myself, at least. I'm just gonna refrain until he speaks. E-Hang's been going up and down a lot. I bought and sold that one a while back when it crashed down to like $30 or whatever it was. Crazy. Yeah, it crashed down like 38 bucks. That was back on like the 17th of last month though when I did that. We could have did that again on the 5th though. Could have bought again at 28 bucks and then rolled it back up to 50 or so. Good old He-Hang. Oh, AMC's volume? Yeah, we're at 47 million right now. 47 million right now. Definitely not the best volume, but at least it's trading sideways and not going down. He's just trading sideways, not going down. We haven't had, like yesterday we had a lot more sell volume than buy volume. Today it's pretty even. Today has been pretty even. How long you have to reframe? Shane, I'm personally just gonna wait until I'm gonna wait until after he gets done talking and see how the market reacts. Hopefully it's good. Hopefully it goes good though. I mean, you can take a risk, obviously, right? If you're betting that Jay Powell's gonna say all the right things, you could buy in, right? You could buy in, man, right now, and then profit, right? But obviously, if he doesn't come out and say all the right things, then you're not going to make a profit. You have to buy in lower on the other dip. Doesn't matter. Like to me, man, I already have plenty of stocks right now. I've been refraining from buying just because I'm waiting for this. If it does drop, then I'll buy. And if it doesn't drop, I'll buy then as well, because then I won't have to worry about the Feds RIPing us, and I don't have to worry about another catalyst until next month once the year-over-year inflation numbers come out for March. I mean, the market would come back up either way, right? The market would come back up. So it's not like the market's gonna stay down forever. It's just like, if I can get in at if it does drop, I can get in at a lower price. I might as well just wait and get in at a lower price. Been selling. You ain't gotta go too crazy, Nitro. Because again, man, if he comes out and says good stuff, the market's gonna go up. You never know. Honestly, again, you never know what's gonna happen. You really just never ever know. Good Lord, man. NRG, the Texas energy company that had the big, had all the crazy power outages and crazy stuff, man. They're expecting a $750 million loss related to that. It's their whole stock's tanking. Their whole dang stock's tanking, bro. I mean, it might not happen though. That's the problem, though, C-Bound. I mean, we can get really good news, and then you would see AMC, you know, pop up really quick too, right? You're betting against either one happening. Like, is that going to happen or isn't it, man? Who knows, man? That's what I'm saying. Like, right now, you're taking a obviously chance either way. I mean, it could be that way, Joe. But again, you're either way. Like, nobody knows what he's going to come out and say, right? Like, nobody knows what J-Pal is going to come out and say. I mean, he could come out and say really good stuff in the plot lines and GDPs and everything. Could be you know, like it was last time or great. And then you would see the market. I think you would see the market then just explode, right? You would not explode in terms of like evaporate, explode in terms of going up. You would see a lot of these losses right here get erased pretty quickly. Obviously, Plug might not get erased as quickly as others because Plug did have the scandal from their underwriting issues and accounting issues. But I mean, definitely some of these other ones, man, you definitely see all these evaporate and go into the positive pretty quick, honestly. I'm hoping he says good stuff, but I'm just going to prepare though. I always like to prepare for the worst, right? I like to think of the best, but also like to prepare for the worst. That's how I've always played the market. That's probably how I'll always play the market. Prepare for the worst. That way I'm prepared. And if it doesn't happen, I'm actually happy, right? I'm happy about it not happening. Like, thank God it didn't happen, man. Woo. But if it does happen, at least I'm prepared. Uh, 2:30, yes, 2:30 Eastern is when he starts. I think is when he comes out to talk. Yeah, it says watch March 17th at 2:30 p.m. FOMC, obviously press conference. You can also watch it, you know, I'm gonna bring it up here, so I'll bring it up on the channel when it goes live. We shall watch it. Definitely anticipating. I'm like, Don't see how the stock. Oh, dude. You don't see how the stock market gets worse? Yo, DJ, man, wait till J-Pal comes out, man, and says some bad stuff. You're gonna think you don't see how the stock market gets worse. It could tank. Not saying it's going to, man, but hopefully he says good stuff and it doesn't tank at all. Like, obviously, you look at the stock market right now, you're like, oh, this sucks, man, right? But, dude, I'm telling you, man, if he doesn't come out and say the right things, it could definitely be a bloodbath. Anybody that's been in the market at least as long as I have, would definitely know him coming out and saying something stupid. Or not something stupid, really, just, you know, obviously showing, honestly, just the plot lines in general, man. Plot lines are off. Any of those things, man. GDPs, unemployment rates for next year. any of those things are different, it might not be fun for anybody. That's what I do, Ben. That's what I do, man. I prep for the worst and I hope for the best. But I also want you, again, I want you guys to be educated, right? I want you guys to be educated about, you know, about the Fed and like, you know, what catalysts are here, man, for, you know, for every one of your stocks, not just AMC and GME. Because I don't think GME and AMC would get hurt as bad as others would. Since they're kind of like those hype, you know, glory stocks right now that, you know, people are just, you know, going at it. But again, if one of these bigger guys, like say Vanguard, pulls out some of their funds, you know, that could drop AMC, you know, pretty significantly, right? You could see a drop from 13.15 to like 11.15 or 11.30 or 11.50 or whatever. You definitely see a gap down. I don't think it'd be as big as some of these other ones, though, right? Some of these other stocks could be gapped even harder than that. But also about option buys, Amanda. I think options are good. I don't do short-term options, though. Short-term options are too risky for me. It's too high risk for my blood. If I do option trades, it's always distance, right? I give myself some good time. Give myself good time on that. Yes, you pay a little bit more, but at least I have ease of mind. And if you haven't used options, use a paper account first. I don't want you to lose money on options because you don't know what you're doing. The options aren't bad and aren't like crazy, but again, I don't do a lot of options myself. When I do options, I make sure I'm 99% sure I'm going to make some money, and I also do decent future. That way, I give myself plenty of time for that stock to come back up if it does say to fall or whatever I'm doing it at. Right? I give myself plenty of time. Plenty of time. Like I bought some options for Tesla when it crashed, you know, not that long ago, right? And even at the 555, I bought them towards the lower, but I put a 650 target price, and I actually bought those like months out, just in case. Just in case. Even though I thought it'd come up sooner, but just in case, I gave myself time. Gave myself time to do it. But the same thing when people talk about buying warrants for super cheap. Warrants have a lot of risk to them. Even though you bought super cheap, there's a lot of stuff that goes into warrants as well. But I would recommend a paper account first for that kind of stuff. If you have no experience in options, I always recommend a paper account. That way you can get used to it, know what you're doing. Doing first, at least. Yes, Let's no they got dividend. Dividend stocks. Dividend stocks usually pretty good. Usually they stay kind of steady. Semiconductors. I think I remember looking at this one. Oh yeah, this is the one about. Is this like company that's obviously like getting into a semiconductor or chipset company is good, honestly. Because you know they're gonna need a lot of chipsets. Even like Samsung come out today and said their new Galaxy Note is in jeopardy because of the chipset shortage. So you know when you got Samsung coming out and saying, "Hey, look, our phones are gonna be delayed probably. We're going to have lots of shortages because of chipsets." Never a good thing. Buying into some of these chipset companies are not a bad idea. This right does give you a little peace of mind when it comes to dividends, at least. That's a pretty good growth, too. You figure have more growth. You'd figure. I would maybe wait a little bit, though, until Jerome Powell speaks. I'm going to preach caution on any buys today until Jerome Powell speaks, honestly. But it's not a bad idea. Yeah, I think I've looked at that company before. Can't remember, but I'm 99% sure I've looked at them a few times. No experience. I've been looking at it since some stocks have some somewhat predictable. Yeah, I feel you, man. Again, just make sure you're... I would honestly just start out with it, because at the end of the day, you're going to learn more doing it yourself. That's the reason why I say paper accounts. That way you don't have to worry about losing money. It's just paper, right? It's like you could have made a lot of money, you know what I mean? Or you could have lost a lot of money. At least then you're like you're getting the reps under you. Again, 99% of people don't do option trades. I'd say like 95. Most investors don't options, right? At all. So you're not like in the out crowd. But just make sure you've done your research and know it's going to do good, and also give yourself time. So you can execute those any point as well. You sold your ZOM, Amanda? Why'd you sell ZOM for? I don't have ZOM, by the way, so I was just wondering. I has no ZOM. But I was just wondering, though. I just feel like the risk is there with ZOM in terms of, like, if their true format systems don't sell, it's just like at $2, I feel like you could lose a lot of money too, right? If it doesn't sell good, then you're going to see the stock, go back probably to at least $1 or so. Backtrack quite a bit. But if it doesn't and it sells good, you definitely can make some good money off of it too. It's called paper hands. It's called Jerome Powell, Mika. It's a Fed day. Fed day is paper hand central. Feds come out and talk, paper hands come out. Every time. Know that if you hear the Feds are going to be talking that day in terms of, like, bigger news, so you're probably going to see you're probably going to see some red in the market that day. Probably going to see red today. And it's pretty much what we've seen today. Kind of what we've seen yesterday too, though. Oh, you know that squeeze hasn't happened? I mean, definitely there's a squeeze there, yes, Javier. But the stock can be squeezed again because a lot of people that shorted that stock re-shorted it, and you got a lot more shorts on top of that, right? And obviously you have a setup, man, with a heavily shorted stock. With buy volumes raising that price up, you can have another one, kind of like with what happened with GME, right? Like GME, kind of double squoze as well, right? It went to like 550 something bucks, fell back down, then went back up to $350 the other day. You could have a double squeeze on a stock. I will agree though. With AMC did squeeze a little bit that day. Could have went higher though if it wasn't for the market hurting it, right? I feel like AMC could have probably hit 35 or 40 bucks, 35 or 40 bucks before it would have came back down some. How do we know? Okay, wait a second. Let's see. Yeah, I feel you, Mika. For me, I don't sell, right? I don't sell my stocks. I literally just sit on them. I don't buy anymore though. Like right now, I'm not buying. Right? I'm gonna wait till after Jerome Powell talks, and then I would buy more. That's kind of how I play these days. I'm like, well, I'm not buying. I want to buy because the market's down, right? You know me, like when the market is red, I'm buying. I love red days. There's just so many good buys out there right now, but it's also I don't want to buy because what happens if the market falls more, and then could have bought at a lower rate again. So I'm just like, I'm just wait it out, see what happens. If not, it's not the biggest deal either. Because it could just be more of a, kind of a straight across day too. If Jerome Powell comes out and it's just like kind of like meager and it's kind of like what he said last time, the same stuff. If the graph's pretty much the exact same, GDPs are the exact same, you see more of a flat market as well. Oh, Mika, yeah, I think Tesla's a great buy. You know what I mean, Mika? Like Tesla's a great buy, NIO's a great buy. There's so many great buys right now in the market. I'm not saying they're not good buys, and the market will come back up. It's just, obviously a lot of people want to get in at a lower point. You gotta remember, the people that you see selling right here, a lot of them aren't retail investors, right? These are bigger suits, man. These are people with the big bucks that have been pulling out. isn't really retail investors. A lot of retail investors don't really get, you know, how the feds move the market. A lot of retail investors don't get, you know, plot lines. They don't get, you know, how the GDPs and everything like move the markets. All they care about is investing their money. A lot of them don't pull out a lot. It's a little different. Wee bit different, at least. Like some people do, you know what I mean? Some people do for sure, but not everybody. Oh, I got you. I don't know if I would. I mean, to me, how I do this, man. Would you sell Tesla right now as it's flat? I wouldn't sell Tesla right now. If Tesla was to fall, I'd buy more Tesla. Here's my philosophy when it comes to the market. Red days you buy, green days you fly. So you're either buying or flying, and by flying, you're riding that stock, right? I'm a buy the red day and fly the green. So red days buy, green days fly, right? That's my philosophy when it comes to the stock market. I'm a red day buyer and a green day flyer. Pretty much easy layman terms of how I play markets and how I've been doing it for the past, 8 and a half years or so. Even if say like a guy came in yesterday and was asking like, why would he buy a stock? You know, why would he buy? Say he bought a stock at say $8, right? And the stock went to 16. He asked me why he would buy the stock when it dropped down to $10 and it brought his average up. Now I was like, why did you buy the stock at $8 if you won't buy it at $10 when it's went up to $16 and now it's back down to 10 because of the market going down? It's not that your stock did anything wrong. Like, why not? Even if it averages you up, you still believe in that stock, right? So if you're still buying at $10 and you believe that stock's going to go to 16 again, you're still making $6 on that $10 a stock you just bought. Like, yeah, your average buying price went up to say $9, but who cares if the stock's going to 16 again? Like, what's that matter? So whether you're cost averaging down or even if you're buying in again, like when I do NEO and other stocks, like my cost average goes up. To me, it doesn't really matter so much because that stock to me is going to be worth a lot more in the future, right? So I don't care if the market pulls back, I'm going to buy. The same thing with Tesla, right? Like every time I buy into Tesla, every time I buy into Tesla, man, I just continue to buy in it because it doesn't matter that my stock price my average buying price is going up. What matters to me is that the future price that I know it's going to get to. That's the way I look at it, at least. Tesla is a lot. Oh yeah, I think any of your EV plays, any of your like alternative energy plays, I think those are all future plays that you should just be holding on to, no matter what. You know, whether that's autonomy stuff or whether that's even some LiDAR stocks or any of those type of stocks, right? Like even my fintech stocks, I'm holding on to, right? Say like my PayPal's, my Payoneer, which is FTLC, which hasn't even become Payoneer yet in the ticker. But like those kind of stocks, man, I'm just hanging on because like I think those are gonna be great in the future still. They're gonna continue to go up. Yo, Shane, preach, brother. That's just how it is, man. You said make a t-shirt, dude. Red day buy, man. Green day fly. That's it could definitely be a t-shirt though. I don't like to sell. Again, I don't want to pay sales. I don't want to pay tax on it. Honestly. You know what I mean? If I can just continue holding as long as I can hold, I'll just hold as long as I can hold. Now, again, if it's like a day trade and I'm doing really good on the scalp real quick, a lot of times, if you guys are in my Patreon, you see me do day trades, and I'll roll that money I made into another stock that I have, long-term impressions on. I do that a lot. Like I scalp stocks a lot, man. Just to take that scalp money and throw it over into one of my longer-term more convection plays, right? I do have to pay tax. I do have to pay more taxes on that, but sometimes, you know, when I do that, it makes more sense because I can, you know, roll that over and make more money in the long run. So do that a lot as well. Yo, what's up, gang? What's up, man? Hope you're doing well today. I hope everyone's having a great day, though. Obviously, again, I don't want people to be scared of the stock market, though. Just because the stock market falls doesn't mean it's going to come back up. It's not going to come back up. It doesn't mean you can't average your price back down to even lower depths, right? And just because the feds are going to come out today doesn't mean the feds are going to drop the stock market. It's just like you better be prepared. Better be prepared, not surprised. Yeah. Rather be prepared, not surprised. Yeah, what's up, Zello? We're doing a great day today. If you guys haven't, make sure you guys hit the like button, man. Biden taxes are heading north. Dude, it's still at 28% is not that big of a deal, dude. I don't think so. I don't think it's that big of a deal, dude. You gotta remember, man, back in like the 60s and 70s, like the corporate tax rates were crazy high. 28% still not that bad. Like what was the corporate tax rates like back when like Bush and them was it like 33%? At one point it was like 33%, like back in like the early 2000s. I don't know. I think that would be more of a short-term kind of downward turn. It would go right back up after that as well. And we don't even know if that's even going to happen yet. That has to get approved by, like, you know, the Senate and the House and all that stuff, man. And there's a lot to it, dude. There's a lot to it. Bush was 35, man. Yeah, it was a lot, dude. Like 28% still not that crazy to me. I don't know. It was really high at one point. It was way high, right? Like 28% from 21 or 22. It's not that. I don't know. I think people are kind of like, obviously, I think the suits will try to crash the market a little bit because of it. Then they'll buy right back in and shoot right back up. That right there, obviously, like, it's obviously a catalyst for the market to go down in, but I'm not as worried about that. That's ways off for me a little bit. I'm not gonna worry about that right now, especially. But we've been way higher than that before. Way higher than 28%. Yeah, it's been a lot. It's been a lot more. I think like back in like Reagan days, like what was like I think Reagan, maybe was it Reagan? Corporate. At one point it was like crazy amounts. 20% obviously. Let's see. Kind of see what was it back in like the 70s and 80s though. It was crazy back then. Yeah, 48%, man. 48%. It was ridiculous high back in 1970s. So like, I don't know. I still think 28% is not like ridiculous. I think that would be more of like a temporary fall, probably. I don't think that's going to hurt the market overall long term at all. Losses when you pull out, man. That's why I never pull out. Yo, Mika, yeah, that's for sure. You got CCIV at 23. So 23 bucks on CCIV is like stupid good. I think CCIV under 30 bucks is great, right? Especially if you're holding long term. I think it's really good. If you guys haven't, make sure you guys hit the like button below. It definitely helps out a lot. It helps out with the hedge funders, man, with the down pointers. SLGG flying, yeah, it's probably gonna go up and down a little bit today. Like I said, man, there's definitely gonna be some plays. Definitely gonna be some plays here and there. Some plays that make some monies. I don't know if I'd jump in at that price point it's at right now though. $8. Feel a little bit too much rich for my blood to try to make money at that point. Who knows, man? It could go back to $9. Who knows? I went in then out of the HCM made 3%. No, nice. To me, man, like 3% gains, like for me, is like, dude, it's hard for me to justify the taxes on it. That's my only problem. Unless I'm rolling that money over into, say, another long-term convection stock that's going to grow money anyway, then it's, you know, it makes sense. Like the other day, we bought and sold like, you know, like KMPH, and then I rolled that money over into like some Neo and some of my xpeng and stuff like that. Then it kind of makes sense for me. I'm just not a big. I just hate paying. You know, I hate paying the short-term tax rates. Econ 101, man. Econ 101. I feel like there's a lot to be done before any of that even ever happens. Right? You have to go through a lot to get all that stuff passed. No, I feel you, Joe. I feel you. I mean, if you're just making some money, just make sure you're putting money back for taxes, though. Because short-term corporate tax is a lot. A lot of people that start out trading, they don't really get like short-term tax rates, and then they get screwed at the end of the year because they don't know they don't know that you should have put a lot of money back for taxes, right? And you know, that bats a lot of people in the butt. Bats a lot of people in the butt. So just make sure you're putting money back for taxes. No, taxes are due if you sell. Taxes are due if you sell, not if you withdraw. Selling, your taxes due as you sell. You sell a stock, tax doesn't matter if you pulled it out or not. You still sold that stock. The IRS doesn't care that you put that money into another investment or you put that money back into your account. Anytime you have a sell order, some of that money is going straight to taxes. That money is going to taxes. It all depends on like how much like you're making and like filing for, yada 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 yada. There's a lot in there, but just make sure you're putting some back. It's obviously taxed as ordinary income. So depending on how much you make, you know, obviously on that income is how much your tax rate would be. But yeah. Yes, taxes are calculated on your profits, Brennan, yes. Taxes are calculated on your profits. So say you put $100 in, you know, that $100 you put in, you already paid tax on. They're not double taxing on that. You're just getting taxed on the profits. So you say you put $100 in and you make $100. You would be taxed on that $100 that you made, not the $100, you know, the $200 pretty much, if you were to sell. IRAs, no. IRAs, like you're not taxed on IRA money. On your IRA gains, you're not taxed on, unless you pull that money out early, right? If you're pulling out your money early, then you could be. If you're not pulling out for the right reasons, right? But your money you gain on a stock, you're not getting taxed on. Capital gains tax, though, is what you would be taxed on if you pull out, if you sell. Say you bought a stock and you sold it for a profit. Obviously, you'd be taxed on that profit, capital gains tax. But yeah, Roth IRAs are perfect for that, right? Like Roth IRAs, I think everybody should have one. You have one on Webull, right? You can open up a Roth IRA account. You can have a traditional account or the other Roth IRA, and you know, go from there. Just know, a lot of people, I see this every year, man. People buy and sell stocks, and then they get caught like not having put money back. You can also write off $3,000, Mika. Yes. So if you have $3,000 in losses, you can write that off. Capital losses, $3,000 on your losses in stocks. Yeah, let's get to 200 likes, man. I like that. I like that a lot. Yeah, max. Yeah, $3,000 is max you can write off, though. $3,000 is max you can write off. So you can hedge against a little bit. Right, you can hedge against it a little bit. You know, sometimes at the end of the year, I will actually sometimes I will sell some of my stocks at a loss, just to get that $3,000. Again, man, sometimes it makes sense to do that. Sometimes it makes sense to do it. Not all the time. Sometimes it does make sense to get those benefits. Especially if I can just take an underperforming stock and I can roll that money. I can roll that money from that underperforming stock over into a stock I actually believe in more and make more money there. Why not, right? I say why not to that. It's not called paper hands. It's called being smart hands. Smart hands, man. Yo, what's up, Floron? How you doing, brother? Oh, you're doing good, my man. Hope you're doing well today, Flo. Yeah, I appreciate everybody being here, man. I also appreciate anybody that's hit the sub button today. Anybody that's hit the like button. All those things definitely help out. Hey, we're having some good lessons today, dude, on corporate taxes and how the Fed could, you know, move markets, dude. This is the stuff that gets my brain moving. Nerd hands, man. Nerd hands, dude. Hey, sometimes you gotta move some capital, man, to be smart. Through the pandemic, you can claim the same loss for 5. Yeah, it's true too. True too, Raw. There's a lot of stuff that changed a little bit here and there, man. Due to all that. Yeah, 30 minutes, man. 30 minutes. Sure, 30 minutes. Let's go to. It's on their YouTube right now. Wait a second. Should be, I think they're going to be streaming it live on their YouTube as well. I have it up either way. I have both of them up either way. "30-minute, boys. J-Pal. Pow. 30 minutes on the J-Pals. That's a 1 day. I was like, what is going on here? Yeah, Neo had a pretty good buy right there, though. Right? Shot up pretty good little cents. Now people are selling again. This is what's happening, guys. I'm telling you, I told you guys, we might see a spike in stocks right before J-Pal comes out and talks. Just to see maybe another sell-off again. Everything's shooting up a little right now. So I'm telling you, man. It's the reason why I said. That's the reason why my title is called "Stock Market Swings Today?" Question mark. Right here, dude. You can see a lot of buys, a lot of sells, a lot of buys, a lot of sells right before J-Pal starts coming out. What will the fox say? What will the fox say? Yo, thank you guys for all coming and hanging out, man. Again, if you guys haven't, make sure you guys hit the like button below. Definitely helps out.
This year, talking about those famous dots. Where are the Fed officials when it comes to the outlook for rates? 4 officials now see 2022 rate hikes. That's up from 1 in the prior, that is the December projection. 7 officials see 2023 rate hikes. That's up from 5. But still, there's no change in the median because only a small number continue to call for those rates. Let's get to the statement now. The Fed saying, or a new change in the statement, that economic and employment indicators have turned up recently, though sectors affected by the pandemic have remained weak. Fed continues to see inflation running below 2%. That is its 2% target, and using some boilerplate language from
inflation below 2 is good, though.
Using its full range of tools. The path of the economy depends on the course of the virus, and policy will remain accommodative until the federal. This
isn't bad news so far on this stuff.
Asset purchases will continue as it said in the past until substantial further progress has been made. The decision was unanimous. Tyler.
All right, let's follow up with a couple of questions. On inflation, they see for the full year, even though it's running below 2% now for the full year of this year, 2.4% inflation, 4.5% unemployment this year, dipping to 3.5% by 2023. Right. How close are they really, and what is the implication for policy? How close are they really to that dual mandate imperative that they want to hit, which is inflation of 2% or maybe a little above, and full unemployment, which is, I don't know what it is, 3.5%, 4%?
Well, I have to amend your question, if you will, Tyler, with all due respect.
Sure.
Remember, the goal is to aim for inflation above 2%.
Sorry, Steve, still fully don't get it.
So maybe it hits that inflation goal, though it does go back down.
Boost GDP forecast is 6.5% from 4.2.
2022 and 23.
It's not the best.
And it gets to 3.5% unemployment. Now, I have to take a guess or a stab and say that's their goal, right? Getting back to the prior low unemployment rate. So that doesn't happen until 2023. So the dual mandate, if you take these literally and you make some assumptions about where their goals are numerically, they don't hit the dual mandate till 2023, and they don't
start seeing some sell-offs
really
a little bit.
Raising rates then. The median forecast for the funds rate in 2023 remains 0.1%. Their longer run forecast, longer run goal,
look at this real quick,
is 2.5% for the funds rate.
So let me ask you a quick follow-up here. You said that 4 of the members expect rate hikes, the first rate hike to be in 2022, next year.
That's not good.
And 7 are predicting it for 2023.
Not good.
How big a difference is that from
Not
just
crazy.
the last meeting? I think you said
I
there
think
was
that's
only
crazy.
one who was going to go on the record as saying rate hikes were coming in 2023 or 2022. I've forgotten.
2022. I've got to look at 2 separate documents here, Tyler, if you don't mind, and I will tell you exactly what the story is. So there was 1 prediction for a rate hike in 2022. That's now 4.
That's
so
now 4.
3 became brought it forward, and there were 5 forecasts for 2023 rate hikes. These are back in December, obviously the last projections, and now there's 7. So obviously
how big a change is that? Put that into a context. Is that more than people expected? Roughly what you might have expected? And how is it fit in historically?
I think it's in line.
I think it's terrible.
I think it's in line. Look, Tyler, during the pandemic and in the middle of the pandemic, we had nothing but doves on the FOMC panel. I think now, you know, David Kelly was talking before about, is it 9-9? I think now what we're seeing here is a little bit of kind of, you know, separation back to maybe some traditional stances that some of these FOMC members took, which is you're going to have some members are going to be more hawkish. They're going to want to move a little faster. Some are going to be a little more dovish. I think when you have situations like that, well, you ask the most important question, where's the chairman? And I think the chairman right now is very dovish when it comes to wanting to keep interest rates down, keep policy in place until they achieve their dual mandate. It's significant. There's a discussion obviously going on. There are differences of opinion, but when the median doesn't change, it tells you that the full weight of the board remains behind this dovish policy.
Hang on a second, guys. I'm trying to find something real quick, too.
Courtney.
Thank you, Tyler. Steve, stick around with us. I want to get back to our panel for the reaction. Mona, there's a lot to work with here. Where do you want to go? You want to talk about the inflation expectations or the policy to remain accommodative? I guess that's not a super surprise.
Let's bring this chart up real quick. Chat. I need to find it real quick. Go to Feds. Let me bring this up. We can look at this. We can look at the same app we looked at a minute ago, but we can compare the two. Now we can see the differences. We can see differences, man. We'll leave this one up. A Fed Reserve. I don't see chat right now, so I love you guys, but I'm also bringing up I'm bringing up the plot charts. They just got released. Oh, Fed. Federal Reserve, where's your plot charts? Here they are. All right, let me pull up chat again. I have chat. There we go. Sorry, guys. I'm bringing this up real quick. This is a new plot chart. We can look at last plot chart versus this plot chart, right? We can look at these together and we can plice these together. Now the market might not do anything really until JPAL comes out. But honestly, this isn't terrible news though, right? Let's see. What was their Federal Reserve 2022? Let's see. GDP, it's 2025, and you can definitely see the difference. Now again, a lot of people aren't going to see this until, you know, a little bit later too. All right, if we bring this up real quick. This right here is the new plot chart, right? This right here is, well, this is the old plot chart. So you see this old plot chart? Let me get this one back up, okay? You see 2021 in the old plot chart said 4.2% GDP. 4.2% GDP. In 2022 had 3.2. They still pretty much made 2022 they made it 3.3. Not too big difference there. 2021 they made it 6.5 though. The 6.5 GDP for 2021, which obviously, you know, you're gonna have a higher rate because 2020 was shut down. So, you know, in 2021 they're expecting more people to be out, you know, doing things. So obviously you're gonna have a higher of an uprise really quick. 2022 it starts settling back down though, kind of like where they thought right here. 2022 they said 3.2. Now it says 3.3. 2023 says 2.4. And they're saying 2022 is 2.2. Longer run 1.8. 1.8 is there. Unemployment rate. What is that unemployment rate? It said 5.0%. Now they're saying 4.5. 4.5 is not bad. 4.5 is not bad. I thought under 4% would be not good because obviously I would rather people not be unemployed, but that would have scared investors, spooked them more, thinking they're going to raise rates higher. You had 4.5 for 2021 versus, you know, they're projecting 5.0 for 2021. Inflation rates, they had 1.8 last chart for PC inflation rates. Now they're saying 2.4, which is kind of in line with what I kind of thought. Honestly, I thought around 2.0-ish or a little bit maybe above. Obviously, you got people going out and, you know, spending a lot of money that obviously last year, so 2.4 is not terrible either. Those right there aren't bad numbers. The GDP being at 6.5 is probably not the best thing. People are thinking over 6 would be not the best in terms of like people looking at it, but you know, 0.5 over is, I don't think that's like sickening news. You can kind of see some of the market responding to some of these numbers, which we don't have drone pal out yet either, right? Let's pull down to the plot chart. Look at the plot chart. Okay, here's the plot chart. They have an arrow. They made an arrow. Do you think that was on purpose, chat? Okay, here's the old plot chart. Down here. Here's the old plot chart. So they had 3 down here at 2023. Obviously, they had 5 altogether out of line here, right? They had 1 at 2022. You bring this up, they have 4 now at 2022 instead of 1 at 2022. It's not the best news in the world, right? But it's you know, it's still lower than I was thinking would hurt a lot. Now I think if we would have seen like 6, I think we'd have seen like 6 here, that would have really been not good. We had what? 1, 2, we have 5, 6, 7 here. They had, you know, what, 5 before. So only having 2 more there is not terrible either. I thought if they would have had like, you know, like 9 here, that'd have been really bad. But they don't have like 9 there, right? It's okay for this. The longer run's fine, right? Anywhere from 3 to 2%. That's, you know, it's normal, right? That's where we would be if the economy wasn't like, you know, in a tathers. That's honestly not bad news. Honestly not bad news, but I'm also kind of scared that this could be Fugazi in the market right now. And then when J-Powell comes out and talks, you know, the market might go down. We'll see, man. We'll see. I don't think there's anything bad there, though. I don't see anything like really bad. To be honest with you. Let's take a look at this chart real quick, because you see this last time, which is the change in the real GDP, unemployment rate, right, going down. It's not bad either. Change in GDP going down, obviously unemployment rate doing about the same. So they got an employment rate percentage. 2020 obviously was high. Then they have the blocks going forward, right? You got your blocks right here going forward. Same thing here. You got blocks going forward. I don't see anything bad there. But I'm also still kind of cautious though that J-Powell's going to come out and like it's going to be like nah. But I mean, right now the market's acting good for the most part. There's definitely some stocks going you know, a little bit cray-cray, but I don't see anything there that's like bad. I don't see anything there that's really bad. independent day trader. Does that mean I am unemployed? Wait a second. I'm a full-time independent day trader. Does that mean you're unemployed? No, I don't think that means you're unemployed. If you're making money through day trading, I don't think that means you're unemployed. I mean, you're a day trader. You're taxed the government's going to tax you as a day trader, right? So you're going to be, it's pretty much your employment. Pretty much your employment, right? There's a lot of big buys coming in right now though. But I got an indicator that tells me like when buys and stuff are coming. There's a lot of them. There's lots of buys. That's a good positive note as well. Well, let's see. But legally though, like for unemployment stats, I don't know. Honestly, I'm guessing that government wouldn't count you as unemployed though. They would count you as a day trader. Make some money this year, wait everyone to freak out next year and buy. I mean, yeah, obviously. I don't think there's anything bad there. I don't think there was anything like super bad there. And any of the numbers I just read were like terrible. Could have been way worse. Way worse. And it's reason, I think it's the reason why you've seen the market kind of respond right there pretty good with it. Good news, Joy? I think it's pretty good news, man. I don't think it's anything bad. Honestly. I don't think there was anything bad that was like super bad that was just like, you know what I mean? Obviously the plot chart was had more people like in 2023 and 2022 with wanting to raise rates. That's never good. That's never good, right? But I mean, it wasn't like there wasn't like a ton of them on there, right? It wasn't like so many dots that was just like overwhelming there. You're not actually looking for unemployment and don't have a job. You're not counted. Yeah, I was going to say you're not really counted as unemployment to the government unless you're like looking for a job and getting unemployment. So there's a lot. Unemployment numbers are probably higher maybe than they seem because there's a lot of people that don't have unemployment and a lot of people that don't haven't even applied for unemployment or applied for unemployment didn't even get it. Unemployment numbers are probably a little bit higher than you would expect. But if you're not actively looking for a job, then you're not really unemployed to the government. Neo's green. A lot of things are green right now, which is good. Which is good, man. I figured if we got some decent news, we'd see like some pretty good gains right now. I'm still kind of scared, man. I'm still kind of scared. Like we don't have the full story until J-Pal talks. Right? We don't have the full story until he talks. The plot lines aren't bad though. Plot lines aren't bad. They're a little bit worse than they were before, right? You had, how much was it? Like you had 5 last time saying they want to raise the interest rates in 2023. This time you had 7 saying they want to raise interest rates in 2023. Last time you said you only have 1 person say in 2022 they want to raise interest rates. This time you had 4 people though say they want to raise interest rates. So that right there is not the best news, right? It's not like the best in the world, but there's still a majority that said they didn't want to raise rates until 2024 and after. Majority is still there. Your GDPs were up, to 6.5. Obviously, anything over 6 is not good to be looking at. But 6.5 is not much over 6. It's, a half percentage point. They were projected last time to be at 4.2. So you're still up quite a bit from that 4.2 to 6.5. Unemployment numbers didn't drop drastically. I thought under 4% on unemployment numbers would have been bad. We only dropped to 4.5 from the old estimate of 5.0. So having a 0.5% drop back in that estimate's not bad either. It's not like it's in the world there. So I don't think there's anything there that was like bad, man. Honestly. Yo, Nitro, dude. What's up with the AMC share recount? Whenever they do the recount, what day is it at? You guys know the day. I don't remember off the top of my head, but they do it. They're supposed to be doing a share recount still. Yes. That doesn't mean they have to count every single one. That's what people really don't get at. But they'll probably have like a small sampling at start. It's like a trial, you know, like a phase. They'll go through and see how far those numbers are off. And then if they're like crazy off, and then they would probably do a recount of all. Kind of like if you have like a, you know, kind of like if you had like a, you know, like a recount of like an election or something, pretty much. Recounting votes. This first small batch is really off. You're going to definitely do it then. Go to the bathroom and come back to some stuff. What happened, man? I thought he speaks in 10 minutes. He speaks in 10 minutes, but you remember, these things get put out to media sooner than that. So these things get put out sooner. So we have numbers. We have the numbers there, right?
That's another clue as to what's going on, because the short end, of course, is hooked into the Fed most closely. If you look at 10s, what's fascinating here is it was at 166. The high was 168. You can see it's contained. But don't get too excited about contained, because it didn't give up any ground. But here's the one you should be watching, the 30-year bond. The longest maturity, which is at the highest intraday yields, going all the way back to the...
It could be a lot worse. Honestly,
242,
Speedy.
Since
That's what I'm trying to say.
2019, and if you look at it, it took out its earlier intraday high. A fresh new cycle intraday high, and that's pretty much
somewhere around
the dollar index and the yield curve. Doves continue, and investors continue to fade, that the Fed can keep it all controlled. Courtney and Tyler, back to you.
Rick, thank you very much. And we've got some breaking news now out of Washington. Let's go to Elon Moy for the details. Elon.
Well, Tyler, the Treasury Department does plan to extend the tax filing deadline by 1 month from April 15th to May 15th. This comes as the agency faced growing pressure from both Democrats and Republicans to give people a little more breathing room to file their taxes in the middle of a very complicated financial year, and also allow the agency some time to
it could happen, Trebek. Still, is what I'm saying.
Rescue plan, sending out those stimulus checks, giving out expanded child tax credits, treating unemployment insurance a little bit differently. So Americans will now have more time to file their taxes. The deadline now, May 15th. The Treasury Department separately also coming under fire from Ohio, which is now suing the agency over some of the limitations around state taxation that come as part of the aid given to states in that rescue plan. There are a number of states that have sent a letter to the Treasury Department, 21 states, calling for them to reconsider some of the strings that come attached to that COVID relief. We'll see where that one goes as well. Guys.
So what is, explain to me one more time, Elon, what the state's beef is with the American Rescue Act specifically?
Well, as far as I can understand it, and I haven't been able to read Ohio's
I hate
lawsuit
politics
all the way through, but what states are concerned about is that they were prevented from being able to cut state taxes if they receive money from the coronavirus relief fund. They are saying that's overreach by the federal government and an unconstitutional intrusion into their powers. And so now they are filing suit or threatening to file suit against the Treasury Department in order to prevent that from happening.
I see.
We'll see what the courts decide.
Yeah, well, that's really a court issue, not so much a legislative issue, it would appear. But that is, from me sitting here, not someone as knowledgeable as you are about the ways of D.C. All right, Court, take it away.
Thank you very much, Tyler. Well, coming up, we are less than 10 minutes away from Fed Chair Powell's press conference.
10 minutes, chat.
We'll ask a former Fed governor what Powell needs to say to keep the markets happy and stocks jump after this latest decision. Stick with us. We'll be right back.
Somewhere in here, but edit and you want to put it up.
I do. It's not on the stairs.
I had it somewhere, too. I don't know where she would have had it at. I don't think it's in here anywhere. Really don't. I didn't see it anywhere though. I had it somewhere.
We see harnessing now.
All right, chat. We got 10 minutes, man. 10 minutes. Don't just go YOLO. Yeah, I don't know, man. It depends. Like I said, it all depends on like what Jay Powell is talking and how he says, man, how the market, you know, receives that. Just because we got the stuff in doesn't mean everything. It's either a countdown to liftoff or a countdown to SpaceX launch. Yo, Speedy Lamau, bro. We'll see what happens. I mean, obviously, like, the plot chart, you know, wasn't the best plot chart in the world. But it also wasn't, like, so bad that I'm, like, you know, super worried about it. I think it all obviously aligns on, you know, what he's saying during this talk. Definitely waiting. If you guys haven't, make sure you guys hit the like button below. Let's get to 200 likes, chat. Let's go. Let's go, baby. Nobody knows yet, honestly, Job. I mean, again, some of those numbers aren't bad in there. But there's definitely some numbers that, like, you know, kind of concern me a little bit. GDPs, you know. Obviously, I feel like if unemployment rates were forecast to be under 4%, that would also concern me a little bit more for bigger investors to pull out some. They're definitely, like, right on the teeter-totter, man. It's right on the teeter-totter. It's the reason why I'm like, I'm just going to wait till he talks. I feel like it could go either way. That's the problem. Like, I'm on that 50-50. I hope he doesn't see a shadow Reezer. Yo, me and you both, man. Me and you both. That's what I'm saying. Like, oh, come on, man. Come on. Give me this. Get there, bro. Give me this. I want to see it. They're live right now already, but that's that music. All right, chat. They're live right now. I have it pulled up, so you know when they go live, we'll slap it on up, brothers. We'll slap it on up. Yo ho, yo ho. We'll I'll try to treasure this down a little bit. That way, not taking up the whole screen. Nothing but the screen. Oh, there we go. Well, I mean, that there wouldn't be that big of a deal. Well, I guess it would. F it, right? We can just make it smaller. Hello, YouTube. How you doing? Right there shouldn't be that bad. That shouldn't be that bad, brother. Whee! Tell us good news, please, good sir. Tell us all the good news you have today. Oh, man. Bless us, all Holy One. Pretty much, man, at this point. Alright. We'll have that right there. I'll have it pulled up with when he goes live, right? I'll pull it up when he goes live. To make it better be dank, dude. I hope, bro. Oh, man.
There's going to be an overshoot there. They didn't forecast it. I think that held them back a little bit. So yeah, I think there's a little bit more danger that they go too slow. And one of the main reasons is that they are
Are we sacrificing anyone today, dude? I guess today's Brandon's turn, man. Brandon's got to get sacrificed today, dude.
And they believe it's going to overshoot. They've never kept the funds rate unchanged.
It was kind of like that buy email I was talking about a minute ago, like earlier today. I said right before Colin like right before he goes live, J Powell goes live, we could see a big buy and then a sell off, right?
And you do overshoot.
You can see a big buy up and then sell offs again.
Interest rates where they are, right, Larry?
Kind of what happened.
And you leave them right where they are, despite that it may overshoot that goal.
Right. So, but we're talking about 2023. Yes. So keep them the same until it's at 2% for a year, and they expect it to overshoot in the following years. So,
Larry,
yeah, go ahead.
Continue your thought, Larry.
So,
I agree, Ron. I agree. No news is good news. I mean, it wasn't like bad news in those plot charts and stuff, but it definitely wasn't like the best either.
So we'll have to see. 2023 is a long way off.
Just be wary of a green going up before J Powell talks, because if he says something, if something bad comes out, then it's going to drop back down again.
To those dots in 2023.
But hopefully he doesn't, and hopefully it goes up, right? That's the good news we hope for.
And we shouldn't pay all that much.
Yo, let's get to 200 likes, by the way, chat. Let's go, dude. 200, we got this. If you're not a sub, make sure you guys hit the sub button as well.
What about a taper timeline? Is it still appropriate for the Fed to be making the purchases at the level at which they are and for the foreseeable future? When does Powell need to begin to forecast that a little bit more clearly for the markets?
Well, it's certainly not for the foreseeable future.
You're not going to see that, by the way.
About when they're going to need to taper. It's when there's significant progress.
He's supposed to be out any minute. I'm over here like switching back and forth, seeing if he's out yet. He's not out yet,
There'll be
though.
a lot of interesting discussion within the committee. So I think that if you look at them and they have a 4.5% unemployment rate.
420, blaze it.
I think that's not quite low enough. I think it's going to have to be closer to 4.25.
420 likes, blaze it, chat. Let's go, dude.
And inflation.
Shout out to
2%.
To the few donos today as well. I appreciate it. Those things help me continue to be able to do these things. So I appreciate it as well.
Beyond this year, in the first quarter or most second quarter of next year.
So one quick question before we have to leave you. Did I hear you correctly then that you think that the earliest they will begin tapering those asset purchases is next year, and when might they start to signal that?
No, the earliest is December, and we were at December, but their forecast suggests to me that it's more likely to be in early next year.
All right, Governor Meyer, thank you very much for being here.
Good afternoon.
Always good to see you.
I would like to start by noting that it has been a full year since the pandemic arrived with force on our shores.
This meeting feels
Looking back, it was clear that addressing a fast-moving global pandemic would be plainly and primarily the realm of healthcare providers and experts. And we are grateful to them and to all the essential workers for their service and sacrifice. The danger to the U.S. economy was also clear. Congress provided by far the fastest and largest response to any post-war economic downturn, offering fiscal support for households, businesses, healthcare providers, and state and local governments. Here at the Federal Reserve, we rapidly deployed our full range of tools to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. We are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. The economic fallout has been real and widespread, but with the benefit of perspective, we can say that some of the very worst economic outcomes have been avoided by swift and forceful action from Congress, from across government, and in cities and towns across the country. More people held on to their jobs, more businesses kept their doors open, and more incomes were saved as a result of these swift and forceful policy actions. And while we welcome these positive developments, no one should be complacent. At the Fed, we will continue to provide the economy the support that it needs for as long as it takes. Today, the FOMC kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since January, the number of new cases, hospitalizations, and deaths has fallen, and ongoing vaccinations offer hope for a return to more normal conditions later this year. In the meantime, continued observance of social distancing measures and wearing masks will help us reach that goal as soon as possible. The economic recovery remains uneven and far from complete, and the path ahead remains uncertain. Following the moderation in the pace of the recovery that began toward the end of last year, indicators of economic activity and employment have turned up recently, although the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing remain weak. Household spending on goods has risen notably so far this year. In contrast, household spending on services remains low, especially in services that typically require people to gather closely, including travel and hospitality. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also picked up. The overall recovery in economic activity since last spring is due, importantly, to unprecedented fiscal and monetary policy actions, which have provided essential support to households, businesses, and communities. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up notably since our December summary of economic projections. In commenting on the stronger outlook, participants noted progress on vaccinations as well as recent fiscal policy. As with overall economic activity, conditions in the labor market have turned up recently. Employment rose by 379,000 in February, as the leisure and hospitality sector recouped about 2/3 of the jobs that were lost in December and January. Nonetheless, employment in this sector is more than 3 million below its level at the onset of the pandemic. For the economy as a whole, employment is 9.5 million below its pre-pandemic level. The unemployment rate remains elevated at 6.2% in February. This figure understates the shortfall in employment, particularly as participation in the labor market remains notably below pre-pandemic levels. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projection is 4.5% at the end of this year and moves down to 3.5% by the end of 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. Overall inflation remains below our 2% longer run objective. Over the next few months, 12-month measures of inflation will move up as the very low readings from March and April of last year fall out of the calculation. Beyond these base effects, we could also see upward pressure on prices if spending rebounds quickly as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transient effects on inflation. The median inflation projection of FOMC participants is 2.4% this year and declines to 2% next year before moving back up by the end of 2023. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As we say in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. I would note that a transitory rise in inflation above 2%, as seems likely to occur this year, would not meet this standard. In addition, we will continue to increase our holdings of Treasury securities by at least $80 billion per month and of agency mortgage-backed securities by at least $40 billion per month.
That's good.
Until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since last March has materially eased financial conditions and is providing substantial support to the economy. The economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. Our forward guidance for the federal funds rate, along with our balance sheet guidance, will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. Our guidance is outcome-based and ties the path of the federal funds rate and the balance sheet to progress toward reaching our employment and inflation goals. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so.
Brendan.
To conclude, we understand that our actions affect communities, families, and businesses across the country.
Say support.
Everything we do is in service to our public mission.
Yeah.
We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible.
Yes. Keep saying.
Thank you. I look forward to your questions.
All right, we got questions, chat. Questions. This is where you find out. More stuff.
Howard from Reuters.
Hi, Chair Powell, and thanks for that. So could you talk us through how the forecasts for 2021 map into the substantial further progress definition? 2.4% inflation. I understand that's considered transitory. That still seems like some progress there. 4.5% unemployment. Is it time to start talking about tapering yet?
No, don't say
Not
it
yet.
Yeah, there you go.
So,
good answer.
As you pointed out, we've said that we would continue asset purchases at this pace until we see substantial further progress. And that's actual progress, not forecast progress. So, and that's a difference from our past approach. So, and what we mean by that is pretty straightforward. It is we'll want to see that that the labor markets have moved, labor market conditions have moved, have made substantial progress toward maximum employment, and inflation has made substantial progress toward the 2% goal. That's what we're going to want to see. Now, that obviously includes an element of judgment, and when we see, we'll be carefully looking ahead. We also understand that we will want to provide as much advance notice of any potential taper as possible. So when we see that we're on track, when we see actual data coming in that suggests that we're on track to perhaps achieve substantial further progress, then we'll say so. And we'll say so well in advance of any decision to actually taper.
If I could follow up on that, the shift in the dots, why wouldn't that suggest a weakening of the commitment here? An awful lot of people.
These questions make me
2022,
nervous.
I don't see that at all. We have a range of perspectives on the committee. I welcome that, and we debate things, we discuss things, and we always come together around a solution. But the strong bulk of the committee is not showing a rate increase during this forecast period. And as data improve, as the outlook improves very significantly since the December meeting, you would expect forecasts to move up. It's probably not a surprise that some people would bring in their estimate of the appropriate time for liftoff. Nonetheless, the bulk of the committee, the largest part by far of the committee, doesn't show a rate increase during this period. And again, part of that is wanting to see actual data rather than just a forecast at this point. We do expect that we'll begin to make faster progress on both spending, labor markets and inflation as the year goes on because of the progress with the vaccines, because of the fiscal support that we're getting. We expect that to happen, but we'll have to see it first.
Great, thank you. Victoria.
Hi, Chair Powell. I wanted to ask about the supplementary leverage ratio. There's been a lot of talk about what you all are going to do this month, which I'm happy to hear an update if you have one. But just sort of more broadly, do you think long term that the leverage ratio poses problems for implementing monetary policy at a time when the reserve supply is going to remain large? And if so, do you think that changes to the leverage ratio, including the SLR, are the way to deal with that problem?
Victoria, we'll have something to announce on that in coming days, and I'm not going to expound upon your questions. Why don't you ask another question if you'd like to? Because that one I'm just going to say that we're something in coming days.
Oh.
Sure. Okay. Well, then I'll ask about unemployment. You know, there's the unemployment rate is, you all have projections for the U6 rate, but you've also been, you know, really emphasizing the fact that that's not the only thing that you all are looking at. You're also looking at labor force participation and things like that. So are you all looking at ways of maybe adding to how you're projecting the unemployment rate to the summary of economic projections?
Well, let me say, as we say in our statement on longer run goals and monetary policy strategy, we look to a range of indicators on labor market. We never only looked at the unemployment rate, which is the only indicator of labor market outcomes that's in the SEP. We look at a very broad range. You hear us talk all the time about participation, about employment to population, which is the combination of the two, about different measures of, of unemployment. So it's wages, it's the job flows, it's, you know, all of those things they go into an assessment, disparities of various groups. All that goes into an assessment of maximum employment. The trying to incorporate all of that into the summary of economic projections would not be practical. You know, obviously the thing that we do include is just the unemployment rate, and that's a very insufficient statistic. So it doesn't include a lot of other things that we do look at. And I wouldn't want to say that we're looking to include the other dozen things that we look at into the SEP, but from time to time we do look at adding different things. But I would just say the SEP it's a summary. It's one device. It's not going to include all of the things that we look at. I think you know the things that we look at. We talk about them all the time. So we're not actually looking actively at significantly broadening those indicators in the SEP right now.
Thank you. Chris Rugaber, Associated Press.
Thank you. Chair Powell, I wanted to ask about the forecast overall. You're forecasting a very low unemployment rate next year, and in 2023, you have inflation, or the Fed overall is in the SEP forecasting inflation at or above 2% by 2023. Yet no rate hike in any of this forecast horizon. So is this telling us that you see a higher inflation rate than what's projected, or do you not? As you've been talking about, is the unemployment rate insufficient, or what is this telling us about the Fed's reaction function? That it seems you're meeting the Fed's dual mandate by 2023, yet again, no rate hike expected.
So I guess the first thing to say is that the SEP is not a committee forecast. It's not something we sit around and debate and discuss and approve and say this represents our, you know, our reaction function as a committee. It's a compilation of projections from different people, and but since we don't debate it or discuss it, it would be hard for me to say exactly why each participant did what they were going to do. So all I would say about this is that we've laid out what I think is very clear guidance on liftoff. And it's really three things: labor market conditions that are consistent with our estimates of maximum employment. And as I mentioned, we consider a wide range of indicators in assessing labor market conditions, not just the unemployment rate. Inflation that has reached 2% and not just on a transitory basis. And inflation that's on track to run moderately above 2% for some time. The first two of those three are very much data-based. The third does have a little bit of an element of expectations.
You, Amanda.
So we are very much determined to implement this guidance in a robust way. It is the guidance that we chose carefully to implement our new framework. And to meet these standards, we'll need to see data, as I mentioned. So what does this SEP really say? It says that we're committed to our framework and to the guidance we've provided to implement that framework. We will wait until the requirements set forth in that guidance are clearly met before considering a change in our policy rate. And the last thing I'll say is this. The state of the economy in 2 or 3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future. So that's how I would think about the SEP.
Thank you. Paul Kiernan.
Oh, Lord.
Thank you, Chairman Powell. My question is twofold. One, how high are you comfortable letting inflation rise? There is some ambiguity in your new target, as you mentioned, expectations driven. And do you think that ambiguity might cause markets to price in a lower tolerance for inflation than the Fed actually has, thereby causing financial conditions to tighten prematurely? Is that a concern? Thanks.
So
these questions make me nervous.
We'd like to see inflation run moderately above 2% for some time. And we've resisted, basically, generally, the temptation to try to quantify that. Part of that just is talking about inflation is one thing. Actually having inflation run above 2% is the real thing. So over the years we've talked about 2% inflation as a goal, but we haven't achieved it. So I would say we'd like to, perform. That's what we'd really like to do, is to get inflation moderately above 2%. I don't want to be too specific about what that means because I think it's hard to do that, and we haven't done it yet. When we're actually above 2%, we can do that. Look, I would say this. The fundamental change in our framework is that we're not going to act preemptively based on forecasts for the most part. And we're going to wait to see actual data. And I think it will take people time to adjust to that and to adjust to that new practice. And the only way we can really build the credibility of that is by doing it. So that's how I would think about that.
Thank you. Matthew Bosler.
Hi, Chair Powell. This is Matthew Bosler with Bloomberg News. So there's a widespread presumption at this point that the U.S. will reach herd immunity sometime this year. And all along, you've said that the path of the economy is going to be determined by the course of the virus. I'm curious, based on the projections that you released today that show unemployment will still be above estimates of maximum employment through the end of next year, and perhaps sometime into 2023. Do you think policymakers need to be doing more here to sort of align the herd immunity and full employment timelines, if you will? Thank you.
So on herd immunity, I'm really going to leave that question to the experts. We don't control that. We're not responsible for defining it. We'll leave that whole discussion to the experts. I mean, what we're focused on is the part that we control, which is the support that we provide to the economy. And there we provided very clear guidance. And in the case of asset purchases, it's at their current level until we make substantial further progress. There is an element of judgment in that, and we'll supply clear communication well in advance of actually tapering. And we just went through the criteria for raising interest rates. They're very specific, and we're very much committed to having them fulfilled robustly. I would agree with you that the path of the virus continues to be very important. We have these new strains which can be quite virulent, and we're not actually done yet. And we're clearly on a good path with cases coming down, as I mentioned, but we're not done, and I'd hate to see us take our eye off the ball before we actually finish the job. So that's how I would look at that.
If I could just briefly follow up, how do you see sort of the disconnect in terms of an economy that is expected to be widely reopened this year, but full employment taking longer to achieve? Is it the case that factors related to the virus will still be with us over the coming years? Is that how to interpret the forecast?
I think there's some of that. Sure, there'll be some of that. There'll still be some social distancing. People may be, for example, going into spaces that involve close contact with others. Some people will do that right away. Others will hold back, and so I think there'll be some of that. In addition, though, remember there are 10 million people, in the range of 10 million people, who need to get back to work, and it's going to take some time for that to happen. It can happen maybe more quickly than it has in the past, because it involves the reopening of a sector of the economy as opposed to stimulating aggregate demand and waiting for that to produce job demand for workers. This could be a different sort of a process, and it could be quicker. We don't know that. But it's just a lot of people who need to get back to work, and it's not going to happen overnight. It's going to take some time. No matter how well the economy performs, unemployment will take quite a time to go down, and so will participation. So that's all I can say. I think the faster the better. We'd love to see it come sooner rather than later. We'd welcome nothing more than that. But realistically, given the numbers, it's going to take some time.
Thank you. Steve Leisman.
Mr. Chairman, thank you. I wonder if you could, kind of a three-parter here, but all related. Would you comment on the current level of the 10-year yield and some other long rates out there, whether or not you think they would have a negative effect on the economy? And if not, is there a level that would give you concern? And finally, the third part, other central bankers have expressed concern about what's happened to yields in their countries, and even some taken action, but not you. Could you give us your general idea or orientation towards the idea of coming into the market and affecting a particular tenor of the bond market? Do you like that idea? Do you not like it? Is it at the top of your toolbox, or is it something that you think is at the bottom of the toolbox?
Sure. So we monitor a broad range of financial conditions, and we're always attentive to market developments, of course. We're still a long way from our goals, and it's important that financial conditions do remain accommodative to support the achievement of those goals. And if you look at various indexes of financial conditions, what you'll see is that they generally do show financial conditions overall to be highly accommodative, and that is appropriate. So that's how we look at it. I would add, as I've said, I would be concerned by disorderly conditions in markets or by a persistent tightening of financial conditions that threaten the achievement of our goals. We think the stance of monetary policy remains appropriate. Our guidance on the federal funds rate and on asset purchases is providing strong support for the economy, and we're committed to maintaining that patiently accommodative stance until the job is well and truly done.
Could you give us an idea of how you sort of feel about that tool of being able to come into a particular part of the market and either doing an operation twist or something like that? Is that something you feel to be the top of your toolbox, or something that you don't really prefer?
You know, the tools we have are the tools we have. What I'm telling you is that the stance of monetary policy we have today, we believe is appropriate. We think that our asset purchases in their current form, which is to say, you know, across the curve, 80 billion in treasuries, 40 billion in mortgage-backed securities on net, we think that that's the right place for our asset purchases. Now, we can change them, of course, in a number of different dimensions, should we deem that that's appropriate. But for now, we think that our policy stance on that is appropriate.
Thank you. Rachel Siegel.
Hi, Chair Powell. Thanks very much for taking my question. You've spoken about the pandemic's disproportionate toll on Black Americans, Hispanic Americans, Asian Americans, and other groups in the labor market. And I'm curious if you can speak to specific indicators that the Fed will be using to measure job gains for groups that have persistently higher rates of unemployment compared to white Americans. And relatedly, since you've described vaccines as key to the economic recovery, is the Fed concerned about lower vaccination rates in communities of color, and what barriers do you think exist there? Thanks very much.
So which measures? So we do monitor and communicate very regularly about different labor market disparities in the labor market, let's say. So the African American unemployment rate is substantially elevated, and so is the Hispanic unemployment rate. So we look at those and we see those as, you know, it's slack in the labor market. It's sad to see, because those disparities had really come down to record lows since we started keeping the data that way. As recently as a year ago, February of last year, we had those disparities quite low. What happens in a downturn, though, is they move up at twice the speed of white unemployment. So we monitor those things. Our tools, of course, affect unemployment generally, but we're going to look at those as a form of slack in the labor market and hope that that there's progress there. And this particular downturn, of course, was just a direct hit on on a part of the economy that employs many minorities and lower paid workers. The public-facing workers in the service industries, in many cases, don't have a lot of financial assets. They're not tremendously well paid. They might have other jobs and things like that. So this was a direct hit on that part of the economy, and it's the slowest part of the economy to recover. So, we like to see those people continue to get supported, as the broader economy recovers, which is very much doing now. In terms of disparate levels of vaccination, those are facts, unfortunate facts. They're really not something we have within our policy toolkit to address, but it is true, though, that the data we have suggests that there are significant disparities between different ethnic groups, and but that's not for us. That's for fiscal authorities and the government more generally to work on.
Thank you. Gina Smialik.
Hey, Chair Powell. Thanks for taking our questions. I was wondering if you could talk a little bit about how you see the fiscal policy support that has come down the line affecting the economy's potential in the longer term, just in the sense that you've talked a lot about the potential for labor market scarring and how that might weigh on our sort of future prospects. And I wonder whether you see that sort of working in reverse. If we pull people back into the labor market more quickly, does that improve our chances?
So I do think that fiscal policy overall will have really helped us to avoid much of the scarring that we were very, very concerned about at the beginning. And I think that's just the size and the speed with which Congress has delivered, with the CARES Act and since then, is going to wind up very much accelerating the return to full employment. It's going to make a huge difference in people's lives, and it has already. As I mentioned in my opening remarks, the recovery has been faster than we expected. Part of that just is very hard to predict, given we've never seen an event like this, but part of it is just the strength of the fiscal response, which I think will look good over the years. Longer term, to really, the first part of it is about avoiding scarring, and I think we've not avoided all of the scarring, but we've probably avoided the worst cases there. And I hope we keep at it, and we will keep at it with our policies, of course, to do whatever we can to make sure that continues. Longer term, though, what it takes to drive productive capacity per capita or per hour worked to raise living standards over time is investment in people's skills and aptitudes, investment in plant and equipment, investment in software. It takes a lot of investment to support a more productive economy and raise living standards, and that hasn't been the principal focus with these measures, our measures certainly, and we don't have those tools, but what Congress has been doing has mainly been replacing lost income and beginning to support people as the economy returns to normal. But there should be a focus on a longer term focus, I think, would be healthy on the investment front.
Thank you. James Politi.
Thank you, Chair Powell. I wanted to ask a question about the Eurozone. While the outlook for the U.S. economy has much improved, progress in the Eurozone has been far less encouraging, and it's showing signs of serious weakness due to the slower vaccination rollout and renewed lockdowns and restrictions. How worried are you about transatlantic economic divergence and the possibility that that trouble in the Eurozone and weakness in the Eurozone could drag down the U.S. recovery, as it did in a way in the aftermath of the financial crisis?
You're right. The pace of the recovery is, we're having diverging recoveries here, as we did after the last crisis. And in this case, as well as the other one, the U.S.'s recovery is leading the global recovery. And we conduct policy, of course, here. Our focus is on our objectives are domestic ones. It's maximum employment or price stability here in the United States. We monitor developments abroad, and we know that because we know that those can affect our outcomes. So I think U.S. demand, very strong U.S. demand, if as the economy improves, is going to support global activity as well over time. that'll be through imports, and when the U.S. economy is strong, that strength tends to support global activity as well. So that's one thing. I don't worry in the near term. I'd love to see Europe growing faster. I'd love to see the vaccine rollout going more smoothly. But I don't worry too much about us in the near term because we're on a very good track. Very strong fiscal support coming. Now vaccination going quickly, and cases coming down. I think we're in a good place. It's all ahead of us, but the data should get stronger fairly quickly here and remain strong for some time here.
Just say Burr.
Hannah Lang.
Hi, thanks so much for taking our questions. I wanted to ask if the Fed is planning on extending the same restrictions on bank dividends and share repurchases that are currently in place into the second quarter, and if you're considering at all the scenario analysis and mid-cycle stress tests that were in place last year, this year, and kind of what would make you consider doing something like that again.
So we haven't made a decision on that. We're a couple weeks away from announcing that decision. I won't foreshadow it here today. I will say we're going to continue our data-driven approach. You know that we restricted buybacks and dividends, so the firms are preserving capital. Through 2020, the banks actually increased their level of capital and their level of reserves. And the December stress tests showed that banks are strong and well capitalized under our hypothetical recessions that we used in December, which were quite stringent. We're right in the middle of our 2021 stress test, and we'll release those results before the end of June. And that layers, very significant additional stress on top of the stress the banks have already absorbed over the past year, with the unemployment rate going to 11% and stock prices falling more than 50%. So. But all of that, the results of the stress test and the decision on distributions, all of that is to come fairly soon, as I mentioned.
Thank you. Edward Lawrence.
Thanks, Chair Powell, for taking these questions. You laid out the standards to lift off. And back in June of 2020, you said, you're not even thinking about raising rates. But I see 7 members seeing liftoff in 2023 and 4 next year. How much debate and how can you characterize that conversation has there been about moving off the lower bound earlier than signaled?
Well, it all depends. We've set out very clear criteria for liftoff, right? Where we've said we want to see labor market conditions that are consistent with our estimates of maximum employment. And that doesn't just mean unemployment, it means a much broader set of criteria. We want inflation at 2% and not on a transitory basis, and we want inflation on track to run moderately above 2% for some. Those are the 3 conditions. Everybody on the committee agrees to that, right? So it comes down to what's your projection for the economy. If you want to, people will have a range of assessments for how good the economy is going to be. And we don't, I would say that we're in a relatively highly uncertain situation. If you look at the uncertainty, people on the committee broadly say that uncertainty about the forecast is very high compared to the normal level. We haven't come out of a pandemic before. We haven't had this kind of fiscal support before, totaling it all up. So you're going to have different perspectives from committee participants about how fast growth will be, how fast the labor market will heal, how fast inflation will move up, and those things are going to dictate where people write down an estimate of liftoff. Of course, this isn't a decision to lift off now. We make that decision then, but it's an estimate based on assumptions about growth, and it's meant to be a tool to generally show the public how our objective function works, how we think about the future. It isn't meant to actually pin down a time when we might or might not lift off. We're not going to make that decision for some time. The chances are that the economy in that time and place will be very different from the one we think it'll be. So I sometimes with the dots, I have to be sure to point out that they're not a committee forecast. You know this, but they're not a committee forecast. It's just compiling these projections, really, of individual people. We think it serves a useful purpose. It's not meant to to actually be a promise or even a prediction of when the committee will act. That will be very much dependent on economic outcomes, which are highly uncertain.
Thank you. We'll go to Brian Chung.
Hi there, Chairman Powell. I wanted to elaborate a little bit on your commentary about the fiscal stimulus. So it sounds like you, I guess, see the case for even maybe more investment, at least from Congress, to support the more productive economy, as you answered to Gina's question. So we just had $1.9 trillion in spending. So where do you see the fiscal space right now? Do you still, I guess, maybe see the country in a place right now where it wouldn't be a concern if there were to be more spending at this time?
No, so Brian, it's not up to us to decide what Congress should spend money on or when. I was answering Gina's question, which really was, how do we assure lack of damage to scarring, for example, or lack of damage to the productive capacity of the economy? And I think what's happened so far has done a pretty good job of that. But really, I wanted to make the longer run point that if to work on the productivity over longer periods, that comes down to a number of things, but one of those things is investment in people, in their skills, education, aptitude, all of those things. I'm not in any way suggesting that that's something Congress should work on right now, or that, that's just that's not our job. I'm just saying that is what fiscal policy can do, that really monetary policy can't do, is invest in the future productive capacity of the economy, raise potential growth. Those things are completely tools that Congress has. And again, I wasn't making a comment at all on the current fiscal setting.
Thank you. Next to Michael Derby.
Great, thank you for taking my question. I just wanted to get an updated view on your sense of your view on financial stability risks and whether or not you see any pockets of excess out in financial markets that concern you, either specifically to that area of the market, or as in terms of like the threat that it could propose to the overall economy.
Sure. So, as you know, financial stability for us is a framework. It's not one thing. It's not a particular market or a particular asset or anything like that. It's a framework that we have. We report on it semi-annually. The board gets a report on it quarterly, and we monitor every day. And it has 4 pillars, and those are 4 key vulnerabilities: asset valuations, debt owed by businesses and households, funding risk, and leverage among financial institutions. Those 4 things, and I'll just quickly touch on them. So if you look at asset valuations, you can say that by some measures, some asset valuations are elevated compared to history. I think that's clear. In terms of households and businesses, households entered the crisis in very good shape by historical standards. Leverage in the household sector had been just kind of gradually moving down and down and down since the financial crisis. Now there was some negative effects on that. People lost their jobs and that sort of thing, but they've also gotten a lot of support now. So the damage hasn't been as bad as we thought. Businesses, by the same token, had a high debt load coming in, and many saw their revenues decline. But they've done so much financing, and there's a lot of cash on their balance sheets. So nothing in those 2 sectors really jumps out as really troubling. Short-term, I mentioned funding risk as the last one. So we saw again in this crisis breakdowns in parts of the short-term funding markets. Came under a tremendous amount of stress, and they've been quiet since the spring. And we shut down our facilities and all that. But we don't feel like we can let the moment pass without just saying again that some aspects of the short-term funding markets and more broadly non-bank financial intermediation didn't hold up so well under great stress, under tremendous stress, and we need to go back and look at that. So a very high priority for us as regulators and supervisors is going to be to go back, and this will involve all the other regulatory agencies. It does involve all of them as well, and see if we can strengthen those things. So that's a sort of a broader, detailed look.
Thank you. Michael McKee.
Mr. Chairman, can you help me understand something about the SEP and your forecasts? The inflation that you're talking about for this year, say, is transitory.
Then by 2023, you're back down to 2.1%. There's no forecast for a rate increase for 2023. If you get to 3.5% unemployment, but inflation's only at 2 or 2.1%, are you willing to leave rates at zero going forward from there, or roughly zero going forward from there? In other words, could we be in a Japan-like situation where rates just stay low because inflation does?
Well, again, I wouldn't read too much into the March 2021 SEP dot plot. Remember what it is. It's a compilation of individual projections by individual members. They're all making different assessments. They have different forecasts, economic forecasts. Some have more optimistic ones, some less optimistic. And also remember that the SEP doesn't actually include all the things that go into maximum employment, right? It only includes unemployment. So I would just say we've set out clear guidance. The message from the SEP that I would like to leave with people is we set out clear guidance. I mentioned what it was. It's inflation it's labor market conditions consistent with our estimates of maximum employment, and that's not just unemployment, it's all the other indicators, but overall totaling up to maximum employment. It's inflation at 2% and not on a transient basis, and inflation on track to exceed 2% for moderately for some time. Those are the criteria. We're committed to robustly implementing that guidance, and that's what this says. That's really all it says. We're going to wait until those requirements are met. And again, the state of the economy in 2 or 3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future.
If I could follow up, I'm just wondering, before 2019, I would say you were focused on the problems with having interest rates too low. Now, are you saying we're willing to live with it until we reach these goals, even if you reach your goal on maximum employment?
So what I would say is we're committed to giving the economy the support that it needs to return as quickly as possible to a state of maximum employment and price stability. And, to the extent having rates low and support for monetary policy broadly, to the extent that raises other questions, we think it's absolutely essential to maintain the strength and stability of the broader financial system, and to carefully monitor financial stability questions, if that's what you're getting at. We do that. We monitor them very carefully. I would point out that over the long expansion, longest in U.S. history, 10 years and 8 months, rates were very low they were at zero for 7 years, and then never got above 2.4% roughly. During that, we didn't see actually excess buildup of debt. We didn't see asset prices form into bubbles that would threaten the progress of the economy. We didn't see we didn't see a housing bubble. The things that have tended to really hurt an economy and have in recent history hurt the U.S. We didn't see them build up despite very low rates. Part of that just is that you're in a low rate environment. You're in a much lower rate environment, and the connection between low rates and the kind of financial instability issues is just not as tight as people think it is. That's not to say we ignore it. We don't ignore it. We watch it very carefully, and we think there is a connection. I would say there is, but it's not quite so clear. We actually monitor financial conditions very, very broadly and carefully, and we didn't do that before the global financial crisis 12 years ago. Now we do, and we've also, put a lot of time and effort into strengthening the large financial institutions that form the core of our financial system are much stronger, much more resilient. That's true of the banks. I think it's true of the CCPs. We want it to be true of other non-bank financial intermediation markets and institutions. So I think that's monetary policy should be, to me, provide for achieving our macroeconomic aims. Financial regulatory policy and supervision should be for strengthening the financial system so that it is strong and robust and can withstand the kinds of things that it couldn't, frankly. And we learned that in 2008, 9, 10. This time around, the regulated part of the financial system held up very well. We found some other areas that need strengthening, and that's what we're working on now.
Thank you. Anakin, CNN.
Thanks for taking my question. Chairman Powell, could you talk to us a little bit about the relationship between the persistent pandemic unemployment and the expected increase in inflation? Does the former offset the latter to some degree?
I'm sorry, could you repeat that? You broke up there for a second.
Oh, no. I was hoping that wouldn't happen. Can you hear me now?
Yes, yeah.
Okay, great. I was asking if you could talk to us a little bit about the relationship between the persistent pandemic unemployment and the expected increase in inflation. I'm wondering whether the former offsets the latter and to which degree you guys are monitoring this.
You're asking about the relationship between unemployment and inflation? Is that the question?
Yes, exactly.
Okay.
They offset each other, the persistent pandemic unemployment.
Yeah, I think I'm hearing you correctly. So I would say a couple things. There was a time when there was a tight connection between unemployment and inflation. That time is long gone. We had extremely low unemployment, not extremely low. We had low unemployment in 2018 and 19 and the beginning of 20 without having troubling inflation at all. We were at 3.5%. We were bouncing around with unemployment 3.5% to 4%. And it wasn't just unemployment. Participation was high. Wages were moving up. It was a very healthy thing. And we didn't see price inflation move up. There is a relationship between wage inflation and unemployment. But that has not, what happens is that when wages move up because unemployment is low, companies have been absorbing that increase into their margins rather than raising prices. And that seems to be a feature of late cycle behavior. So we're not when we seek to achieve low unemployment, high levels of employment, which is our mandate. We think we have the freedom to do that based on the data, without worrying too much about inflation.
Thank you. Going to Greg Robb.
Hi. Thanks for taking my question. I wanted to follow up a little bit. I understand what you're saying about the dot plot and the message you're trying to send with the dot plot, but does the same apply for the taper tantrum? You've said that it's going to take some time to get some fundamental progress on your goals, but it seems like some time could now be any time.
What?
So we said substantial further progress. Now, if you go back November, December, and January, progress in the labor market slowed very sharply. So you had an average of 29,000 jobs per month. If you go back and look at the level of job creation before that was very, very high, very high. So we weren't making any progress on the labor market from November through January. February, we saw a nice pickup, a good jobs report, 379,465 private sector. So that's good. It can go so much higher, though, and it would be nice to really make faster progress. That's different from substantial progress. We'd like to see it be higher than that, and I think it will be. That's the expectation is you'll see now, I think, really strong job creation return. Not as high as it was in the very early days of the recovery, the reopening of the economy, but nonetheless very strong. Okay, so what I'm saying is, to achieve substantial progress from where we are, having had 3 months of very little progress, it's going to take some time. And we don't want to get into, I don't want to get into trying to put a pin on the calendar someplace, because it's going to be data dependent. When we see ourselves on track to make substantial further progress, we're going to say so. We understand fully that test is one that involves judgment. If you remember, during the global financial crisis recovery, we said quantitative easing number 3 was the test was a substantial improvement in the outlook for the labor market. Well, what does that mean? Well, it means a substantial improvement in the outlook for the labor market. It meant we would communicate when we thought we had that. This is just like that, in a way. What we're saying is substantial further progress toward our goals. We'll tell people when we think, until we give us a signal, you can assume we're not there yet. And as we approach it, well in advance, we will give a signal that yes, we're on a path to possibly achieve that, to consider tapering. So that's how we're planning to handle it. It's not different really from QE3. And I think what we've learned from the experience of these last dozen years is to communicate very carefully, very clearly, well in advance, and then follow through with your communications. In this case, it's an outcome-based set of guidance, as our rate guidance is, and it's going to depend on the progress of the economy. That's why it's not appropriate to start pointing at dates yet.
Thank you.
Thank you. Don Lee, LA Times.
Hi, Chair Powell. As you know, households are sitting on a lot of excess savings, and I wonder if combined with that you have an unleashing of pent-up demand. How much do you think that would affect inflation, and would you expect that to be transitory?
And everyone who's forecasting these, what we're all doing is we are looking at the amount of savings. We're looking at, we have reasonably good data on that, and we're looking at the government transfers that'll be made as part of the various laws, and we're trying to make an assessment on what will be the tendency of people to spend that money, the marginal propensity to consume. And from that, you can develop an estimate of the impact on spending, on growth, on hiring, and ultimately on inflation. So that's what we're all doing. And we have, we can look at history and we can make estimates, and those are all very transparent and public, and you can compare one to the other. And of course, we've all done that. And I think we've made very conservative assumptions and sensible mainstream assumptions at each step of that process. And what it comes down to is what I said before, which is there very likely will be a step up in inflation as March and April of last year drop out of the 12-month window because they were very low inflation numbers. That'll be a fairly significant pop in inflation. It'll wear off quickly, though, because just the way the numbers are calculated. Past that, as the economy reopens, people will start spending more, and that you can only go out to dinner once per night, but a lot of people can go out to dinner, and so, and they're not doing that now. They're not going to restaurants, not going to theaters. That part of the economy, and travel and hotels, that part of the economy is really not functioning at full capacity. But as that happens, people can start to spend. It's also wouldn't be surprising if, and you're seeing this now, particularly in the goods economy, there'll be bottlenecks. They won't be able to service all of the demand, maybe for a period. So those things could lead to, and we've modeled that. Other people have too. And what we see is relatively modest increases in inflation. So, but those are not permanent things. What'll happen is the supply side. The supply side in the United States is very dynamic. People start businesses. They reopen restaurants. The airlines will be flying again. All of those things will happen. And so it'll turn out to be a one-time sort of bulge in prices, but it won't change inflation going forward because inflation expectations are strongly anchored around 2%. We know that inflation dynamics do evolve over time. There was a time when inflation went up, it would stay up, and that time is not now. That hasn't been the case for some decades. And we think we won't suddenly change to another regime. These things tend to change over time, and they tend to change when the central bank doesn't understand that having inflation expectations anchored at 2% is the key to it all. Having them anchored at 2% is what gives us the ability to push hard when the economy is really weak. If we saw inflation expectations moving materially above 2%, of course, we would conduct policy in a way that would make sure that didn't happen. We're committed to having inflation expectations anchored at 2%, not materially above or below 2%. So that's, I think if you look at the savings, look at all of that, model it, that's kind of what comes out of our assessment. There are different possibilities. I think it's a relatively unusual, very unusual situation to have all these savings and this amount of fiscal support and monetary policy support. Nonetheless, that is our most likely case. And as the data come in and the economy performs, we'll of course adjust. Our outcome-based guidance will immediately adapt, we think, to meet whatever the actual path of the economy is.
Thank you. We'll go to Scott Horsley for the last question.
The last one better be a good one. Be a good one.
Thanks, Chairman Powell. My question is about those supply chain bottlenecks, especially on the goods side. Are they getting better or are they getting worse? We saw they were sort of a drag on the industrial production numbers that came out yesterday. And what do you expect them to do to prices just in the short run?
To say, I think it's impossible to say, frankly, with any confidence, but I would expect, it's very possible, let's put it that way, that you will see bottlenecks emerge and then clear over time, and you'll probably see that over a period of time because, really the strong data are ahead of us. Right now that the checks are going out just now, and that'll add to spending. COVID cases are coming down. Vaccination is moving now quickly. The really strong economic data is coming. It should be coming, assuming we stay on this track. And that's when you'll really know where the bottlenecks are. But you can see, though, that these are not permanent. It's not like the supply side will be unable to adapt to these things. The market will clear. It just may take some time. And some of the answer to that may be price. In many cases, it won't be price. You'll see that people are reluctant to raise prices. It's a little bit the story about, the wage Phillips curve does show that as unemployment goes down, wages move up. But companies choose not to try to pass that price increase along to their customers. So you'll see a lot of that here too, I think. Anyway, we'll see. But that's my basic sense. Thank you very much.
Thank you.
GG's. Thank you. That wasn't bad news, guys. That was pretty good. I think it's about as good as he's gonna get when it comes to like him talking, right? Like, just to have like a rundown. Obviously, like the unemployment rate numbers at 4.5%. Going into next year, they're thinking instead of 5 like they were thinking before, which isn't big of a difference. GDP growth this year is a little bit over what like some people probably would have wanted, but it wasn't like nothing terrible. I don't think there was anything like that was just like god awful there, right? I think overall, honestly, it was pretty good news. Hence the reason why you've seen the market go pretty much up, right? And you've seen some sell-offs again, but there was nothing there to say not to buy right now, honestly. I think the questions were great. They got a lot of questions out. There was nothing bad in the questions either. Like I was hoping he wasn't fumbling any questions, because obviously like sometimes when he fumbles questions that can like lead to some uncertainty too. But I was holding my breath. Dude. We're up to date now. That's good, I guess. Yeah, definitely good. Definitely good. I think overall it's pretty good speech at least. Wasn't like last time where he kind of fumbled over himself and the markets kind of like went down from that. So I'll take it. I will take it all day long. Sign me up, baby. We also got 30 minutes left in Power Hour. But there was nothing there, man. Nothing bad. Nothing bad. See, chat? Good. We're good. Look at Harmony tokens. There's so many tokens, man. Savings, I still believe, is a year's worth of pay in pure cash. I think savings is 2 to 3 months of living expenses. Everything after that should, I don't know, a little bit much. Then you should just put all the rest of it into Places where they can actually grow instead of a savings account. Are you talking about volume on AMC? Well, you gotta remember, AMC and GME were the least to get hurt by the market fallout, right? If the market would have fell, AMC and GME were going to be the least hurt. They would have got hurt, but not near as bad as other stocks, right? But then having a flat day is not the worst thing. We're up 2.3%. We still got 30 minutes left. We can get above 350. That'd be great, honestly. But we'll see what happens because there's not a lot of movement there, right? Like you look at today, it's pretty much flat. Yeah, we're up 2.3%. So it's it's not like a terrible day. Be nice to get above 350 though. I mean 1350. Anyway, same thing with GME. It's pretty flat today. 0.89%. Nothing like crazy there. But then you got things like NEO that went down. Like they were down. NEO was down like 5% earlier. Up 2.4% now. CCIV is down from yesterday, but it's still above $30. Up from where it was at earlier at $28. So you'll take that, right? If it holds above 30. There's a lot of stocks that were down a lot earlier. Look at all the green now. Way more green now than it was earlier. This was all red pretty much. People were already kind of pricing in some, right? Why is RKT bar action so low? What do you mean on RKT? I think a lot of people's already like got in and out of Rocket. I mean, the reason why you seen Rocket pop last time is because it was obviously heavily shorted stock, but I still like Rocket as a company though. They have a lot of stuff in their company. I think if you can get Rocket around $20, I think you're really good, honestly. Yeah, Dante. The Feds, everything was actually pretty good. Like again, there were some things in there, man, that could affect the market a little bit, but I mean, it wasn't nothing that was like major big like a lot of people might have been expecting, which is good. It's the reason why I always play it cautious, but I always like to think of the best and like play cautious that way, just in case. Really, all I wanted to see was the dot charts. The dot charts, the GDPs, unemployments, stuff like that, outlooks is what I wanted to see the most of. And all those were nothing was bad there, which is great. It's good news, man. Like I said, not having bad news is good news. What's up, man? I finally able to join chat. What's up, Matthew? What's up, brother? Hope you're having a good day today, man. If you guys haven't, make sure you guys smack the like button. We're almost at 200 likes. Every like definitely helps out. If you haven't hit the like button, make sure you guys do that. If you haven't a sub, make sure you guys hit the sub button as well. That'd be awesome. GME flirting with the red. Yeah, GME's it's been pretty flat today. From the beginning, right? So if you go to yesterday's close, yesterday we closed at 201. Well, it wasn't 201, but right around where we closed at yesterday, pretty much 207 area, 208, 207. Really closed yesterday, so we're definitely flirting with that area right now. You got AMC up a smidge, 2.16% today. Rolls Royce has been down for a while though. Yeah, Rolls Royce has been down for a minute, so their whole damn place shut down. If you remember. Chase another dope tee again. Hey, dude, on St. Patty's Day, you have to wear a Cheech and Chong shirt, okay? Up in smoke, baby. Drop her $10 from 157. Yeah, definitely dropped. You can see the drop from right here, man. Like they were up pretty big. They were up not big, but decent earlier, right? We were up about 120 earlier, and now we're at 206, right? So there's definitely been some drops there. Hopefully AMC doesn't follow them at least, and we can see AMC at least continue across, which would be good. I'd be okay with a flattish day on AMC, honestly. I mean, I'd rather have an up day, but I mean, you know, flatter days are better than, you know, low days. Like I said, we passed one hurdle. We didn't get RIP'd by the Fed today, so that's good, right? We didn't get RIP'd by the Fed. There's still some really good buys, right? You got Neo below 45 right now. Where's xpeng at too? You got xpeng, you know, a little bit above 35, which is still a really good buy. There's a lot of good buys, I'm sure. Where's Palantir at? You got Palantir right at $25, which is still a good buy. Palantir right at 25 bucks is really good. There's a lot of good buys though. I mean, obviously some of these companies are up from the downs they were at earlier. Like XPI earlier at 50 was really good buy as well at 50 bucks. Back up to 55 now. Still not a bad buy though. You got Redfin, you know, coming off its lows at 69. Was that 68 earlier? So back at the 73. You got Canopy Growth up 3.5%, up from its low earlier, 32 to 34. Your good old Invis up from 15 to 17. So you're seeing a pretty good rebound, right? Like, you know, some of these stocks that were down 4 or 5% earlier have rebounded to up 3 to 4 to 5% now. A lot of these stocks that were down earlier are up now. What happens, man, when you're the power of Colin Powell? Yeah, I mean, Voyager's up a lot now again. Up from the $19, or I think it was like 18 bucks earlier. Yeah, 17 actually. Up from 17 earlier as well. Back up to 21.89 now. Carnival up 1.6%. American Airlines up 2.7%. You got United up 4 yeah, pretty much 4%. Sundial up almost 4% as well again. I mean, a lot of stocks that were down earlier are picking back up, right? Our Palantir bounces off right here. Any thoughts on OCGN? If you're getting onto a medical company, you're better off just, you know, getting in at a low point and then riding it up, right? Riding it up again. Pretty much how you want to play any medical play. You can get in at a low point and then ride a high, right? Ride it on all the way up, man. If you want to, or you could, again, you could always buy and sell, then buy and sell, then buy and sell again a lot when it goes up on the news. Pretty much how you want to play any medical stock. Get in low, man, and ride it, dude. Yeah, J-Pow today, man, dude. I went from really red to in the green. I was thinking, thank God, bro. The reversal. The reversal. The reversal is what you like to see. I like me a good old reversal. I like Romeo as a long-term play. DT squad. I was preaching Romeo a lot back when it was like $8 the other day. I like Romeo a lot as a future battery play though. We're gonna have lots of batteries, right? I like Romeo better under $15. It's at $13.41 right now. I still say it's a pretty good buy. Obviously, it would have been great if you got in the other day at, say, you know, $8 though, right? But at the end of the day, man, I still think Romeo under 15 is still good because I do think Romeo eventually is going to be like a $40 company. Maybe not this year, right? But maybe sometime next year or whatever. I definitely think, obviously, as the need for batteries go up, Romeo is going to continue to rise. So. Well, AMC 5 minutes for the Fed, dude. It lowered my average cost. Yo, nice, Richard. Hey, Richard, I hope you're doing good today, man. Thank you again for the top dono today, brother. I think you're still top dono. Pretty 99%. I appreciate you, man. I'm glad you got your buy-in price down, though. Hey, anytime you get buy-in prices down, take it. Take it. Still thinking Neo can hit 50 soon? Yeah, Joe. Yeah, man. For sure. Yeah, I mean, I have a very high conviction in Neo, so. CCIV slumped back under 30 bucks again. I like CCIV under 30. Sad no discounts. Yeah, you have to pretty much get in. Like when I said earlier, I was talking about the Feds. Like, you know, as soon as he starts talking, if everything's turning good, that's when you want to buy. I did get in some decent buys on like Neo and others as well. I mean, they were up like $1 or like $1.50 or so from where they were at the very lows, but it's still fine with me because I'd rather do that than take the chance of me getting RIP'd if I would have not have waited. I mean, I was pretty confident. I was confident that he was going to come out and say some good stuff, but you never know. Especially off me reading the chart. But I still like to pay it a little safe. SLGG, what's the dip at right now though? You gotta remember, SLGG was a hype stock for a minute there, dude. The reason why it went up that high. I'd still be a buyer around like $6 area. That's me though. It's better. I mean, better buying it now than say that you bought it at $8.31 though. Again, right now it's kind of a hype stock, so you could see a little rise right before going into aftermarket. Definitely could happen. Definitely could happen. Where's Neo? Neo rising back up, getting close to 45. I think Neo under 45 bucks is still a good buy-in. Oh, was it? Yo, nice, Mika, nice. Woohoo! Yo, Speedy, me and you both, man. I love it, dude. It's fun, man. It's exhilarating, man. It's almost like a casino, but I feel like I have a better shot at winning this than the casino, honestly. If I make smart, sound decisions with the stock market, I have a lot better chance of winning. Yo, what up, Tina? Hope you're doing well today. Hope you're having a great day today, by the way. Thank you guys for 200 likes, man. If you guys haven't hit the like button, make sure you guys smack the likes. If you're on a sub, make sure you guys smack the sub button. We're trying to get to 7,700 today. That'd be awesome. We're like 50 subbies away, man. Remember, at 10K subs, we're also giving away some stonks as well, man. Some stonks. Playing the attack on the hedge funds? Yeah, I'm down with that. Hands down, a lot better. Yeah, I feel like with this right here, man, I can do calculated decisions here more often. You can't average your price. That's true. Yeah, I would hold your CCIV. CCIV is going to go up. CCIV is a good long-term hold. If you're getting into EV plays or any kind of future type plays, like alternative energy plays, like those are going to be holders for you, right? Where's Gilt at today? Gilt come back up yet? I was looking at Gilt earlier today. And Gilt's still down below $12 now. Earlier it was really low. I almost bought this morning when it was at 11 bucks. Some more. I almost bought more Gilt. I got really close. Gilt's like one of my main 5G plays. It is satellites in general, but we can't buy the Starlink. So my Starlink alternative is Gilt. That's my Starlink. How's GSAT doing? I haven't seen GSAT in a minute either. He's doing better than it was. Back at the 160. $60. Yeah, we got RIP'd, man, from that $3 high it had though. Cut in half. Still like Gilt more than GSAT, but I don't mind GSAT at all either. HCMC's a play you're gonna have to play, man. and wait for a lawsuit or something to happen. I don't know a lot about ACMC. Just know you're taking a big risk there, right? If the lawsuit and stuff doesn't work out, then you could lose a lot of money. Because it's going to go all the way back down to 0.00000 or 0.0001. 1/100th or 1/1000th of a penny, pretty much. Yo, what's up, William? How you doing today, brother? Hope you're doing well, my man. Hope you're doing well. Not too much, dude. Just trying to hang out. It's been a slow day today, but it's been an overall good day. I'll take it, man. I will take it. Had a rough morning this morning, but other than that, not been too bad. Supposed to have like severe thunderstorms later, so that should be fun. That should be fun. Sure the kids will be freaking out about that. Got the stimmies today, dry powder. Yeah, some people said there's not coming in tomorrow, and some people said on Friday too. They had theirs deposited on Friday as well. What do I think AMC is going to push to at close? I'm hoping it goes above 1350. That's what I'm hoping for. If we can finish above 1350, I'd be happy. That would put us at like, around like 4% in the green. 3.5%, 4% area. I'll be okay with that. AMC looks like it might be finishing, or GME looks like it might be kind of finishing flat today, which is not the worst thing in the world. I mean, could be a lot worse. Could be a lot worse. You got yours today too? Yo, nice, Mick, nice. Yeah, I hope not either, William. I hope not either, man. We're supposed to have really bad storms, though. I think the whole South is. Was hoping for good news overall. Do you know why gilt came down from 3,600 a share in 1999 to what it is today? Gilt? When you're looking at that, you're not seeing like the if you go to gilt, like you're not seeing the like the splits and everything like that either. Not seeing splits or anything like that, so it's like it's kind of, you go back that far, you're kind of getting a little hint. Storms in Brussels, Berksville, yeah, it's supposed to be storming. It's been storming here earlier a little bit. Supposed to be storming bad later though, what they're saying. Gilt just launched some of their satellites, so not that long ago. Some people also think Gilt might be added into. I can't wait for Arc Space. I need that in my life, man. I'm definitely gonna buy some Arc Space. Definitely buy some Arc Space. Yeah, we got 10 minutes, chat. 10 minutes. Let's go, chat. Let's go. Let go. Cable TV killed Gilt in the 2000. That's true too. It did get RIP back then a little bit as well. You're also not seeing splits and things like that in stock prices either. Same thing if you look at like Tops. If you go back and look at Tops, like, if you pull up Tops and look way back when, man, Tops was like a bajillion dollars as well. Do you have a target for AMC? I'm hoping we get above $15 by the end of the week. I think Friday's the biggest catalyst for AMC and GME going forward, honestly. I think either one could be helped on Friday by the overall volatility in the market on Friday. I think it'll be good tomorrow. I don't see anything bad for tomorrow. The biggest thing today was JPAL, right? That's the reason why we've seen such a big sell-off today. And we might see a little sell-off going into the aftermarket hours, right? From people's like little bit of uncertainty, right? That can definitely happen as well. And you're seeing some of the market right now, like some of these things starting to sell off a little bit. You've seen a big rise. Then you see a little bit of sell-off. it's pretty normal as well, honestly. Pretty normal. When they come out and talk, like, see, you see Tesla right now, right? Like, Tesla is selling offload right here as well, under $700 again. You can definitely see a little bit of sell-off, like Palantir right now, you know, going back, fixing to go back under $25 again. Well, it looks like. And nothing crazy, but you definitely see a little bit of those gains get sold off a little bit. Kind of people buying the hype and then selling, you know, selling a little bit of the news there. I think tomorrow will be a better day in the market, though, instead of like a crazy up and down day. Today we've seen a lot bigger ups and downs because of the Feds, right? That happened yesterday as well. Like yesterday, the Feds coming out, or people expecting the Feds to come out. So people were, you know, kind of selling off a little bit as well there. Which we talked about that yesterday in the video, and I also talked about it yesterday on stream a little bit. Just didn't talk as much about it yesterday as I did today. Just because I was more waiting on what was going to happen next. TOC under 12 bucks isn't bad at all either. CrowdStrike is up 6.2% right there. CrowdStrike's had a good day today though. They're a security firm, by the way. CrowdStrike is. I do have some CrowdStrike stock as well. I bought it back on the low like last year though. Definitely came up a lot. It's had its ups and downs since that pullback though on the 10th. You can see that big green line right there. The pullback since. Still down before then or since then. At least AMC's doing good, man, so, hey. Yo, what's up, Dustin? How you doing, brother? Hope you're doing well today, man. Blew my stimmy today on AMC. Yo, let's go, Chloe. Hope you're making the bucks, man. Hope you're making some bucks. I would keep your position with Tesla. I wouldn't get rid of it, Joan, honestly. If you're long term, I think you're perfectly fine. I think we could see, I think eventually, for I don't know how long, but I think we'll see. I think one day at least we'll see a Tesla at like $1,200 a stock. I can definitely see it. That might be, you know, a few years from now, or it might be a year from now. I don't really know, but I definitely think we could see that. Same thing. Like I think eventually we'll see it. Amazon at 4K a stock, unless they split, and then you can still see it at 4K a stock. You know, pre-split or after split, and then looking at it pre-split. Yeah, Tesla, like any of your EV plays, any kind of EV plays, it's long-term plays, right? Alternative energy. Tesla has alternative energy, right? They have the. See, with Tesla, you're getting with Tesla, you're getting an EV, right? You're getting cloud storage as well. On top of that, you're also getting Tesla's solar power technology as well. You're getting alternative energy there. You're getting an autonomous system as well. With self-driving, you're getting a lot with Tesla. You're not just buying an EV company. You're definitely buying a lot, and all that right there all equals future. You want to hold those. Any of your EV plays, I would hold though. They're going to go up. You know, like eventually we'll probably see NIO one day. Like I think one day we'll see NIO above the 200 mark, right? Whether that's 2 years from now in 2023, or maybe even towards the end of 2022. I think one day you'll look back at NIO and say, I wish I could go back and buy it at $40. I mean, I say that right now, just going back and look at NIO not that long ago. Look at NIO a year ago. NIO was selling for $2. I would love to go back and buy NIO for $2. Like, I'd go back right now and buy where I bought it the first time. Right around here. Around that $14 area again. I'd love to go back to August area, man, and buy NIO again. Yeah, I would love it. I think NIO's going to go right back up to here, right before the market started coming down to $69 or 67 bucks area. Where NIO's going to go back up to, and it'll continue to go up. When you pull back a market, you're going to have some downs in there, right? That's just how it is. There's too much forward thinking and forward progress in stocks like NEO and these other EV plays that it's just buy and hodl, man. Buy and hodl. Every once in a while, you're going to look back and say, I wish I can go back and buy that at that price. Wish I can go back and buy that at that price. Like at $45, you're pretty much buying NEO back last December. You know, so you're pretty much going back in December prices right now at 45 bucks. Almost into November pricing. It's like you was here, dude. Yo, Rich, that's awesome, man. That's awesome. Jason, my bro, check this out. Yo, what's up, Monte? What up, baby? What we checking? Yo, I appreciate everybody being here today, man. Shout out to, I think we had a couple donos today as well. Appreciate everybody. Again, means a lot. We got 2 minutes left in the market. I'll be on today, guys, and probably till like 3:15, 3:30 area. Then I'm gonna hop off because I want to make a video on GME and AMC today, at least. I also kind of want to film a top stocks right now while stocks are still low. Yeah, I appreciate you too, Ben. Appreciate you too, brother. I think we had two. Yeah. So shout out to Corey for the $2 a day, and also shout out to Richard, man, for the $15 a day. Yeah, Richard, thank you so much, man, for the $5.01. I just got that notification, by the way. Yeah, Richard, thank you, man, for the 1501 all together today. So you donated 10 earlier and then 501 now. Shout out to those two guys, man, for the tips today. It means a lot. I appreciate you, both of you. AMC last minute for green, dude. I mean, hopefully AMC finishes above 1350. That'd be great. I'd take that as a win, man. It's almost 4% up on the day. I mean, you can't be mad at a green day, even though, you didn't have the day you wanted. Like, it would have been awesome, to see something a little better, but 1350 on a day of uncertainty? Hey, I'll take it, dude. Yo, let's go, chat. Closing claps. Closing claps, man, in the market right there. We're at 1353 going in aftermarket. I mean, GME finished up today a little bit, barely, but, 0.74% on the up. You had CCIV did finish down today, at -5%. They did have a big day yesterday, so I'm not going to complain about that. Plus, we had a lot of uncertainty in the market today. Right? NEO finished up 2.5%, so I'll take that as well. We had xpeng finished up 0.56%. Again, having a flattish day on a market day where it's kind of, you see how much we came up though, right? Like look at these stocks, how much we came up. You know what I mean? You can't be mad about that. On a day of very high uncertainty and a lot of sells, finishing pretty much in a where you left off yesterday is not a bad idea. It's not bad. I'll take it. Like I said earlier, man, if we have a flat market, I'll be happy with it. I'd rather have a flat market day over day than I would a very sad day. And a very day, dude. So could have been a lot worse. Could have been way worse, man. I will take those with the day, man. This is what I was talking about. Gotcha, Lamonte. Well, that's good though. He got 1 million shares. I mean, it's not a bad thing, I guess. At least he wasn't selling them. At least he brought them up. Kind of bummed I didn't get sacrificed to the gods today. Dude, where's Scott at, though, man? Scott was supposed to come sacrifice you to the lambs, man. This is all Scott's fault today. He's been in Discord by himself. You should have came in here, man. He could have sacrificed you. You sacrificed him yesterday. You have to open up my mind here. I used to like Jim Cramer, and now you're my go-to analyst guy. Yo, Joan. I mean, it's not a bad thing to listen to other people, too, honestly. But, I mean, everybody knows how to do some analysts here and there, right? I mean, this isn't a bad thing. Again, having a flattish tight day or 0.5% gain or whatever on a day where the market was very uncertain, I'll take that any day over a -5, 10, 15% day. I'll take it, dude. I'll take it, man. Oh, you got his stimulus. Got it. Just put in. I got you, Lamonte. Yeah, I seen the post in Discord. I got the notifications. They saw 5 butt kicks in my stock portfolio. AMC, CGC, tlry. Yeah, those are all. Yeah, I had some kick butts in my day too. Don't worry. Don't worry, man. I had a very kick butt. Scott, dude, sent you $1 for Discord is loyal, dude. Yo, Scott, thank you so much for the $1 on Cash App, man. Yo, there we go, dude. There we go, man. What's some other advisors, and Jason Allen was the best. Hey, thanks, man. Thank you, Richard. Super nice, man. That is super nice. I mean, I do try my best, but again, I mean, I don't think I'm the best out there, that's for sure. But I definitely put a lot of time and effort into the broadcast, into the stream, into stocks in general. So I appreciate it. I take it as a good day, honestly. Again, it's always good to take it cautious, right? Think of the best, but prepare for the worst. And I feel like that's the best way. That's about the only way you can do it, right? You don't want to go like crazy in, like a crazy madman, man, and lose a lot of money. When these things happen, but it's also a good thing just to chill it, man, and wait and see what happens. And honestly, it was good news, right? He didn't say anything bad. Like, he didn't fumble any of the questions, which I was hoping he wouldn't do. And we had some good ups, man. We had some good ups. I mean, we were at one point, man, like a lot of stocks were down like 5%. We came up. Seeing the meme stocks have the first 5 minutes, man. This is the calmest aftermarket. Yeah. Look at that. Look at the straight lines after aftermarket. Straight line. just straight, dude. Straight as can be. I mean, AMC finishing up 4% today. I'll take it. Yo, sounds good, good old boys. Sounds good. Remember, I'll have some videos up as well today, Chad. So I'll have videos up today. I'm gonna try to work my little booty off to get some videos up. Yesterday, I had a video go. Obviously, video out late yesterday because we had to go pay bills and get groceries, and I had to pay taxes. And man, we got stuck in traffic. There was a wreck. It was bad, dude. People don't know how to stop when somebody stops in front of them, so they always like to smack people, man. Oh, you like Crowd? Yeah, I have Crowd. Yeah, I bought Crowd last year. Security network. I like it, dude. I like Crowd. They've been up today pretty good. They've had a lot of press though, right? CloudStrike's had a lot of press here lately. They did have a sell-off going into the aftermarket, but still ended up, plus 6% on the day. Not a bad day for a day that was, pretty volatile in the market. I'm not loaded on Strike though. I'm not loaded, but I do have some CrowdStrike. Like I said, I bought that last year, so wish I'd have bought more. But I feel like at the price right now, 208. I kind of agree with these analysts up here. I mean, I don't know how fast we get to 235. We did get a little pullback though from where we were at before, and like back on the 10th when stocks got pulled back a little bit. And he plugs in close to $40 again. He got pulled down really far, that $35 mark. He got pulled down hard, man. It's definitely up, Still down 7% from where it was closed out yesterday. Before we seen that big tumble. Aftermarket can be such a crusher. Such a crusher. $4.7 million sell order on AMC. Where do you see that at, Kevin? Man, it's 27,000 right there. There's a 20,000 sell order coming up at 1370. Could have been that right there, honestly, going into the aftermarket. There was a volume of almost 700,000. sell stick, man. The good thing about aftermarket is it doesn't take, it's smaller volumes can move the stock. So you get a lot more, you have a lot more gains in aftermarket. 4 a.m. here in Singapore. Yo, Lee, that's crazy, dude. Yeah, I couldn't imagine, like, you know, living in Singapore and, like, because the market for you is like, you have to be up all night long pretty much. It's definitely different. Definitely a lot different. Yo, thank you guys for the likes today, by the way. If you guys haven't, make sure you guys smack the like button below. Definitely helps out a lot. Cancel my GTC 100 limit sell and my 500 sell order. It hasn't been 90 days yet. 5 days. Yeah, I don't know, Gord. I don't know. Trading in Alaska? Yo, dang, crypto. So what time's it your time in Alaska right now? You're like, what, 5 hours behind me? I think you're 5 hours. I guess it depends on where you're at in Alaska, too. I think you're like 5 hours behind, right? Or 4 hours, something like that. 4 or 5 hours, maybe 4. And if you're in Hawaii, you're really far behind. You're like, what? It's like morning in Hawaii, like 9 a.m. So it's noon. Okay. So you're in Pacific Standard Time then. I can't ever remember. Is any of Alaska in like? So they just have straight Alaska daylight time. Okay. So it's either 11 a.m. or 12. Okay, so they have two. So it's like 11:09 or 12:09, depending on where you're at in Alaska. I'm guessing because they have Alaskan time. You have Alaskan daylight time. Then you have AKST. Oh, there is no 1 hour difference at all in Alaska? Maybe I'm looking at it wrong then. Okay, so Alaska time zone applies to territory of the state of Alaska. Okay, so it's the whole dang state's the same. Got it. Why they gotta make this stuff so difficult? Why is it so darn difficult? Yo, Lee. Hey, thank you so much, man, for the 5 SGDs, man. I appreciate you, brother. Thank you, Lee. Thank you, brother. I appreciate that. It means a lot. I learned a lot about Alaska today than I had planned. Hey, I don't really learn a lot about Alaska. I do know I have some family that live up in Alaska, but I never really met them. So we've got some family that live up close to Anchorage, but I've never met them before. I do know that. That's about all I know. So Alaska is 1 time zone, yes. To confuse people. Oh, I got you. Got you. I mean, that makes sense at least. Nova Scotia's 30 minutes off in a time zone all of their own. Isn't that so weird, man? Like, you have some countries, man. Sendagese. Yeah. I've actually looked the other day. It's funny because you bought AMC earlier this morning. Thank God for the good news today. Yeah, Gary. I mean, either way, you were taking a chance, right? It's like you buy early this morning and then you're taking a chance that it goes down some. Or it goes up. It's like, it's either one you want to take, right? I like to err on the side of caution on a lot of stocks. So I was just like, well, I'm just going to lay low a little bit. Then if I get in, say, $1 or so, above the very low, it's not that big of a deal. That's kind of what I did. I got in on some stocks that were, not at the very lows they were before, but they were still low compared to where I think they should be. But I'll take it. I'll take it, man. I won't complain. I'll definitely live to fight another day and be okay about it. Bam, 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 bam. Tomorrow's like it's going to be a green day. I think it's going to be a green day tomorrow too, Steven. I don't see why it would be a bad day tomorrow. I mean, everybody's already got all the news they needed, right? We had a day today that, for the most part, was pretty straight across, right? You had a pretty straight across day today. I'm talking about compared to yesterday's close. So compared to yesterday's close to close, we had primarily a flat day, correct? Obviously, we had a down day, then an up day, but fairly, man, you had like maybe 1% pluses, 2% pluses. You had a lot of just like straight across the board though. And then aftermarket hours now is pretty flat in aftermarket hours with some downs here and there. So overall, you had a pretty straight day. Which would lead you to believe, man, tomorrow will be a better day. Yo, thank you, Richard. Thanks, man. Thanks. Yeah, there's a lot of uncertainty today, man. The reason why I was talking about yesterday in my video on AMC, I was definitely, these things right here is what I usually look forward to the most. Like, it gives me an out term, like, to what to look forward to at least the next month or so, right? The next thing I'll be looking forward to, obviously, for like a market downturn of any sorts, would be the year-over-year forecast, kind of like he was talking about today in the channel in that video on his live feed about the year-over-year inflation numbers looking bad, which could obviously spook the market a little bit, even though you should know that it's temporary, right? It's kind of fugazi, not real. It could definitely spook markets, no matter what. So that'd be the next thing. That's next month. I'm not worried about it right now. I'm not worried about it. I don't think there's no other than Friday, right? We have Friday, which is triple witching day, but that's only one day. It's only one day. We have a lot of ups and downs, but hopefully that would equal more volatility for AMC and GME in general, and you'll see spikes off that instead of downers. AMC $15 tomorrow. That'd be nice. If we can continue this today, like we had at 1362 today, we could definitely get to $15. I don't know which question you're talking about, honestly. I have to go back and look. I have to go back and listen to it again. I don't remember what the question was about regarding soon. I don't remember. I think you're talking about that lady that asked, and I don't remember the exact question she asked, so I don't remember which one she was talking about. I have to go back and I'll go back and rewatch some of it anyway. Because that's just me, man. That'll be me at like midnight tonight. Me going back and watching that interview. That's totally me, bro. I'm a studier of the studiers, man. Neo, Liato, xpeng so slow. Well, 6 months up quite a high, but lately have been slow. Well, they got stopped a little bit too, Martin. You got to remember. By the market downturn hurt them a lot. Without a market downturn, Neo would be above $70 right now. xpeng would probably be close to 60, or maybe even past 60. I think Li Auto would probably be close to 40 or more, because they all had really good news. But yeah, I remember they have explosive growth, really quick over the past 6 months to 8 months. So having a little bit of slow period here and there is not it's not the worst thing in the world. Again, I'm long term on those plays anyway, so short term I don't really care what happens with those stocks. Long term, I know I'm fine with them. Long term, I know I'm fine. I'm not really worried about those. Yeah, I agree, man. I agree, dude. If we go to Friday at 15 already, we might be able to see that 20, man. Who knows? CPNG, it's down to 43. It's down earlier more than that, right? Xpeng. I don't mind Xpeng as like a future play, honestly. I don't mind Xpeng as a future thing. I would like to get Xpeng like under $40, honestly, if you could. That'd be great. But I think under 45 is still not a bad buy-in. I mean, it started at 69, came all the way back down to 43 now. I thought, it should have started around $45 anyway. Like, the IPO should have started around there. So, I guess I could say anything below there is, should be not bad. Beam and Blink. I don't mind Beam and Blink. If you're, like Blink Charging, Beam, all these charging type companies, Any futuristic plays, I don't mind at all. Especially at like the target price they are right now. They're not like crazy. They have a lot of room to grow. If you're buying and holding those stocks for say 5 years, I think you'll be perfectly fine. I say at least probably grow those, you know, by what, you know, a good 20% a year probably or so. 10 to 20% a year probably growth wise. Maybe more depending on. I honestly don't think XL Fleet's a bad idea either at 13 bucks. You know, under $13 XL Fleet. It's not like my first pick, but under 13 bucks, you know, I don't think that's terrible either. Honestly. Do you know they had that short seller report that came out, you know, with their factual inaccuracies, which could hurt it, you know, a little bit. It did hurt it a little bit, right? It made it fall back some, but I think, you know, they already kind of took the hit from that. I think they already took their hit from that. That happened on the 8th. It is now the 17th. You know, it's over almost 10 days ago. They also, XL Fleet just opened up a technology center in Michigan as well. So I don't think that's the worst deal. I mean, it'd been better to get, you know, Fleet around that like $8, $9, $10 area, or $10 area, but 13 bucks is still not terrible on it. If you're holding it long term. Yeah, charge point. Yeah, Blink charging. Yeah, that's what I was just talking about. Blink, charge port. No, I don't mind XL Fleet for at the price point it's at. Honestly, at 13 bucks. I think you could. I definitely think it can at least double in value. The XL Fleet could for sure. November 20th at 30 bucks a share, enjoying the ride, as you say. The ride, man, the ride, Martin. It is definitely a ride. Whichever way it goes, man, it's definitely a ride. Remember, like I like to say, man, red buy, green fly. And I don't mean leave the stock, I mean just ride the stock, you know? Red buy equals a green fly, man. Pretty much my philosophy in stocks. In a more layman's terms, I like to buy red days and ride the green days. It's definitely not a bad get-in price, that's for sure. Yo, if you guys have it, make sure you guys smack the like button below. If you also haven't hit the sub button, make sure you guys hit the sub button as well. I'd appreciate it. It means a lot. Going to do my D&D on XL. Yeah, XL Fleet did have that short come out. A short, you know, seller came out and said a lot of bad things about XL Fleet in terms of like some things. Kind of like what happened with Plug, obviously. But I think they kind of already took that hit. Kind of like Plug already. I think Plug kind of took their hit as well. I still think you could probably double your money. Whether that be the next year or so. I think you can see XL Fleet above 20 bucks or so at least. Some experts say $30. I have to play a little more conservative. Yeah, dude. Sell, bro? I mean, hey, man. You got Cheech and Chong, man. Cheech and Chong, bro. I love that movie, dude. Yeah, they're like pulling out. He's like, whoa, man, where we at, bro? You're in the middle of the road, man. Smoke just billowing out of the darn car, bro. Oh man. Hey, man. That's some good movies, bro. Those be some good movies. Come on, AMC. Do something, you nerd. I mean, it's at 1385, so it's. I mean, it could definitely cross the. Could cross the $14 mark here. I mean, you gotta remember during aftermarket hours, it doesn't take much to move it. See, like 30,000 volume there, 8,000 volume there. That's the only bad thing about aftermarket too, man. Like a bunch of sells could like tank the stock against you. Aftermarket can move so much stuff. Day traders definitely heard it during the day for sure, Pants. You gotta remember, man, there's a lot more volume during the day. Some people will not buy, sell, and trade stocks after market close. Some people can't because they don't have this. They don't have the apps to do that. Obviously, if you're using something like I'm using here, like Webull, you can. But there's usually, you know, for these stocks, or these hype stocks, it's usually more buying in aftermarket and pre-market hours. Not all the time, you know, but a lot of times there are. Not all the time, but you know, a lot of times. You guys want to use it, you know, if you guys want some free stocks, you can do so there. The Webull link, sign up, put $100 and get 2 free stocks. It's doing its thing in aftermarket though. It might cross over 14 right here. Just remember though, if we get too high over here tomorrow during opening, you're going to see a lot of sell-offs too. Probably, we could definitely. I shouldn't say you're going to, but you could see some sell-offs from people that you know. Had sell orders in place, people that you know put sell orders in for market time. Just you know, be wary of that as well. Hopefully, if it does see a sell off, hopefully it isn't a lot. Kind of happens every day though. You see it all the time. The dip and then the up. See the dip and then the up, man. Okay, sure. Give us, yo, Gary. I appreciate you, man. Again, I appreciate all you guys that support the stream. You know, whether it be through donations or just being here, man, hitting the like button, whatever. It means a lot to me. So. Some days are slower than others, and that's just the way it is. It's the market. You'll learn the market, man. You'll learn to appreciate it for what it is. Definitely learn to appreciate it for what it is, at least. Dang, dude. Yo, look at this. What did they do? God, that's a rocket. $60 all the way up to 89. Up 24%. What do they get? Upscale 21%. Oh, they acquisition of Prodigy Software. They also beat their earnings as well. Dang, dude. This thing rocketed. They beat revenue, 86 million. Revenue is supposed to be 73 million. They also acquired Prodigy Software. Dang. It's a rocket ship. That thing literally jumped like $30. That's a $30 swing, chat. That is $30 in like 15 minutes. That's a big swing. I am using Webull. If you want to use Webull too, you can get 2 free stocks right now worth at $1,800. You open an account right there and put $100 in. You also get these NASDAQs right here. You buy, sell orders coming in for 3 months as well. Dude, that's nuts, bro. That is nutty. God. I got this alert, man. I got this alert, and I was like, dude, what is it? And I looked at it, I was like, oh my God. Man, imagine being on that rocket. Wish I'd have bought in. Wish I'd have bought in. Could almost, damn, dude. Could have third your money really quick right there. Oh, 25%. What is this acquisition anyway? Prodigy Software. What is Prodigy Software? Headquarters in San Francisco. Upstart to acquire Prodigy Software. Leading automotive retail software. Ooh. Oh, they do automotive retail software. Ah. Leading artificial intelligence AI leading platform. They announced that it entered an indefinite agreement to acquire Prodigy Software and a provider of cloud-based automotive retail software. That's why it's up like a rocket ship. I think it's going to the moon. Each year, approximately $1 trillion of cars are sold in the U.S., and most of them are financed. Yet purchasing a car consistently ranks one of the worst consumer experiences, less than 1% of the buyers satisfied with the current process. Dude, that is nuts, dude. (2019) total light vehicle dealership sales exceeded 1.2 trillion in National Automotive Dealer Association. That's crazy, though. That is a crazy man. Up $30. Yo, what's up, Color? How you doing, brother? What's going on, my man? Yeah, at least AMC's picking up in the aftermarket really good, though. Can AMC be like Upstart down there, please? Okay. Jake from State Farm. You Jake from State Farm? Yes, I am. Why, yes, I am. Yo, Gary, thank you so much, man, for the $20 tip on PayPal, by the way, man. I appreciate you, brother. Thank you. I just got the notification, by the way. Yo, Gary, thank you, man. I appreciate it, bro. Means a lot. Again, that makes you the top dono of the day as well. Let's go, my dude. Thank you, brother. I just now got the notification. I was like, wait a minute. My watch was like, bing. Yo, let's go, dude. Let's go. Claps. Oh, man. All of me is from the State Farm. Jake from State Farm. Yo, thank you, guys. Anybody who's donated today, man. Shout out to Gary, Richard, and shout out to Gary, Richard, Corey earlier for the $2, and Lee, man, for the $5 earlier as well. Appreciate you guys. It means a lot. What are your thoughts on NLY? The Viv is pretty alluring. You the man, bro. Yo, Gary, you the man, brother. Thank you, man. Thank you. It means a lot. Really does. Those things help me support my crazy family and and also the stream fam and keep the stream alive as well. Motivates me to continue to do this. NLY. I mean, dividend yield is, pretty crazy there for sure. Dividend yield is pretty nuts there, man. I'll give you that. In terms of like growth potential, I think the growth potential is not like a huge at $9, but you also have that dividend that kind of weighs that out too. I'm talking about like near future growth. It doesn't like it's. I mean, I guess it could definitely continue to grow, right? It definitely could, but looking at 4P levels and things like that. I mean, the 4P level is not terrible though. There's definitely some room to grow there. It's only at 8.27, so it doesn't look bad in a little while, man. You got really good dividend there, so. Seems like some of these capitals are definitely, in terms of like stocks, have been rising up here lately. It's more and more. They just got a $9.50 buy rating. So hey, I don't think that looks bad, man. It doesn't look bad at all. Mina, doesn't look bad. One day we'll all be able to be on the moon partying, dude. Hey, hopefully so. That'd be the best bet. That would definitely be the best bets. I would very much like that. Also, guys, remember we do have the Patreon stream starting up this week. If you're not a Patreon, we got 7 more spots left in Patreon. If you're in the 15 and above, by the way, for the streams or whatever. Obviously, I do have like one-on-one things in there as well. If you scroll down, there's also some one-on-one stuff. If you guys need any of those kind of things, but again, I do appreciate everybody being here, man, just supporting the stream. DCC rules just passed. Yeah, I think the day was the day they go into effect, right? Today at closing, correct? I can look it up real quick. I can't remember what day it was. I haven't looked at the rule change in a minute, so I think it went into effect today, though, correct? At closing. To tell you, regulatory file changing, CTTC. Remove the requirement for participants to submit monthly position confirmations and clarity activity on a regular basis. $50K bid at 1407. Oh, there it is, dude. Look at that, yeah. Some big old buys coming in right there, man, at 1407. Big old buy at 1407. If that right there got moved to like 14, dude, this thing might skyrocket. This thing just got moved to market order. It'd pump the order up pretty good, man. At this time of day, 40,000 at this time of day, man, it'll do a good pumping. No, DTC is not a stock. DTC is not a stock. That's a depository trust and clearing corporation. So it's a little bit different. It's the capital market. It's a capital market company. It's the thing. It's the one that does the rules and stuff like that for some of these stocks and the way everything works in the market. It's not a stock. It's the financial market infrastructure, pretty much. Layman's terms, financial market infrastructure. Yeah, what JD said. Regulatories, man. Think of it as like the infrastructure of everything. Check out that Hummer EV from GMC. Yeah, I feel that, dude. I feel it. I'd honestly regularly get like something different than a Hummer, honestly, though. Dude, it does look good, though. I'll agree, man. It does look good, though. Does look pretty nice. A lot of the new EVs look good, man. I mean, you know, yeah, some Volvo EVs are looking pretty nice as well. You got VW coming in hot and strong as well. There's a lot of good looking stuff, man, out there, honestly. What if it was? Get out of here, Mike, dude. Totally different than an Amish pole barn, dude. You and your antics. The humble tumble, man. What the heck is going on here? All right. Well, I'd hope so, man. It's a big old EV, man. Have an AMC share on me, man. Just don't give me the clap. Yo, Pants, thank you so much for the 10 euros. I appreciate it. Or euro. Thank you, Pants. I appreciate that, brother. It means a lot. It helps out with the broadcast. It keeps me going, and it keeps me motivated, and supports me and the channel. I appreciate it. I had to give you the claps, not to be confused with the clap. Why did the AMC 407 buy volume not hit? What do you mean at? Did the order? I think the order didn't go through, right? Did it not go through at 1407? Stop it. There's a lot of sell volume right here, though. I don't see a lot of buy volume right now, though. Did anybody see if the sell order went through, or somebody did it cancel? Did that order get canceled out? We've been on 1410, so maybe I didn't really pay attention. So whoever put that order must have. Yeah, it got removed. I didn't see it go through. That's what I'm saying, Bears. I literally just looked. I did not see that order go through. I think they moved it. Somebody could have put that order up just to like trick people. I don't know. That was weird. But it didn't. It definitely didn't. It definitely didn't process. You wouldn't have seen this big. You wouldn't have seen these red bars at this time of day. They didn't get processed. You've seen some sell orders already get processed a lot, right? You see like the 30,000, 44,000 right here. You know, orders altogether. But those are fighting sell orders as well. Then you had to see these bigger sell orders right here. Sell volume. I mean, whoever had that big buy order did not go through with it. Somebody canceled it. Whoever it was canceled. It doesn't mean that they're not going to go back in at a lower rate. I don't know. Maybe they had second guessed it. Video to boom, dude. Yeah, it definitely didn't go through though. Order did go through. Oh, did it go through at 1407, 29K? Maybe they had half the order then. Maybe they half that order. All I know is I didn't see a big 47,000 order go through. Okay, well, the 20, okay, that went through, but you still had this big sell order right here, right? In that same area, pretty much. In this same area, you had a lot of sells going on, so it kind of canceled that out. It canceled out the 27,000. Whoever it was might have put a partial order in then. Maybe they did a partial order at 27K instead of 40. Instead of that 40+ thousand order. On YouTube, just for you. Yo, Mina, I appreciate it. Seriously. That is super nice. And again, it helps out and means a lot to me. So, do appreciate it. Denison Mines dropped in aftermarket $1.16. Where was Denison Mines at before? I know a lot of you guys keep talking about Denison Mines. What's the ticker for that? Oh, it's DNN. I get a lot of questions about that. Seems like anyway. They're still not. I mean, I guess they're back a little bit, honestly, right? They were at $1.40 at one point. Before that, they were up like what? Before the market pullback. I seem like I got a lot of questions back here in September. I remember February, I got a lot of questions about Denison Mines. Back in February, you got a lot of questions. You can tell that too, because we went to $1.80. Then it went back to $1.40 and then fell back down again. It might come back up again, honestly. Probably come back up again. I would not doubt it. Large red candles. You have a green candle right behind. Well, wait a minute. I was gonna say you have a green candle right behind it, but it went up and then went back down. Some of these sell orders are getting processed. It doesn't take a lot, guys, to move market in after hours. It looks like a bunch of sells there, but I think the map's going a little nuts too right now. You can sell this right here as well as going in and out. I don't think that they might be doing the same on these stocks as well. Look, you see this big green candle. It could have been, yeah, it's doing the same thing on all the stocks right now. It's all going nuts. They're all going crazy, It's not that big of a stick, actually, though. 11,000 right there on the volume. More of that was obviously sell volume because it's red. Don't pay attention to the candle right here. I don't think. It's actually 1390 or 13. Wait a minute. What the heck are we at, dude? My brain's hurting right now. I'm over here like trying to like look at the heck where we're at. I think we're up here actually. I think we're at 386 or 1386, chat. We're not down here at 1350. The map's going nuts right now on all the stocks. Stock market seizures. Everybody calm down. It's an optical illusion. Don't worry. Yeah, every stock is doing it. Yeah, I literally just checked. Too. That's what I pulled up real quick. I pulled up my Thinkorswim real quick as well to look. It's doing the exact same thing. It's not just Webull. For a second, I thought Webull was wigging out. I was like, I think Webull's wigging out. And I was like, well, let me pull this up. That's what I was doing. Thinkorswim's doing the exact same thing. So it's all the market's doing it. Don't pay attention to it. The market's having some seizures right now, obviously. Little lights there. Nothing to worry about, chat. It seems like the market was like flashing right there, like going back down towards like where we ended the day at 1356. $13.56 right there. Yeah, DTCC went into effect at close. Yo, what's up, Anna? But yeah, the DTCC went into effect after close. Think GME is getting margin caught? It might, honestly. It's probably a lot of people at margin. Probably lots of margin there. Definitely could be. He said, "Let go, boys." I did a whole well, didn't do a whole video, but I did like 5 or 10 minutes in a video on it. I'm gonna pull it up real quick, but I can't even find it. Pretty much there's a loss fee they can calculate every day now instead of, and even during the day at any time, pretty much. There's it's kind of complicated, honestly. Kind of complicated. I'm trying to think like the best layman's terms, man. Best layman term. There you know, because I can go technical with it and confuse the shit out of everybody. Yeah, I was gonna say maybe just Google and read it. A layman's terms, there's a rule change. The DTC or DTCC can now calculate a loss fee, pretty much. You know, layman's terms loss fee. They can calculate this every day or even during the day of trading, and they can force a payment from a hedge firm, right? So like a hedge fund could have to pay a payment at any time now. Pretty much the DTCC is just covering their butts with all this craziness going on. It's probably like the best layman's terms to say it. I mean, I can read the rule off, you know, like obviously there's a proposed rule would allow NSCC to call for additional SLD on an intraday basis on a business day if a supplemental liquidity provider increased activity levels causes NSCC daily liquidity need to exceed NSCC's qualifying liquid resources. And NSCC determines in its sole discretion that is appropriate to require an additional intraday SLD from a supplemental liquidity provider in order to migrate those additional liquidity exposures. Under the proposed change, NSCC would have the ability to make intraday supplemental liquidity calls on any business. That's the that's the big fry your brain term. Just know that they can call now and call call in pretty much a loss fee at any time for many of these businesses from a liquidity standpoint, which isn't good for these businesses. What are we talking about, Mike? We're talking about that's the thing. I see. If I start talking about it and start talking about like, the more technical terms, it's gonna blow. It's gonna like some of you guys are gonna be like, what the F are we talking about? The reason why I was trying to think of like the best layman's term. Layman term, the NSCC can now say, hey, look, we need to have liquidity right now, man, for this. And then they have to pay a fee, obviously. The hedge funds would have to pay in at any time during the day. Pretty much. It's a lot to explain, man. The reason why I'm trying to say is, like, I feel like if I explain it to you guys, it's gonna even make your mind even more. You know what I mean? The reason why, like, I had a video on it too, right? You guys could have watched that video. This is why you watch all the videos I post, chat. Same thing with yesterday when I was talking about, the feds today. If you didn't watch that video today, you'd be like, what the F are we talking about? What the F are we talking about here, bro? Yeah, remember, I'm not a 18 or 19-year-old investor channel, so I talk about a lot more than what a lot of them talk about. I've watched some of the stuff. I get it, but yeah, AMC's price target. I'm hoping we continue this up run, man. And tomorrow we finish over $14 again. That'd be great, right? We're at $13.89 right now. That'd be great if we can get to $15 tomorrow. That'd be better because Friday we got Witching Day comes up, quadruple Witching Day. What's the day when all the options pretty much in the whole market end, and it's a lot of uncertainty in the market, for a lot of stocks. But you also have a lot of volatility in the market, and that volatility can slingshot stocks like, say, AMC or GME or other hype stocks, man, to limits they probably wouldn't have hit before that. Or it can have the opposite effect, right? You can see shrinkage in that market space as well. There's one or two ways that's going to happen. It's going to go up, stay the same probably. I don't think GME or AMC would go down due to the market volatility. I would be more prone to say it's going to go up during the market volatility than I'd say go down. It'd be good to end. It'd be good end on Friday, right? Say we end on Friday in options calls, right? If you end at $15, at option calls Friday, it'd be great. If we get to $16, that'd be better. If we go down to 20, man, you have a lot of options right here, right? Lining up. Obviously, 20 is going to be a stretch, right? 20 is going to be a stretch. I don't think 16's far from thinking that could happen. Honestly, I don't think it's way out of the question. It all just depends on how the market reacts on Friday. Like today's market, I was more concerned for stocks that weren't called AMC and GME, right? I was more concerned for tech stocks in general, which we did see a lot of bound down today. But then we see the rebound. Then we see it kind of come down a little bit again, but not down to those levels that it was before. Yo, 420 likes for the shirt. If you guys haven't hit the like button, make sure you guys smack the like button. Remember, at 250, that'd be awesome. If you haven't hit the sub button, hey, remember guys, at 10K subs, we're doing a giveaway as well, man, on AMC stocks. AMC was calls between 7 to 14. Let's go. I think, honestly, I do think that I think we have a real chance, man, on AMC to hit these call options right here, right? $20 isn't out of the question. That was my call Monday, saying we could hit 20. Still think that could happen, right? We had a couple down days here. Obviously didn't help us, but the market overall wasn't the best either the last couple days. So it's like, to have AMC finish up 4.5% or 4.15% today, up 4.5% overall, including aftermarket hours. I don't think there's anything to be sad about that, honestly. I think tomorrow we could definitely hit 15. I don't see I think today was a down day for the market, right? I think tomorrow we should see a more, you know, an incline in the market in general. And that hopefully will catapult us upwards to Friday. See where it goes from there. Like the new rule, more people will throw money tomorrow. I think that too, honestly. I think there could definitely be some good throw-ins and see some good chunks. Coming in late was the news from the Fed. Good news. Yes, it was actually. It wasn't bad news, you know. If you haven't seen the, you didn't see the charts, it wasn't bad. It wasn't like something that was like extraordinary good, right? You know, we had more in the dot chart. We had more dots, which again, a lot of people, you know, some people are probably like, "What the hell is a dot chart?" The dot chart, you know, wasn't as bad as some people thought it might be. You know, we did have some more dots. We had more dots in the 2022 area and the 2023 area. But more analysts thought that, or more economic people thought that, you know, the Feds thought that we should raise rates after 2023, going into 2024 and onward. That's good news, right? You know, the GDP was quote unquote not terrible. It's 6.5. I thought anything over 6 wasn't like really good. 6.5 is not terrible. It's not gonna like move a market downwards like crazy. Trying to think, man. What else was in there? There's a lot in there. There's a lot. Let's go over that dot chart. Jim Cramer eats toenails? Maybe, honestly. He might. He's old, man. You gotta leave Cramer alone, man. He's still stuck in the old age. He's still stuck in the old age a little bit. You gotta overlook him a little bit. It's only 7,400 shares. AMC at $6.40. That's pretty good, yeah, Gary. I like that. That's a good buying price, man. It's a good buying price right there. Honestly. I'm sure you're looking at a pretty good little chinga changa, man. You've doubled the your stock buying, so can't be mad there. Can't be mad there, man. But I think overall tomorrow we should see some good days. Again, Kramer's still stuck in the old days, so it's like, you know, it's a little bit different. Just how it is, man. OPKO. I mean, I think a lot of stocks have a good chance of either doubling themselves or whatever going forward. Let me find this dot chart real quick. I'll show you what I mean by dot chart. Let's see. FMO statement, issue statement right here. That's a statement. I don't care about the statement. Here's what I mean by dot charts, by the way. If you guys haven't seen it today, this is what we were talking about earlier as well. Bring up the dot chart right here. Right here. This might be different, honestly. I might have to make this bigger. Can I make this? You know what? Honestly, I'm gonna redo this one. Now I can just add another thing to it. Honestly, let's go to add window capture. I don't care about window captures. There it is. We made it. It's gonna be way ahead of me though, right here. This is what I'm talking about by dot charts. This is what the Fed released today. So obviously, last time the dot charts. These are the guys from the Fed, right? These are the economists that think when we should raise interest rates. The sooner they raise interest rates, could have a bad effect on the market, right? So we have a pullback in the market. Used to like last time we got this chart in last year, there was one dot on 2022. This time we had 4 dots, right? So not good news there. You know, not good news there. So four people in the Feds thought we should raise rates in 2022. I don't think that should happen because that would kill the market, right? The market would be like a rocket shit down. 2023, there used to be 5 here. Now there's 7. 7 analysts think we should, you know, raise rates in 2023. The majority, though, still think we should only raise rates in 2024 and long term, that's what I think we should do as well. Unless, you know, something crazy happens with inflation and some crazy stuff, you have to hedge against that. That would hurt the market as well. So having these dots on the dot charts right here, man, having the dots mostly be primarily over in the long run is good. Obviously, them adding, you know, 2 more here to add to 7 on 2023. Not great news, but it's not bad. It could have been, to me, I was looking at, if this had 9 dots, would have been bad. 9 dots was my pick before the thing went live today. We're talking about it. So 9 dots right here would have been bad. You know, I think 5 or more dots here would have been 6 dots here would have been bad though. That would have hurt. That market would have been mad about that one. Then you got your GDP. I think the GDP being over 6.5 is not the best in terms of like economists and these people, these bigger suits. I think they're going to raise rates early. Over 6 is not good. 6.5 is not terrible. I thought my kind of cutoff was like 5.8. It's not very high above that, right? Very not high above that. Under 4% in unemployment rate would have been bad as well. So that's the reason why we didn't see the market pull back as much as it could have. Again, you would think lower unemployment rates good. It's not good when it comes to these economists right now. When it comes to the big suits. Suits see unemployment rate under 4. They see interest rates going up sooner. There goes them pulling out. And that pull out could happen at AMC or GME or any of those, right? That could be Vanguard funds. You know, a lot of funds getting pulled out some. Obviously the inflation numbers being 2.4 is not terrible. If we would have seen inflation numbers say at 3.0 plus, that'd have been bad as well. That'd have been bad. But you know, 4.5 from the 5.0 they estimated, not bad. Under 4 would have been not so good though. I think over 6 is not the greatest, but it could have been worse. Some people said there's going to be 8. This would have been 8 here. That'd have been, yeah, that wouldn't have been good at all. I was hoping under 6, but 6.5 I won't hate it. I won't hate that at all. I'll take it, dude. I'll take it. Whatever. And then obviously you got your unemployment rates plus your change in real GDPs, which we just went over again pretty much in the last chart right here. But I did want to bring that up. That way you guys get what I'm talking about when it comes to plot charts, you know, things like that. AMC CEO purchased what $1 million or something like that worth. It was quite a bit. AMC just took a Red Bull, brother. Snap it to a Slim Jim. Hey, brother. How you doing, brother? I hope everybody's having a great day today. If you guys have it, make sure you guys smack the like button below. It'd be awesome to get to 300 likes real quick. Shout out to anybody who's hit the dono button today through, whether it be PayPal or Cash App or even on here. I appreciate it. It means a lot. Again, it keeps me going. It keeps it's one way I'm able to support the channel and continue. I appreciate it. Anybody hits been here, man, hanging out, hit the sub button, hit the like button, or just been hanging. I appreciate it as well. It means a lot. Yo, Mina, thank you so much for the $5, by the way, Mina. I appreciate it, by the way. I don't remember if I said thanks. I think I remember saying thanks, but if I didn't, I appreciate it. I do appreciate it. Also, remember, guys, we do have 7 spots left in our Patreon. If you're in the $15 and above group, we do have some streams coming up as well this week. So, yeah. Although stock is making me want to do 100 more push-ups. I'm getting pulled up, dude. I mean, at the end of the day, it wasn't anything bad today from the feds, right? There's no bad news from the feds today. It was all pretty positive. I mean, it could have been way more positive, right? But it was still good news, and I'll take it. Because it could have been a lot worse, man. Could have been a lot worse. Could have been a lot worse. That's the reason why I was actually kind of scared. Honestly, I was a little scared a little bit. I was like, come on, man. Can we just get some good news here? For the love of God. That's all I want, man. A little good news. And we got it. What do you think will happen to malls? Are they going to keep on? I don't think malls are going to die out. I think as the economy opens back up, I think you'll see some malls prosper. I mean, there's always a possibility that some malls will die out, though. And I can't really see the future, right? But as a possibility, I wouldn't rule malls out though. I think malls are there for certain chains. Like GameStop. I feel like GameStop would do good in a mall, right? Compared to a GameStop paying tons of money for a standalone store. I feel like GameStop would do a lot better in a mall setting, right? In an online setting, online settings and mall settings, cheaper. It's cheaper overhead, cheaper lots of things. So I do think I do think there's going to be a need for malls and a need for certain businesses in malls. I do think some malls are just gonna literally you'll see some malls disappear for sure. But I don't think you'll see all malls like just die out or something. No. I do think some malls will disappear though, but I think there's some really good malls out there that will stand the time. I mean, I'm just happy, chat. I'm just happy that JPal talked to us today like we're a bunch of little small children, and was like, "Hey, look, we're gonna love you. We're gonna pick you up when you cry." Market. He's like, "We're gonna pick you up, and I'm gonna hold you tight. And if you get a boo-boo, I'm gonna put a Band-Aid on your boo-boo." Because last time, JPal came out and was talking all like crazy, and he didn't say anything bad last time either. He was just talking like more non-layman's terms. And the market tanked, right? We had a market tank. Remember that when he talked? Like the market went down like 10%. And he said nothing bad though. It was just like he wasn't talking in layman's terms. This time he came out and was like, "Hey, we love you guys. But we're gonna fix you up. We're gonna fix your boo-boos. If you fall, we're gonna love you." And the market's like, "Yay! Yay!" You know what I mean? That was pretty much the market today. Everybody rejoicing that he was just come out and talk to us like we're a bunch of kindergarten kids. $57 a day and close at 60. Man, it's not bad. It went up $3. Cash to settle webull is a little slow on this. If you don't have wire transfers, yes. And if it's your first time transferring money onto it, yes, Richard. If it's your first time transferring an ACH transfer to webull, yeah, it takes a minute. Usually like 3 to 4 days. Tesla after hours, where's it at right now? I mean, kind of a straight across. Kind of like the same thing as Neo. Like if you look at Neo right now too, right? Neo probably looks about the exact same. Yeah, look, see, you almost have a straight across effect, even on Neo. Probably, maybe even, I don't know. XPeng sometimes is not the same. Yeah, pretty much almost the same in the XPeng. XPeng has a little bit less volume in aftermarket hours, so you see a little more movement on buys. But if they had as much volume in aftermarket hours, it would probably be almost straight across as well. Probably the same thing. CCIV might be different because they're not really. I mean, it's kind of the same too, honestly. Yeah, I feel like EV market right now is just, it's like chugging, man. It's going on, baby. They usually follow Tesla a lot though. Tesla's like the guy in front, man. It's like the caboose, and everybody just follows it. I didn't block you for bragging about chocolates. I like your chocolates, Melody. I want some chocolates. I want some chocolates. All you do, Richard, if you want to wire transfer, man, honestly, if you guys want to get your money simultaneously, pretty much same day, pick your phone up, call your bank, see if they'll give you a limit on free wire transfers. That's what I did. So I get free wire transfers now, and so right now I get pretty much almost unlimited wire. I think it's not really unlimited. I think it's like 10 wire transfers right now. If you call your bank, you might be able to get free wire transfers, at least 5 or 6, or maybe even a couple at least, right? And that right there's instant, right? Instant money in your account, pretty much, with wire transfers. If you're ACH transferring, it might take 2 to 3, maybe 4 days on your first transfer. Then after that, you usually get like 80% of your money in straight, buying power right away. But you can honestly call your bank, and you can get it. A lot of times you can get wire transfers for free, at least a few of them. Especially with the pandemic going on. Do you think ARK will buy up more PL? I mean, maybe, I don't know. I think where's PLTR right now? But Palantir's under, Palantir is pretty much in a really good striking zone though. Palantir under $25 is a great price. Around $25 isn't bad either, honestly. I mean, I'm sure they'll buy more of it, just like they buy a lot of like ACIC and others, like all these undervalued price points right now that are growing in the future. Like, they're usually buying stuff that's going to at least sometimes 5x themselves in the next few years, right? That's what they're looking to do. I hear you're the guy buying the dip. Yes, you heard it first, man. Like I said earlier, chat, you got to do red buy. So red is buy, green is fly, man. Green is fly. Why was I blocked like Mel? You wasn't blocked. Get out of here, Scott. You weren't blocked. They're diabetic friendly ones, Melody. I'll take some. Get out of here. Man. Do you think ARK is buying more? They just bought some the other day. What's the price point right now? It honestly depends on price points, right? I feel like, anyway. If she sees price points she likes, she's going to strike it. People were freaking out yesterday because did you see yesterday ARK sold 5? They sold 5 shares of Apple. 5, chat. 5. They sold 5 shares, man. The only bad thing about like Vuzi, man, is that like aftermarket hours buy is so weird, man. Look at this. 400, 300, 15, 3. I would not buy this stock in aftermarket hours. That's just me, though. They might have bought some more this morning, though, right? They could have bought more this morning at 17, 18 bucks. Honestly. We are all Chad. Now, I'm saying chats, but I'm just not putting a big emphasis on the T there, so you're probably hearing chat. Or Chad. You weren't emotionally blocked. Brandon's the one that said he was going to sacrifice you. And I said we should sacrifice Brandon today, Scott. I was taking up for you. I was taking up for you, bro. When should I sell AMC 319 calls? Up $426, 240%. I mean, that would be a call on you, Hit Zone. That would be a call on you, man. You could do that whenever you wanted, right? I'm not remember, guys, I am literally wearing a Cheech and Chong shirt. Okay, a green Cheech and Chong shirt at that. Up in smoke. You don't want to take financial advice from a nerd like me, Chad. I've only been in real estate since I was 17, and I've also been in the stock market since I was 24, and I'm 32 almost now. You don't want to take advice from a nerd on the internet who spends most of his day, either playing with his kids and having fun with my family, or doing lots of research on stocks and other parts of the market. You don't want to take research from me. Make sure you guys are doing your own research. I give you guys lots of facts, but I also want you guys to do your own research as well, right? I want you guys to do your own research too. I don't want you guys taking all your information from me or any other YouTuber. Obviously, you can get some information that way, but I want you guys to do your own stuff as well. Do your own research a little bit. But again, if you like that price point you're at, don't ever be afraid to take it. It's, your call ends on 319 anyway. You can do that whenever you wanted. I'm definitely a stock nerd, though. It's true. Is VW a good buy, man? Dude, people are going nuts about VW, man, but I mean, it might be a good buy, right? Like, obviously, you're betting on them doing very well, right? On VW, you're betting on them doing very well. I think they will do well. But for me, honestly, I would rather buy Tesla, or Neo, or XPeng, or even Li Auto at that point. I don't know, man. I don't mind VW. I don't mind them. To me, I feel like there's better buys at the price point that VW's at right now. I think VW right now has kind of got blown out a little bit the last few days, man, off the whole battery talk. But at the end of the day, their 2030 outlooks, man. VW's 2030 outlooks are 1/5 of the output that somebody like Tesla's going to be doing in batteries. I don't know. To me, I feel like there's better buys. But again, I mean, you make your own choices, right? Yeah, we subscribed. Yo, thanks, Hit Zone. I appreciate it, man. I appreciate it. I think there's better buys, honestly. I think at the price point it's at right now, I feel like it's overblown a little bit. People were going nuts about it because they said they're going to have some battery outputs on EVs. I think people were just trying to, I don't know. I think people were going a little nuts, but that's just me. I love bankrupt. Hey, I don't think they're going to go bankrupt. I feel like the price point right now is just a little overvalued. That's all. That's all I'm saying. Like the MF stream, man. Hey Jason, I don't know if you're into weed stocks, but can I get your TA on SSPK? They have a tlry executive and a huge Weed Maps merger. I do like weed stocks. Yes, I do like them. Honestly, I mean, I have a Cheech and Chong shirt on. What do you expect of me? But I do like weed stocks. I do have some weed stocks myself. I don't have SSPK, but I can look at it for sure. Bring it up over here. SSPK. I can bring it up real quick. Okay, Silver Spike acquisition. Which acquisition is this anyway? I don't really remember. I've seen the stock. I've seen the stock. But I don't remember which acquisition this is. Did you say it in your, maybe you said it in the message. I'm just like overlooking it. I remember the Tilray executive, which is good, right? Because I like Tilray as a stock. But I don't remember which company it is. Somebody in the chat probably knows it more than I would. There's so many mergers. I guess I can look up the news real quick and find it. Cannabis. Oh, it's Weed Maps. You just said it too in your message. I literally looked right over. Weed Maps. Let's see. What is Weed Maps? What's the merger deal at? I guess they could tell me. I guess they'll tell me the news too, right? News section. $1.5 billion deal. Did they have a? They had a $1.5 billion deal. Did they have? Let's see. Where's their pipe at? Was that everything all together right there? Yeah, I like Weed Maps. I wish I had their, because obviously if you go on like Webull, you go to financials, none of that stuff plugged in yet, right? Because it's just the acquisition firm. Weed Maps. What you got, Weed Maps? Financials. Cannabis Weed Maps aims for 175% revenue growth. Aiming for it. Okay, investors relations. Here we go. I like investor relations. Investor relations, the leading market. Yada 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 yada. Announcement, press release, Business Wire, December. Tesla's a better stock, but I personally think VW is undervalued and will own some of the both stocks. Yeah, I don't mind VW. I just think right now VW is at a it's been shot up so much that I wouldn't doubt it if we've seen like a little bit of a pullback too at some point. I feel like it's just been hyped up a lot, right? It's like people went nuts because I just don't get why it got hyped up so fast on VW when they're doing 1/5 of the output of like Tesla. They're gonna be doing in 2020 or 2030, right? They're gonna be doing under. Like it was like 1/4 of the output of say something like Neo as well. It's like I just feel like there's better outputs compared to prices out there. Like at that price point, I would rather buy Neo at that price point, right? That could be me though too. That could be me, man. You know me. I'd also rather buy XPeng at the price point as well. Not that I don't like VWs. I actually do like VW. I like their concept of their VW bus too. It looks great. Yeah, I don't think Weed Maps looks that bad. I mean, their financials aren't terrible either. They're saying they want to. They're saying so you can only take Weed Maps. Well, they say these things, right? They aim for 175% revenue growth versus their higher or via the higher ad prices, right? So they're looking for that. That doesn't mean you're taking their word for it on that. So I like to look at just like what their numbers are now, what they have been at, and what they're going to be going. So obviously in 2015. 2015 they had 43 billion. 2016 61 billion. Not billion but million. You had 2017 90 million. 2018 you had 101 mil. 2019 you had 144 million. 2020 you had 160 million. 2021 there's outlook is saying 205 million. If that's right, that's a pretty good increase, right? 2022 they're saying their revenue on this is Weed Maps, by the way. They're saying 300 million on 2022 and then 440 million in 2023. And those right there are based on their new ad splits, right? The better ad prices they're having. So if that is right, obviously you're taking their word for it, right? They're taking their word for it. This is their outlook revenues. If that is right, which you obviously want to take those with a little bit of grain of salt, because sometimes they like to splash up themselves a little bit. But even if you take those away, say 2023 is 400 million. Let's say 2022 it's 375 million or 360 million, or 260 million, and then say 2001 to this year maybe it's 190 million. That would still be really good growth rates, right? You would be, instead of 47% growth, you'd be like 40% growth. Still very good. Definitely think it's probably a good buy-in, man. Honestly. Yo, sorry for the long-winded answer, but I have to have some numbers, man, to look at on a. I don't know their numbers really that well, so sorry for the long answer, man. But appreciate the $5, brother. I just wanted to look at that. That way I knew I was looking at something good. Numbers, I just go off pure sentiment of Cali. I feel you on that, man, but it's good to look at numbers, right? Numbers will affirm your sentiment. And having numbers, man, will make you obviously not be a paper-handed Andy and sell in the red. It also make you buy lower, right? I like having numbers, honestly. Like, I'm a numbers person, right? So I like looking at other people in that industry. I like seeing where they're at, where they're selling at, what their market caps are at, revenue going forward, EPS is going forward, year-over-year growth, their margins. I like looking at all these things. Because that right there's, I want to be an informed buyer on a stock. I don't want to just look at it and be like, okay, I like that stock. I want to be sure about it. That way, when it does dip, I'll buy dips. That way, it does dip, I buy the dip. So when you ask me questions, sometimes I don't have a lot of stuff on that. I'm gonna have to research it for a second. And again, that's without me doing a deep dive, right? Like if I'm deep diving it, we're gonna be here for about 2 hours. I'm telling you right now. We'll be here at 6 o'clock. Me deep diving this company if we do that. So I don't want to do that, but I'll do a fast dive and just the flat top numbers. That's without me looking at other industry, people in the industry, looking at everything in general. I like doing deep dives. So, but I won't get into that. Nobody wants me to be around a deep dive. So we went up $5 to over $80 in 10 minutes. That's pretty good. I mean, look at this, man. Like, look at US right here. Look at Upstart Opel Holdings right here, man. It went from $60, chat, $60 in the market, going into aftermarket shop, $30 to $89 and like $89 right now, almost $90. That's a $30 increase, man. Dude, that's a rocket. Look at that rocket. Zoom. If this had been market hours, that'd have been shut down really quick a couple times. But aftermarket hours, that doesn't happen, right? That was a rocket ship right there. That's nuts. Yo, AMC, if you want to do this like anytime, I'm here for you, AMC. We can talk about it. That's what I'm waiting for, baby. What do I think AMC is going to be Friday? I'm hoping AMC is going to be pushing over 15 bucks on Friday. Obviously, tomorrow will be a big tell on that. Hopefully, tomorrow we see 15 bucks already. And if that happens, we can definitely see, 17, 18 bucks on Friday. But remember, obviously, witching day, man, could equal, heavy volatility, which could be lots of ups and downs on AMC and any other stock. Could be a lot of craziness. Could be a lot of craziness right there. Yo, nice hit zone, nice. That is pretty awesome, man. Yo, thank you guys for everybody being here today. And anybody who smacked the like button below, anybody who's became a sub today, any of those things help out tremendously. I appreciate it. Those are free things. Anybody who's donated today to the channel as well, we had a few donations today. I appreciate it as well. It helps me support my crazy family, my 3 kids, and also the stream fam, you guys, and keeping streams going. So I appreciate it. Again, sorry this morning, guys, but this morning I had a lot of stuff to do. I'm hoping one day, man, we can get, obviously YouTube be full time, and I'll, have everything else on the back burner a little bit, and that'll be the back burner stuff a little bit. I'm hoping to get there eventually. It'd be awesome. Yeah, you on trades, Senior? I mean, I'm always down to get on people's stuff for sure, man. But I'm not about a piggyback though. You know what I mean? You guys know, man. I mean, I'm 32, refreshing, so I'm old. I got 3 kids, man. Old. I'm at that point in life where I'm just like, I'm at the point in life, man. I want to help other people, right? Again, I've been in real estate and in the market for a long time now, right? I got to the point where I just want to help other people. I'm obviously not a financial advisor, but I would love to help other people do, what they want to do. Whether that be, helping them, figure out the best way to invest their money, what the best stocks it is, whether that be real estate or whatever they want to invest their money in, business, their own business or whatever. It'd be awesome to do, honestly. Because that means I'm old and I'm not, LOL. Yeah, I'm a diabetic though too, Anna. So like diabetes, almost 32 years old. I'm pretty much like 42 at this point. Pretty much 42. So I'm getting up there. Pretty much. We going. We zooming. Want to get real estate, but I'm not sure which locations have the most money. Like I'm a college student, housing, stuff like that. Honestly, if you get into real estate, like I feel like if your net worth is under like say 500,000, honestly, man, sometimes just taking, you know, if you can, and you don't already own a house, man, take you like 5 or 10% and put it down on a house or something. That'd be your fastest way. Obviously, I knew some people that start in the market first, and then they take that money and use that as a down payment. There's lots of stuff you can do within investing money. I honestly think it depends on like what your net worth and how much money you got. Yada 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 yada. It goes on and on and on. Just with real estate in general, you can leverage a lot with real estate, right? You can leverage a lot with it. I'm not saying you can't leverage a lot if you have a lot of stocks either, but it's good to have some diversity as well. So 50K into a down payment. If you have 50K, man, you can do a lot with that down payment. Probably depends on where you're at in the world too, or what state you're in, right? Like obviously, say if you're in Idaho or if you're in like something like that, man, 50K is gonna do you a lot better than it would say here in like downtown Nashville, right? Or like if you're in like LA or like some of these bigger cities, or if you're in like rural like Tennessee, right? 50K there is gonna do all you do some pretty good, man. I'm only as old as my last boyfriend. That's the way to look at it, Melody. I like it. Melody, you're like a hustler, and I love it. No, I do. I appreciate everybody, man. I know I'm not old, but sometimes I feel like it. Put a mortgage if you can, in my opinion. Obviously PSX, man, but a lot of people can't do that. So if you can take like if you can take 5 to 10% down. And not get into like obviously don't get into a crazy, if you have a bad credit, obviously fix your credit first too, right? You don't want to go into a mortgage with a bad credit either. Then you're going to get, RIP'd. There's obviously lots of things here, man, but if somebody's been in the real estate market, I know what I'm talking about. Leverage, man, leverage. Putting it down in church. Oh, you're in Church Street? Yo, let's go, Judd. Let's go, man. Yo, you're not super far away, man. Not super far away. I'm over, kind of close to the Hermitage. The Hermitage, man. I think Disney is good, but I love Disney. You gotta remember, Disney right now, we'll pull up Disney real quick. You guys know me, I'm a pretty heavy Disney buyer. Disney right now, man, they're growing, right? You have it's kind of like Netflix, right? In its early years. It's growing immensely in terms of like subscribers. And you also haven't even factored in, they haven't even opened up their parks all the way yet, right? So you're not even getting any of that park money in yet. Disney long term, I think, is really good. All this up we've had so far in Disney in terms of like recovery, for the most part back here, if you go back, when Disney was crazy back here, a lot of this right here is just a lot of their Disney service, right? I still think you have a lot of service in terms of like they haven't even opened up the parks all the way yet. I like Disney. Again, you guys know me, man. I got kids too, so it's like almost like I have to buy. But I do like Disney. I don't think obviously some of this is obviously factored in some of the reopenings, but I still think there's lots of money to be made there. Disney's growing. You got Disney Plus, which is growing fast. The more that grows, the more money you're going to see. Disney grow. I like Disney. But I did also buy in Disney, back when you could buy it at like $70, $80 too, right? So I am up, quite a bit on Disney. But I'm going to hold Disney long term because I think there's a lot of, growth potential in Disney. Again, not financial advice. Not financial advice. Just a nerd who loves stonks. Palantir is up to 25.32. Still around that $25 mark. Still not bad pricing. Palantir. Money on TK, any input? You doubled your money, Scott? That's pretty good, man. I mean, if you wanted to, you could always just take your initial investment off the table if that's what you're asking. I don't know what's TCAT. I haven't even looked at it. TCAT art. 22. I mean, it's went up a lot today. Yeah, that's pretty good, man, right there. Been on the up and up, bro. Think of good news today or something? NFT tied. Oh, okay. So it's NFT craze right now. Know what I'm getting from this? It stored a lot. That's some pretty good gains right there, man. You can always take some initial investment off, then ride some of it out. Did you really, Melody? I mean, that happens sometimes. I mean, you had a gain at least there, Melody, so you can't be mad. Don't be mad, you know? Don't be too mad about it. At least you had profits. Opponent, which one? FRX? Yes, dude. Yes. FRX, man. I have FRX. Who have FRX? I like FRX a lot. You have, it's pretty much, you have Beachbody, and you also have MYX or MXY, wherever it is, the people that are making Pelotons. Right here. It's at a really good low discount right now, under 11 bucks. Well, right now it's like 11.07, pretty much. What is that? It says after hours 11.07. 11.07 after hours. Not bad, not bad. I think that'll go back up though. I do like FRX though. Yeah, at one point it's up to 18 bucks before the market pullback. But as a cheaper alternative to Peloton plus Beachbody, I'll take it, man. I'll take it. Yuck. What's going on here? Everything's freaking out, man. It's freaking out. Which company is it, by the way? FRXBU. Which company is that one? Peloton, in my opinion. Well, you got MXY that's making Pelotons for a lot cheaper price though, and they have Beachbody. Do I have any NIOS? You talking about Neo? Or, I don't know. Which one's that one? I don't know. NIOS? Are you talking about Neo? Niato, dude? Let's see. FRA. Web yada yada. See, Sugan Alpha, yada yada yada. Wait, what are you? I'm so confused, Ponin. I'm so confused. You got me so confused, Ponin. FRX is the Disney guy. Or Walt Disney executives. Solely based on celebrity involvement. Never invest and based on celebrity involvement, chat. They said it there first. AMC to the moon. Yeah, I agree with that, dude. Honestly, I do agree with that statement. If you guys have it, make sure you guys hit the sub button. It means a lot, chat. If you guys haven't hit the like button as well, I would definitely appreciate it. Let's see. I'm bringing this up for now. Whatever. Whatever. You got it, dude. All right, guys. I think it's gonna be it for me for now because I still need to film a video as well, man. Check SNDL report will boom in your opinion. Maybe, yeah. I mean, SNDL right now is at where? SNDL is at $1.50 right now, so I mean, it definitely could, man. Definitely could. It could definitely raise some hype around it. To set up a new SPAC that he will be heavily driving along with some other big name. The new SPAC is under... Okay, I got you. I have to hear more about it first before I invested in it, right? You know what I'm saying, Ponin? For now, I'm gonna stick with definitely FRX, but I don't know about the other ones, man. Good as average, man. I'll take it. But yeah, I'm going to, if you guys haven't joined our Patreon, we got 7 spots opened up on Patreon left before that's full. Obviously the 15 and over right there. We have streams coming up, especially we have the first one this weekend as well. And yeah, chat, if you guys want to get, let's see, if you guys want to get 2 free stocks with Webull and buy, sell, and trade stocks, you know, 4 hours before, 4 hours after market. Just jumped after hours, dude. Oh, I got you. You're talking about the increase right there. They went up what? I don't know what it is. 5% in after hours. Yeah, I know what you're saying with Sundial. Yeah, we'll see if it goes up too high though. I think Sundial's a good buying if you can get it like, you know, $1.30 and then swing it to like $1.70 or $1.80. Yeah, make sure you guys hit the follow button below, or aka the sub button. I keep saying follow button. Make sure you guys hit the sub button. I appreciate everybody being here today. If you guys haven't, join our Discord. Discord's free to join, chat. Free to join, man. Make sure you guys join our Discords. What's lower right corner? That is Upstart. That's Upstart right here. It's up a lot. Upstart went up $30 today. They had really good earnings come out, and also they also merged with another company. They bought another company called Prodigy Software. So Prodigy Software. They bought that, which is a AI system. Reason why you see them up so much right now. But yeah, chat, I have a video up later, man. Hold up, Jason, you going off? The party just started. What do you mean, Ghost? It's late. I gotta do a video. I still got videos, man. Victory cigar, dude. What are you doing? I gotta film video. I got kids, man. I got a life. I got lives. I'm sorry. I'll be on early tomorrow though, Jay. I'll be on early tomorrow though. If you guys want to join our Discord, right there's Discord, by the way. Also, remember, guys, Patreon, 7 spots open left. What? I can't get off, Ghost. Bro. What do you mean? But I love you guys. I'll see you guys tomorrow, man, on the video. Obviously, I have videos out later today. So be on the watch out for those. I love you guys. I love you. Better be on at 4 a.m. I'm not getting on at 4 a.m. But I'll be on about probably around like 30 minutes before market. So I'll be on early tomorrow. Bye. 4 a.m. Good Lord, bro. You guys are crazy. Crazy. I don't go to sleep till like 10 a.m. I don't go to sleep like what? Like 2 a.m. half the time. All right. Peace out, guys. Bye.